positive for growth, but it's also the third rail for another party. I don't know. I think that's what. Look, isn't the takeaway that everything's up in the air? Isn't that it? But the media is bought into a moderate story, and maybe it's true.
I was just thinking it's the most we've talked politics in a long time.
And I'm very uncomfortable with it. I'm just very uncomfortable. The capital gains is our bailiwick. What do I know about politics? I go to MS opinion.
Still to come this morning, the president is reportedly planning to block the Nippon Steel U.S. Steel deal. We'll talk about that. A big op-ed in the Journal today about what it means for Cleveland-Cliffs and a bunch of others. There's the market, pre-market, as Dow futures go green. More Squawk on the Street in a minute.
All right. Good morning.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Schwab.
Have a choice in how you invest with Schwab.
Stocks are mixed this morning in futures, a little up, a little down after ADP private payrolls come in below expectations, but so do jobless claims, which of course is a good thing. So we've got some mixed messaging from this morning's jobs data ahead of tomorrow's big employment report, and a 50% chance right now, roughly, of a 50 basis point cut in September as markets a little bit on edge. Joining us, Alexis Brown Roberts is COO and portfolio manager at Alexis Investment Partners. Alexis, so what's top of your guys' mind going into tomorrow? Is there any obvious play in the market here when it seems like we are a little on edge?
Hey, Oliver, thanks so much for having me on. Yeah, it was a really interesting segment that you had just recently, talking about all of the economic data that's been coming out this week. And I think the really big story there is that although things are coming in lower than expectations, they are coming in stronger than the prior period. So what does that paint the picture of? Slower growth. And really what does well in a slower growth environment, not a recessionary environment, so more of that soft landing scenario that we really see as our base case scenario heading forward, is going to be quality names and growth names. So what we really added to in last month's pullback was actually back into adding into large cap US growth. So we did that through the ETF VUG. Currently, we also like dividend growers. Again, that's just showing quality. And really the reason why we like growth names and quality names is in an environment of slower growth, people are going to be looking for growth through growth names, as well as if we're heading towards a scenario where maybe we're not going to have quite as easy money flowing in as we maybe had thought before. You're going to want to have that advantage of already having strong cash flow, and that tends to be shown through a dividend growers, where they have that history not only of giving out dividends, but growing it over time.
Looking at VIG, one of the funds that you guys have been buying for your portfolio, the Dividend Appreciation Fund, doing pretty well. You mentioned VUG, more of the kind of pure growth side. Catches a lot of that stuff is big tech and AI related. Do you still have faith in that trade, or is that deflating after NVIDIA earnings?
We still do. I mean, at the end of the day, NVIDIA is a great company. It is wild to see that they said that there was no subpoena, and that would be very interesting to see how that plays out.
Good morning. All right, Tesla's a bit higher this morning. Kind of kicking myself for not buying more or selling more put credits. I saw a number of posts about puts being sold, calls being bought. So Tesla's bullish. Watch Tesla today, provided it doesn't take off too much. I wouldn't be buying right at the open. I'd be looking for a little dip first, only because I want to enter a new position. I don't want to chase. We'll see how it opens up. Hope everyone had a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We've got about 11 minutes to go for the opening bell. It's Thursday, the 5th of September. ADP numbers were out this morning. Initial jobless claims actual was 227,000. Forecast was for 230,000. Previous was 231,000. So a little bit under what the previous number came in as well as the forecast. But still, initial jobless claims were at 227,000. If you look at the chart of adjusted initial claims on a monthly, weekly time frame, it's basically sideways for the past 18 months or so. It's been between 200,000 and 250,000, pretty much sideways. And well, it is sideways, not pretty much. It's sideways. So what does that tell me? It tells me that jobless claims really don't tell me much. I see Russell echoing that thought in the trading room as well. Okay, we got ISM. Got ISM at 10 o'clock. We got services PMI at 9:45, just after the opening bell. Let's see if we have any talking heads today. No. Okay, so no talking heads. Let's take a look. Let's take a look at the. Let's take a look at the Japanese yen, Australian dollar pair. On the screen currently is the IWM. Iron Condor that we have on. Looking for prices to stay between there, between those levels. Okay, so Japanese yen. We want this to be lower. Okay, so we did bounce, headed back to the scene of the crime. So if this rises any more, that could spell trouble. We have the Nikkei off. It was above the 50-day, got rejected at the 50-day and dropped pretty dramatically. The initial drop back in the second week of July was due to the Bank of Japan raising rates. That sent the Australian dollar, Japanese yen pair soaring, and the markets, of course, pulled back. The 10-year yield, U.S. 10-year yield, popped, and these combination components drove the markets a bit lower. Now we're seeing this pick up again during the month of September. I show you these charts occasionally in September, looking to previous periods in August and September to give us an idea of what we might expect. All right, so in 2015-16, that's when we saw an initial drop of 11.5% in August. We bounced back to the 50-day, never got back to that level or the 200-day, and revisited the lows. That's what it looks like right now. Additional 2011, we had the lows got taken out, so we have to be mindful of that. How do we prepare for that? How do we prepare for that, Benny? If we are anticipating that we could see more weakness, how do we prepare for that? Well, for me, I think the easiest thing to do is to sell upside calls. Okay, so sell overhead calls for premium. Okay, 10 deltas are good. I mean, you could put a little bit more risk on 15, 17, 18 deltas, but 10 deltas work too. It's a little bit slower to make the higher credits, but generally speaking, selling overhead calls when the markets are moving lower, RSI is dropping, is a good bet. is a good bet. Collect the money up front. Just wait for the options to either expire or get down to a level where you can buy back at a small debit, like $5, $10. Sell something for $100, and go from there. We got 6 minutes to go. 6 minutes to go. I'm going to give you a couple examples. Okay. Couple of examples of what I just got finished talking about, selling upside calls. Here's an example with Apple. Okay, you wait for a bounce, then sell overhead calls above resistance or at previous resistance or below the 50-day. Can we bounce a little bit more? Probably. Okay, Tesla looking pretty good. Okay, PMZ, we're above PMZ, the pre-market zone. Watching for a break to the upside. Okay, Tesla. So this is an example. I'll give you a couple more examples. Okay, let's look at Amazon. Amazon, another credit spread on Amazon. Okay, selling upside calls above resistance, above the 50-day, above the upper Bollinger Band. Note the Bollinger Bands are coming together. That's telling me to expect prices to stay in a range. So if you're betting on options for the stock to move higher, you have the upper Bollinger Bands as resistance. Your probabilities are probably much less than mine are, because I'm looking at a 90% probability or an 85% probability of being successful. You're looking at 15, 20%, especially if you're trading out of the money options. So if you're going to trade options and you're going to scalp, I like to use at the money options or in the money. I list 40, 50 deltas. Okay, that gives me a 50% probability. And then maybe cut my costs by selling a vertical. Buy at the money, sell it a little bit out of the money, $5, $10, and look for that zone for profit. Okay, let's look for another credit spread. What I'd be doing this time, at this time. Okay, here's another one. SMH moving lower. SMH pre-market was lower from what I remember. Okay, so I want to sell upside calls, okay, out of the money. All right, SMH is lower. Okay, we got 3 minutes to go, 3 minutes to go. One more example. Let's see what else. Tesla's the opposite. Tesla, I'm selling put credit spreads. I'm looking for prices to move higher and above the moving averages, above the 50-day. See, Tesla's trading 225 and change. 224 and change. Okay, so above the 50-day. Bollinger Bands will open up today, most likely. Bollinger Bands will most likely open up. We got 3 minutes to go, 3 minutes to go. Okay, Tesla. All right. Another one I was looking at yesterday was a potential to sell some overhead cover call. I don't have anything yet, but I was looking at selling some overhead call credit spread on Google. What's Google doing right now? Google was lower from what I remember. Google with 2 minutes to go, 2 minutes to go. Google's starting to bounce now. Okay. Google's starting to bounce, but I was looking at Google. If it loses the 50-day, I was looking to sell some call credit spreads. I'll probably bring these down a little bit, maybe to 170, 175. Looking at that upper Bollinger Band, starting to open up. So keep an eye on those. Tesla, let's get ready for the opening bell. Our little profit taking right before the bell. Overhead resistance on Tesla, you can see right up there near 228, 229. Okay, so if you're day trading, keep that in mind. Okay, first 15 minutes, all we're doing is taking profits off the table. reassess the markets.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Peace out coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Okay, CrowdStrike was another one that we're in. CrowdStrike. That is an iron condor from earnings. Okay, that's still between those levels, CrowdStrike. And we're open. We are open. All right, let's see, CrowdStrike. I want that to be lower. CrowdStrike is lower. That's good. Tesla. Watch Tesla for a few minutes. Profit taking. SMH is lower. Semiconductors are lower. We got Intel with some so-so news. What's Intel doing? Intel, I don't know. Intel at $20. I don't know. I don't want to put good money after bad, but maybe some options, maybe some long-term January, maybe 2026 options, January, a little bit out of the money. Yeah, just a thought. Okay, Tesla watching the open. Okay, Google's bouncing. Let's see what okay, Apple's on the move. Apple is on the move. Apple. Amazon. Okay, Tesla, a little dip there. Microsoft.
Maybe today a little bit calmer than the way we started this week. VIX coming down, but barely. We got up to 21, 22 handle yesterday. 1 point.
Okay, the S&P 500. S&P 500 is about 50-50 right now. It looks like 50-50.
Some better momentum here today. ADP private payrolls, though, were pretty light, so you kind of take whichever side you want. Right now, stocks are taking the more positive side of it. Yesterday, we saw the equity market trying.
S&P 500, 300 stocks advancing, 190 stocks declining. Okay, let's look at 0-day. NASDAQ 100 is about 30% green. NASDAQ 100, 30% green. We've got the S&P at the upper Bollinger Band. 0-day setup is bullish for now. We got cyan bars on the 5-minute. And we've got advanced decline flat, sideways, but green. Up-down volume is mixed. 2-to-1 on the New York Stock Exchange. Let's go look at the New York Stock Exchange. When in doubt, always check the New York Stock Exchange. Okay, so it's just sitting here. It could drop or pop. So we got to keep an eye on these. All right, there goes Google. Google on the move. So looking for a pop in Google and a fade to sell some overhead call credits.
Utilities up, energy up, the WTI bouncing back towards $70. And for the most part, big tech in decent shape to begin the session here. Amazon, the best of the Magnificent Seven with a 1.5% rally. A few stocks that we're going to hit around earnings. HPE getting slammed. We'll take a look at C3AI as well, down 16%. Those are in our movers. We're going to talk to Tesla and NIO as well around some of the EV data coming out. And by the way, Tesla's been doing pretty good here the last couple of days.
Tesla. Okay, we got lots of calls, sweeps on Tesla. Okay, Tesla. Okay, we got some profit taking. Let me turn this after hours off. Okay, Tesla. Looking to take a long on Tesla for a ride, but I'm going to wait a few minutes. I'm going to try to be patient.
Well, I mean, obviously, everyone seems to be in the market as well, OG, waiting for tomorrow's labor market report for August. But if you look at, jobless claims, I mean, these are weekly.
I try to be patient.
Actually hit some 8-week levels, only 5,000 increase relative to
Okay, so told you on Zscaler that in previous moves down to these lows, the next day we had a gap up, a move higher. We don't have that gap up this time, so that's different. So we have to keep that in mind. I'll probably roll out to next week, same strikes that I had before, 160, 165. Look for prices to move higher. Small debit against the received credit for the iron condor. The calls obviously are out of are toast. Maybe selling some upside calls. All right, so Zscaler, we'll come back and look at that. We're fading a bit. I can hear a fade. Google starting to push a bit higher. Google. All right, so let's see what's working. Tesla is up 2.75%. Okay, Tesla. Tesla has an ATR, a range that generally trades on the day about $10. That's been dropping lately, but $10 on top of what we already have, $5. $5 more, maybe, on Tesla. So keep an eye on Tesla. Tesla. Okay, you could also trade TSLL. TSLL. TSLL is an alternative, a leveraged bull, 2 times shares. Okay, so we could do that as well if you don't want to trade options. Tesla. It's probably going to run into the 50-day resistance, Tesla. Okay, so we're running up. You see that supply right there? Now this could, if this gets taken out, if Tesla takes out this level, it's going to use up all of its ATR for the day. So it would require an expansion day. Okay, it would require an expansion day. What does that look like? An expansion day would take out this pivot. An expansion day would take out this pivot. Let's focus on Tesla because everybody else seems to be focused on it. So we know it's in play. It's above the 50-day. So Tesla's probably going to go. We have put credit spreads on it already. Tesla. You might want to try a vertical or something like that for Friday, for tomorrow. Pretty cheap way to play it if we get a nice pop. Buying at the money, 230. Sell maybe a 235 or a 240. Okay, let's try 240, 230, 240. Let's see. Okay, looking for a follow through in Tesla. Tesla moving.
Let's talk some Tesla. Diane, good morning. $25 in like 3 days. Tesla, while the rest of the market.
Tesla looking for the follow through. Okay, we're into supply right now, so we could see some consolidation and then a follow through or a rejection here. So be aware of it. Lots of calls being bought. Let's see who else is talking about it. So far, so good. Okay, S&P will help out a great deal. The S&P can manage to continue. Okay, S&P turning double bottom on the 5-minute chart, 15-minute chart, 30-minute chart, double bottom. Got supply overhead. Okay, we got some nice follow through so far. The 0-day setup is working. 0-day is working. Zero day is working. 55, 65 is resistance. 55.50, 55.65.
Counter to the general tech market and other AI stuff. While
Okay, S&P looking for a follow through.
I do still think there's
Tesla looking good. Okay, up against resistance. You see it over there on the right. Okay, following through. So everybody's paying attention to Tesla, looks like.
Revolutionizing like robotic cars, you know, like it seems like still they've had something to contribute to this theme that the market has been very, very
Tesla.
so far.
All right, Tesla trying to push through this level. Let's go to the 4-hour chart there. Let's see what that looks like. 4-hour. Okay, yeah, we got a couple of levels of resistance. S&P, no follow through yet. Okay, so up down volume is 1-to-1 on the New York Stock Exchange, 2-to-1 on the NASDAQ Composite, 2-to-1 on the SPY, 3-to-1 on the Qs. So looks like we're going to lean on the Qs today. Semiconductors hanging out right where they were yesterday. Semiconductors right above the 200-day moving average. Okay, oscillator is getting oversold. Watching Tesla for the follow through. All right, starting to see some flag opportunities. Tesla. Okay, one more time. Let's go take a look at what's working on the markets. Okay. The airlines. So we got 3 airlines here. American, United, and Delta. All 3 of them moving higher. Airlines are in play. Airlines in play.
Well, this has been a big disappointment, series of disappointments. So, nice little beat. Guidance going in the right way. The Chinese
Top 10 on the S&P 500. Airlines, 3 of them. We looked at Caesars yesterday. Didn't look very interesting. Now it's trying to follow through. Tight Bollinger Band, so range bound. We're looking for this to break out. Okay, let's look at some of the defensive plays that other members have mentioned, like Paticus mentioning Procter & Gamble. Procter & Gamble, defensive consumer staples stocks, Colgate, Procter & Gamble, ConAgra, Kimberly-Clark. All of these ripping higher. XLP, the consumer staples sector, Doji. Okay, so TSN, Tyson Foods. Watching for follow-throughs in these. Okay, so those look good. Okay, Dow Jones. Intel is up. Okay, that's very interesting. Intel is going to be delisted from the Dow Jones. They probably put Nvidia in there. Boeing. Boeing might be a candidate for some premium selling. Microsoft, Disney, sideways. Maybe an iron condor on Disney. Okay, Tesla.
Brutal. Now, obviously, very, very sharp market response in a stock whose ticker is AI. They are going to
Some profit taking on Tesla.
numbers, making sure that the hype over the last year and a half was
A little profit taking there. Let's see if this flag holds and look for a break to the upside. Tesla ATR is $10. It's currently up $9 on the gap up. Tesla. Okay, 0-day setup. All right, all indices are green up volume. All indices. Up volume is green on all indices. Okay. 0-day is bullish. Zscaler on the move. Zscaler. Zscaler. There goes Zscaler. Okay. Zscaler, you know that we have an open position that we need to get out of. The 160, 165, I haven't panicked. I know on these bounces that we could see something similar to what we had last time around, which is a bounce at previous support. A bounce at previous support is what we're looking for. The red is noting the gap that we need to fill.
Discernible right now. We've got bonds basically where they were. Dollar down pretty notably. Stocks generally pushing a little bit higher. Also,
okay. That's a fair value gap. Fair value gap and a gap. Let's see. Okay. So you know where the gap is. I'll just take that off so it's a little cleaner on the daily. Hey, Tesla. Tesla's breaking higher. Tesla. Okay, no follow through. Just got rejected. A little profit taking in the S&P. S&P. A little profit taking. S&P. Tesla trying to push through this. Okay, there goes Tesla. Tesla with a nice follow through. Okay, we got some profit taking on the S&P. Zscaler, looking for some upside in Zscaler. Maybe some out of the money leaps. Let's see what those look like. Let's go out to, let's see, January 26th. Let's see January 26th, what that looks like. All right, so you need to go out maybe half of the gap. Think about half of the gap. We're going to look at that. Maybe a call vertical. I'll give it a couple more days on Zscaler.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device.
Now, to be very clear, these bounces, these are opportunities to sell into strength. I'm not looking for the markets to jump back and head back up to all-time highs. I mean, it's possible. It's possible. We have to be open to that. But most of my positioning is selling overhead calls, 10 deltas, 90% probability of being successful, 10% probability that I might have to manage. Okay, we've seen some big moves, like Zscaler jumped twice its expected move. So we're in that kind of environment. All right, so here's the S&P. We're still looking pretty, I don't know, pretty iffy. All right, so I'm not looking for this to jump back up and take out last week's highs that we saw on Friday. Best case scenario is that we hold here. We could drop off. So semiconductors, I have a call credit spread on semis. Okay, that's still holding there. That could head to the 200-day and perhaps bounce. We'll see how Intel and the rest of these do. Intel trying to hold on to the 20 level. NVIDIA with a little bounce. Yesterday, it got sold into that Monday or that Tuesday candle, that down bar on Tuesday. And we tried to get back to the top of yesterday's Tuesday's highs, but we got rejected. Sellers came in. So stochastics and MACD are oversold. RSI is oversold on NVIDIA. So we could see this turn. NVIDIA, that's a big possibility. But overall, I'm thinking that we could be lower before we go much higher. So that's what I'm planning on. Doesn't mean I can't change my thesis.
Some of the real super growth hardware companies kind of peak out. It seems like Broadcom arguably is picking up, like, right? Aren't these, this is a sales growth rate that's picking up substantially. Yeah, so as far as kind of Broadcom is concerned,
Okay, Tesla.
almost similar to the Marvell story that we saw last week, and that is the sense that the AI story has actually played out.
Tesla looks like it's going to follow through.
In fact, they've continuously increased their guidance for on their AI-related revenue, probably about 44% of their revenue right now. As far as their semiconductor revenue attached to AI, most of that kind of in terms of their kind of custom silicon business. So think about some of the compute, that kind of that companies like an Alphabet are helping kind of design on their side of things as well, networking side of things in terms of the Ethernet.
Okay, we're up against supply. Tesla's up against supply, so just be aware. You should be watching this pretty closely. ATR, we're 100% ATR already. Okay, 100% of ATR is traded out on Tesla. Okay, let's take a look at Zscaler. We're looking for Zscaler to follow through, push higher, get out of this area below. Liquidity, these resting orders have been down here from the last time. They've been sitting here trying to get filled. Now they got filled at a discount, looking for prices to move back into the gap. Mondo going along the 160s for tomorrow. Then we could see a nice pop on this one. All right, 0 day is still bullish. Up volume is still leading, except on IWM. Let's take a look at IWM. I have an iron condor on IWM. So we're looking for prices to stay pretty much right where they are. Okay, so here's the weekly on IWM. Let's go to the daily real quick. Okay, so we're just sitting here, IWM. Those iron condors are doing well. I don't trust the markets. I don't trust this pop. We see a little bit more volume. That would be good. Let's see.
More bullish on this cycle, so that should bode well for Broadcom as far as kind of their wireless related revenue here. Again, that will help kind of the acceleration in terms of the semiconductor business as we kind of go into the October quarter as well.
Okay. Dell also a pretty big customer. We saw pretty impressive numbers from Dell, so that seems like another pretty strong indication of the trends you're talking about.
Yeah, I mean, listen, as far as Dell is concerned, I mean, one point that they continue to highlight very favorably is kind of a lot of these kind of tier 2 cloud companies. So think about companies like an IBM Cloud, you know, the Alibaba, the Oracles of the world, and also kind of the strength on the enterprise side of things. We know the hyperscalers out there continue to order. We know kind of the trajectory into 2025 is going to look really good from these hyperscalers out there. And I think kind of the question now is, at least on my end of things, is kind of whether or not that momentum holds from some of these tier 2 players out there, the enterprise space. And, you know, some of that is going to be dependent on the monetization side of things.
Okay, let's look at the NASDAQ 100. NASDAQ 100 is still only 30% green, folks. All right, so be cautious. Instead of taking 10 new positions in the first 15 minutes, maybe you only take 1 or 2. Okay, I'd be more cautious. We only have 30 stocks green on the NASDAQ 100. We've got about 70% red. S&P 500. A very quick flip on the S&P 500. We had the majority were advancing. Now we got the majority declining. 339 are declining. 161 are advancing. So more of a narrow breadth on those stocks that are moving higher. The bottom line is, it looks like they're selling into strength. Remember, we are potentially still seeing some distribution. We had distribution in the previous few weeks. We dropped down on Monday, tested the 50-day. We just Tuesday. We're holding on. Bollinger Bands are coming together pretty quickly. Let's go to the 60-minute and see what that looks like. 60-minute. 60-minute. Okay, we're below the 20 EMA, so that's telling us right now either be bearish at a minimum or cautious unless we get back above that 20 EMA, which I don't see us doing. We're probably going to get rejected overhead around 55.50. We know resistance for cash is 55.65 today. It's running along the bottom of your ticker on the bottom of the screen. 55.65 is resistance. S&P. Okay. So temper your enthusiasm. Instead of taking 10 calls, maybe you take 5. I'm talking 0 day. Okay. Okay, ADD is only at 284. ADD, the difference between advancing and declining issues. We're just above the 0. Let's look at VOLD, VOLD. VOLD is flat. Okay, so Tesla, Microsoft on the move, Microsoft. Okay, Microsoft, I was thinking about selling some call credit spreads on Microsoft. I'll wait. Okay, we're flat on Microsoft on the 60-minute. MACD's flat on Microsoft. Okay, short, intermediate, long-term. MACDs are all flat. Okay, SMH, semiconductors, have a call credit spread on this one. The reasoning here is that looks like weakness will persist in the short term. Maybe we bounce somewhere around the 200-day like we did last time. But all the oscillators are pointing to bearish continuation. Let's look at some semis and see how they look. Let's look at, say, I don't know, something different. LRCX, Lam Research, all three moving lower. SMH, obviously, all moving lower. Micron, all moving lower. Okay, Micron. What about Broadcom, AVGO? Broadcom, all three moving lower. All right, so yeah, semi doesn't look that great right now. Intel managing to hold on to this base. Okay, Intel starting to get a crossover on the short time frame. We need to see that continue, move higher. So we need MACD on the short time frame to turn up and price action to move higher. MACD based on prices. ISM coming up at 10. ISM and 1 minute. ISM, thank you. Lori, thanks. Okay, Zscaler, let's look at Zscaler. Okay, that's firmly down for now, but looking for the bounce. Okay, the previous 2 times that we had pullbacks, pretty broad range in the 2 pullbacks on the daily, these 2 in May and August. We just had earnings. We're looking for a reversal. I mean, this is a company that's going to be utilized going forward heavily between Palo Alto, CrowdStrike, Zscaler, all of these security names. They just guided. Their guidance was poor. There goes Tesla. Their guidance was somewhat poor. But I would think that this is going to be an opportunity for institutions down here at the lows. All right, so Zscaler looking for it to break to the upside. Mondo is giving us bedroom eyes. Okay, so Mondo's in the 160s. Mondo's been hot lately. Puts and calls both different directions. Nice work, Mondo, by the way. Okay, so there goes 0 day. 0 days. Cutting a rug, moving higher. Okay, advancing issues are starting to pick up again. Okay, there goes Zscaler. Zscaler on the move. Okay, Zscaler working its way through. Working my way back to you, babe. Ba-da-bum, bum, 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 bum. Working my way back to you.
We'll see how the market responds. A notable little drop in bonds there. So we get the yield creeping a little up after a good.
The spinners. Remember that song, Working My Way Back to You? Great song. Spinners, you guys know the Spinners? Might be too young. Great song. Zscaler on the move. All right, so that's exactly what we were looking for. Okay, we need to take out yesterday's wick. All right, so the highs yesterday are a bit higher. What do we make it to? We made it up to 163.50. All right, so 163.50 is a level. We'll probably see some, let's see, that's 27% of the volume trading today already is up here. Four Seasons? Yeah.
Services coming in strong as I take a look here across the board here, and the ISM non-manufacturing business activity 53.3. I'm looking at non-manufacturing employment for the month of August at 50.2. Now that was kind of the soft spot, the business activity and the employment index. But as you take a look here, non-manufacturing new orders, Oliver, 52.4. Expectations for 51.9. That non-manufacturing PMI again coming in at 51.5. They were looking for 51.3 prior 51.4. What really jumped out at me was the
great song though. All right, Tesla's still moving. Hold on one second. It's my son.
A bit warmer there, but nothing. says you're above 50, prices paid okay, you're not really worried about the inflationary implication there. We're happy to see the activity.
I would have to agree. I mean, at 53, if you remember, there were some concerns that were raised when this number spiked, I think, down to 47.3 or something like that earlier, June, July, if it was, if I remember correctly. So, you know,
All right, Zscaler looking for a follow through.
situation. That was 2 readings ago. We hit 47. So again, to see this now ticking up, you know, maybe the economy hasn't slowed to the extent that we have, you know, and that's why we're looking at the jobs report tomorrow.
Here's the catch, though, is that 53 is a lot better number than 47 from June for new orders.
Yeah.
But you've also got a high in the last year of above 60. You know, the new orders over the last 2 years have basically been just going down and to the right. So, you know, to the point of the slowness, it's definitely there. But at least in the short term, after we've come off a couple pretty rocky prints, this is a nice reminder we got something to, you know, hang our hat on here with the services economy.
Definitely down to the right, Oliver, but still in expansion territory. So I think that's what
Definitely,
taking note of also again. And you know, again, I think the real concern here, the one concern, everything looks pretty good, pretty like, you know, kind of hitting the sweet spot here in some ways, which is how we described the jobs numbers earlier this morning. Not too good, not too bad. The real concern here again, what's going to mean on that?
Okay, Tesla's still going. Tesla, very nice move on Tesla.
Market's trying around with this. Love to see good data.
All right, so Tesla working. The credit call credits or put credits working. The call verticals, any kind of call setup that you have is working. Okay, S&P on the move. Tesla doing well.
We can do end up positive on the session. Not only is that really kind of push back on some of those concerns as far as the selling was out earlier this week, but it becomes with yield to the upside, Oliver. Yeah,
Nice move on Tesla. All the New York FANG index stocks are higher.
I think that that's what investors want to see. That's what the market wants to see.
And real quick, look at crude back above $70 after trading below 68. I'm sorry, below 69 yesterday. And the overnight session got down to in the 68.
Here's the only problem is that, you know, even though we have sold bonds a little bit since the report came out, dropped the dollar a little bit. I mean, 10 years still.
Shorts covering.
And given that we've still bought bonds this morning on net, the 50 basis point cutoff still going to be there like full clip. I mean, it doesn't resolve tension in the market by any means. That's tomorrow's job, employment. If that doesn't do it, then I guess you've got a couple inflation prints still.
Okay, Zscaler looking good. Zscaler looking for the follow through and a push higher. Okay, S&P 500 continues. All right, so we got 5550 coming into view. 5550 S&P. Okay, S&P 5550 is resistance. Okay, Tesla really looking good.
Nice little bid. We'll see if it turns into something. Tesla now 6.5%. So juicy action in big tech. Thanks, Ben. Appreciate it. Amazon up more than 3% too. Got a lot of green and we're among the giants. Kevin Hanks jumping into the convo. Kev, let's get a quick thought here on kind of how we'll respond to this. And then I know you're looking at some earnings coming out too. But firstly, when you've got a good data point, I mean, does this help us?
S&P flagging. Just a little profit taking along the way. Looking very good.
I still think any day, any trading day before a non-farm payroll is going to be a dry powder. It's going to take on the role of dry powder. And yeah, the market can move. And there's some good news out there. You've got some stocks that are moving.
Tesla. Very nice move on Tesla.
Strong Tesla. You've got some leadership. But tomorrow's number, from a macro perspective, is going to set the tone for the next couple of weeks. any move you're talking about is going to be muted based on what I feel is probably a dry powder day ahead of tomorrow's number. Okay, understood. Hey, saving any dry powder for good old DocuSign, the COVID winner, then post-COVID dog, and now in the last year, kind of like this little comeback story happening. The e-signature company, DocuSign, coming out with earnings after the bell today. Last time they gave earnings, they beat by
Okay.
6%.
Little profit taking just shy of yesterday's high.
But the guidance was a bit worrisome, and so were the margins, Oliver. And that took the stock a little. Remember, this stock hit a pandemic high of about
Okay, let's look at
$2.
a daily view of what's in play. Looks like growth is being bought. Growth stocks, semiconductors, tech, software, hardware, cloud, internet, all of those bouncing, whereas values still bullish, just taking a breather right now. So we had these micro rotations. Looks like growth is in play.
So, like I said, it's going to be about, they're worried about slowing growth in this, and that's why you've seen the overall, once you stop growing like that,
ASTS, an offering at the highs.
the overall gross profits have been keeping pace with
Wow.
the market. So, this
Wow, that's a lot, Daniel. Jeez.
earnings report here, but they have to show that they're maintaining growth here, Alvin.
Yeah. The chart pretty wild when you zoom out to include COVID. Maintaining growth, I think
Daniel, you've been with us for a few years, right?
sort of priced for maybe like
Seems like 3 or 4 years.
the bankruptcy potential. I think at one point it was priced for like going away.
Remember when you first joined?
I don't think that's necessarily
Just don't recall exactly when it was.
concerned about competition, namely Adobe.
Okay, so S&P, a little profit taking at the highs, just shy of yesterday's high over here. Okay. Okay, we got the high over here. Coming back towards VWAP.
But it still has a role to play.
Yeah.
Could be a good, solid company, just not growing at the pace it did during COVID.
Yeah, 100%.
All right, cool. All right, thanks.
Okay, the New York FANG index stocks. All right, so what we're looking for are these stocks to bounce, move a bit higher maybe, follow along the trend for the day. Looks like growth is in play.
There's a lot of excitement around the COVID era. People expecting more of this work at home, and that's really continued. But yeah, we're nowhere near that level of excitement anymore. And I think we're kind of in a range in the names of, you look maybe at like the 2-year chart. I kind of see a bit of a range that DocuSign's kind of trading at. We're actually at the higher end of that range for me. I kind of think seasonality, in spite of what happens tomorrow might be a good jobs number. I hope it is, but there is evidence that the market is slowing. Wednesday's JOLTS is showing that people are hiring fewer people, and that might be a leading indicator to people getting fired. But if fewer people being hired, that's very challenging for companies like
Okay.
requiring new users, new jobs, new users.
Microsoft,
Are going to be what they need to add to their bottom line, add to their growth. So they
Tesla, having a good day. Tesla still testing the highs. Zscaler pulling back a bit. Zscaler, Apple, S&P, SMH.
So it seems like, you can kind of trade it both ways. What about the options? Is it as volatile as it used to be?
To me, not as much.
Okay, CrowdStrike, how much do I need to close this? Let's see. $30. All right, we're getting close to an exit on CrowdStrike. CrowdStrike getting close to an exit. I could buy back these iron condors for $30, $34 right now. So I'd like to get it down to like $10. So CrowdStrike's still working. CrowdStrike.
which I'm looking at doing for January. Gives me several more months here to the
Okay, so this
contract.
CrowdStrike Iron Condor was good for $214 per contract for every $768 closed. I had 10 of these. So yeah, I'd like to get it down to about $10. That way I can make $200 clear per contract times 10. So that'll work. So I'm just going to wait a little bit longer on CrowdStrike. Or do I want to do it now? Do I want to do it now, CrowdStrike? Heading down to the lows. Okay, so next week is when theta really kicks in for CrowdStrike. I have the 20s, September 20s.
Okay, all right. So I mean, you're looking for a drop, ideally, but as long as it doesn't rally, then you're in okay shape too.
Yeah, I'm looking for just a moderate drop here. I think the trend over the past 2 plus 3 years, I think that's really what I'm looking at leaning back on. I'm also just kind of leaning on the seasonality component of it. This is just not the right part of the business cycle for this type of company. This is really kind of, very dangerous spot for, a company that is going to rely on
Semiconductors pulling back, S&P pulling back a little bit. Looking for a little bounce. Do we flatten out and create a doji on the daily over there on the right? All right, let's take a look at the New York FANG index. That'll give us an idea of what to anticipate. On the growth stock's outperforming value for now. So you can see all 10 New York FANG index components, Apple, Amazon, Broadcom, Microsoft, Meta, Google, Snowflake, Tesla, Netflix, and NVIDIA are green at the moment. Microsoft is flat. Meta is trying to push a bit higher. Microsoft's up $1.75. Meta up $3.50. Google up $1.60. Google, I would really like to sell some call credits on Google on this bounce. Google, 172. Let me do that. Let me see. Trade. Google. Okay, so I'm looking at let's see what we can do. When's their next earnings? Google. Is it on the watch list? It's not on the watch list, right? Google? No, I don't think it's on the watch list. No, I took it off the watch list. Okay. So Google. Okay. Google. I'll wait a little bit longer, see how far Google can go. All right, October 22nd. So if I would sell something, probably October 11th. Let's see. Call verticals. Okay, let me look at this again. Google. Okay, 50-day has rolled over. So what I want to do is in the month of September, I'm thinking, okay, I just want to take premium from people who think this is going to go back up to all-time highs. I think that's illogical for now. Maybe later in the year, but not for now. I want to sell calls on a bounce, not at the lows, because any bounce is going to mean that I'm going to get less premium. All right, so let me do that instead of just yapping here. Let me see. 175, 180 maybe? No, that's not enough. Okay. $170, 165, nah. So right now, don't have enough premium in the calls yet. So I'm looking at the 11 October calls. And what I'd like to do is sell like the 175 above the 50-day, 175. Maybe I'll wait a couple of days. Maybe we get a couple of days bounce out of this. And then second week, third week, fourth week of the month tends to be the worst part of September. So we could stay up here I'm just contemplating what to do on Google. I'd like to sell some overhead call credits, but I'm gonna wait. I'm gonna wait a little bit later in the day and see what we get out of this because the premiums aren't high enough right now. So let me just see here. All right, so 175, 172, 170. Let me go out to. Let's go to the 27th September. That's 22 days. 22 days. 170. Nah. What about the date right after October 24th? 170. All right, those are better. A lot of slippage though. A lot of slippage in the bid and ask. About $2. $2.50. $2.50. Big slippage on Google calls between the bid and the ask. Okay, deltas. 12 delta. There's no bid on that. All right, so I'll skip Google for now. Skip Google. Man, what about Microsoft? Microsoft, similar idea with Microsoft. Microsoft trying to push higher. Apple's trying to push higher.
Stacked with content curated to fit your unique goals, you can spend less time searching and more time living. Trade brilliantly with Schwab.
Apple. Tesla's still going. Wow, what a day on Tesla. Apple. Okay, Apple, the ATR on Apple is $5, currently up 385. So we're getting close to the highs of the day. Okay, S&P. Back to the S&P. Nice little bounce in the S&P.
Thank you for having me. I'm glad to be here.
Appreciate that. Tell us about your business. It's the first time you guys have been on here, and the shares have been pretty amazing. And it seems like you guys are showing some pretty unique growth in your sector. I know you have a lot of patents in the telecom and digital communications world. Where do you get most of your revenue?
Yes, hey, Oliver. InterDigital is an independent research company. We focus on fundamental technology in wireless, radio, and artificial intelligence. So we create the technology. As you mentioned, we have a very large patent portfolio, but it's also one of the most valuable portfolio in our industry. Most of our
TSLL working.
they are created by our own scientists and inventors, and we drive vast majority of revenue through IP license.
It's a interesting business model. It seems pretty unique in terms of.
Okay, that's looking really well. TSLL.
And then the licensing. So a lot of your revenue looks to me like it's recurring. Is that right?
It's absolutely right, however. So one of the real strong point of our business is we sign a very long-term license with a very large customer.
Tesla continues to build higher highs and higher lows. VWAP up and to the right. All right, we're about to move through this area of resistance. Tesla, so that would make the next level around 255, 256. Tesla.
Yeah, Google has been a licensee for InterDigital for a while. They had a license with us for 4G technology, which is one of the cellular technology, and we have negotiated them. We added 5G, and we also added radio in terms of radio codec technology.
255. Tesla looking good. Tesla riding VWAP up and to the right.
Your team is looking at the technology and finding ways to protect it, patent it, or is it Alphabet's team? Like we have a partner, and then you work on actually the process of protecting your own tech. Like Is it Google researchers or InterDigital researchers that are primarily kind of driving that product line?
It's individual researchers.
Okay.
So what we do is we come up with fundamental technology and we apply patent to protect our technology. But another really, really important aspect.
Okay, S&P continues to climb. Tesla continues.
Open standard. Our engineers are well respected in our industry, so we lead the standard development. So part of our technology becomes the open standard for cellular technology, for example, that like 5G and in the future 6G. So therefore, the rest of the industry, including Google, can benefit from it. So in a sense, we are the R&D engine for the whole industry.
Yeah, it's fascinating. So then
Tesla just keeps climbing. It's moving through these levels. So look at I'm going to do full screen here. Look at this. Look at this chart. Okay, so we're about to clear. Okay, you can see how that just disappeared. Okay, these block orders right here, okay, they're coming back and forth. We take this out. We've got a bullish chalk, a bullish change of character. Bullish change of character. Now what we're looking for are break of structure on shorter time frames, like the 4-hour. Okay, chalk comes in. Let's go to the 1-hour chart. All right, we already know that Tesla is bullish. You can see the break of structure here. That's your long setup right there, pre-market. Now we're looking for another break of structure for prices to consolidate a little bit and then take off to the upside. You can see the buying activity down below, the green bands. All right, we need to get through this immediate level at 236. 236.50 should do it.
How much is consistent just salary, headcount, and putting all those people to use? Whereas, like, I imagine it's pretty low capex, or is there like any real build out of like engineering, hardware, laboratory materials you need for any of this stuff?
We have to invest very heavily for the future for our company. So we invest in people, we invest in infrastructure, we invest in the computing infrastructure. We frankly also invest in our ability to build and maintain and enhancing our patent portfolio. On top of that, we build very strong partnership with universities, with our partner companies, to make sure our technology gets propagated throughout the industry. Just to give you a number, we actually consistently invest about half of our recurring revenue into R&D and building our patent portfolio. So that's a very high percentage.
Okay, all right. So there is a lot of research from perspective of like building out and testing things. So I guess that makes sense. You've got a big partnership with Apple. I mean, I think your biggest customer right now, is that right, Aaron?
That's absolutely right. Apple has been a long-term customer for us for actually quite a while. Apple has been a licensee for us since 2007. And 2007, what we remember, is before they even released the very first iPhone. So that relationship has been going on for close to 20 years now. We just renewed the agreement 2 years ago, around this time, actually 2022. And Apple has agreed to take a license for 7 years. So our current license agreement with Apple will go all the way to 2029. Wow. Again, this is just an example of how our partner value us and how our subscription-like business model is really providing a lot of stability and further growth for our company.
Is that the wireless band? What is the main product, or what's the main idea that Apple's paying you for?
We have a very, very large patent portfolio and frankly a very broad scope of technology. For example, we are in cellular technology, which obviously iPhone uses, but we frankly also are one of the top developers for video.
Okay, Amazon moving. S&P, let's see, Tesla doing well. Sorry, wrong symbol here. Tesla.
80% of the internet traffic is driven by video. So having what we have for video.
Okay, we're at the highs.
For partners like Apple and other players.
On the AI side, what's most interesting to you, Aaron? Where is your team? Where's your crack team finding ideas right now? Like, is it tougher in this market? Do you have to get to the idea before
S&P trying to follow through.
What's that like?
We actually compete against the best company in the world for talents. Our AI lab is actually in Silicon Valley. So what we have been working on actually for a couple of decades now is to use AI to solve the fundamental problem in wireless and radio. So we don't really compete on that.
Tesla.
What we do is to make sure
The star for today, Tesla.
wireless and radio works better with the AI technology. And one more thing differentiates us from most other companies is once we create the technology, we share them.
Tesla, NVIDIA. NVIDIA up against resistance now.
Yeah, it's a very like pure.
Okay, Bitcoin. Trying to get something going on Bitcoin. Nothing yet.
Like you're the brain stem of like some of the biggest industries. It's amazing that I haven't heard more about your company or business because the chart has been incredible. The stock's been amazing. You guys only trade at like 14 times forward earnings, which seems pretty wild considering the industries that you're plugged into. So we'll be paying more attention. Leon, thanks for the introduction.
Yeah. Oliver Cat, could add one more thing, if you don't mind? Yeah, so next week, September 10th, which is next Tuesday, we'll be having our Investor Day in New York. And this is actually my first Investor Day.
Tesla's still hanging in there.
3.5 years ago. So we'll do a deeper dive of our business as well as, lay out our long-term goals, roadmap for our company. So I welcome the audience to either participate in person or participate virtually. And you can find the information of our IR website.
Great stuff.
Okay.
Context, and we'll definitely be keeping our eyes on the developments at next week's investor conference. Appreciate that very much, Leon. Thanks for your time.
Thank you. I'm really glad to be here. Thanks.
Absolutely appreciate it. Leon Chen, CEO and President InterDigital. Pretty amazing long-term chart. 14 times earnings for being like the brain trust of tech. Amazing stuff. All right. Coming on. We're going to go in the opposite direction. This couldn't be more different.
All right, Tesla. Looks like another pivot, higher low. Okay, we had a little break of structure there, looking for a follow through.
Get the wings off. Get the gambling going. Let's go.
All right, so VWAP still up and to the right. VWAP up and to the right. Tesla looking for. Hopefully we don't get a fade like we've had on some occasions. We've got a nice day on Tesla so far. I'm thinking any pullback in Tesla towards VWAP, I might sell more credit spreads. Tesla, let me just take a look at that real quick. Tesla. Okay, so credit spreads, I'd probably sell more, but not the 190, 185s. I'd probably do something like 200, 195. Because now we're above the 50-day as support. 9 and 21 have crossed up. We've got a lot of bullish activity in the short term. Put sellers giving you support below. Put sellers and call buyers being noted on social media. RSI is rising, so I could roll these up a week. And yeah, that's what I'll do. That's exactly what I'll do. I'll roll these up a week, but I'll wait for a little dip. All right, we're starting to dip a little bit.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device.
So that's Tesla. What's IWM doing? IWM. IWM. Staying right in the middle, which is that we want. Exactly what we want. IWM is just jockeying around. All the New York FANG index stocks are consolidating at the high of the day.
Okay, Thursday night, and the season begins for NFL as Jane Horn and Rick Ducat here taking a look at some charts that might matter. First thing we got to do obviously is just start gambling, making a bet. So let's
Okay, what's Starbucks doing? I haven't looked at Starbucks since yesterday. Starbucks pushing higher. Starbucks, maybe we get a little break higher in Starbucks. Okay, what's McDonald's doing? I'd like to get back into some McDonald's. McDonald's looks like it wants to go. McDonald's looks like it wants to go. Mickey D's has earnings October 28th. McDonald's. I don't know. It's trading pretty at a nice premium. McDonald's, very near a triple top. McDonald's, I don't know if I would do anything at this point. I was thinking about it, but would only be a scalp, probably not a short-term swing. Scalp half, I'll sell half, swing maybe one day half, but McDonald's definitely looks like it wants to go. Both Bollinger Bands are pointing up and to the right. So it's telling you look for a grind. Let's look at the double Bollinger Bands. Looks like it's going to start riding the upper standard deviation 1 bands right there. Tesla, just looking for a higher low to print. VWAP up and to the right. There's a lot of activity on Tesla, suggesting we're going to see more upside. Tesla. Okay, Tesla. These put credits are doing well. It was $80 per contract. I got 10 of those now. Started with 5. Could double up on those again. Probably going to roll these up, but I need to see a dip first. So if you sell put credits, at the high of the day, the chances are that we're going to start to pull back into the range, which would be a better area to sell put credits. You don't want to sell them at the high because any pullback is going to mean that your puts are going to start to increase in value. So what you sold them for, say you sold them for $1 at the high, if the stock starts to pull back like it normally does, ABCD pattern, B and C, you'd probably look at $1.50. The credit being $1.50, so you lose out on 50 cents basically. That makes sense? Does that make sense? So you want to sell puts on the pullback, call credits on the pop. Kind of counterintuitive to most people's way of thinking, but because everybody's always looking for, new traders are always looking for that winning trade that jumps beyond the ATR for the day. So Tesla's ATR is $11 plus or minus, and Tesla is currently trading up 13. So it's a little rich at the moment. We could see a pull back towards VWAP, ABCD pattern. So if you missed an opportunity in Tesla, you still have an opportunity. You just have to wait, be patient, wait until between 11 and 2. We'll look for an ABCD pattern. Okay, so we're invariably going to pull back a little bit as people take profits on the East Coast. Maybe people who went to work, who are on the West Coast, about to go to work. They're 3 hours behind us. So what is it, 7:30, 7:45 or so on the West Coast? So if you're going to work at 9 o'clock, you can trade the morning, wait for that B and C, and then the lunchtime crowd comes in on the East Coast. They see that B and C pivot. What am I talking about? Talking about this pattern right here. We see this very often. Okay, you can see that Tesla's probably at point A right now. Okay, you definitely don't want to be buying at the high of the day. That's a no-no. You want to be buying the pivot. You want to buy the pullbacks. And we generally see that around 11 o'clock or so. Some people look at 10:59 or 10:39. Was it 10:59? I don't know. I don't know what the time is. Okay, so looking for that pullback. Okay, Merck, that's one that Farmer Jim is in. Merck, MRK. All right, so the healthcare stock's looking good. Okay, Merck.
Breakage in one direction or another, kind of once we, get out of this little triangle that we're getting. Seems like the RSI mimicking the technical chart does suggest maybe a bigger move coming, but yeah, it's a tough one because right now it just seems pretty pinned in to this like sort of $5 range almost.
Yeah, and we don't have earnings for a bit either, so not a lot of major big catalysts that we know about that.
Well, I'm sure we'll get some numbers in a couple weeks, like
Okay, Merck is pushing higher. Stocks at the high of the day. Merck trying to break out. Don't buy the high of the day. Same scenario here. So what you want to wait for is BNC pivots. This is at the high of the day. Don't chase this and buy it at the high of the day. Now, this could very well continue. But as far as Merck is concerned, these generally follow the same pattern. All right. So we're looking for an A pivot. Merck looks good, though. Tesla, high of the day. We're looking for a B and C pivot on Tesla. All right, FANG stocks, a lot of short covering, probably some new money chasing. Prices higher. I think many people are going to be disappointed in the latter half of September. We generally see the worst part of that seasonality. Let's take a look at some indicators. Let's go look at advanced decline percent. Advanced decline percent still pushing lower, folks. Big caps, mid caps, and NASDAQ all pointing lower. Okay, so looking at the S&P 500, we've got 334 stocks declining versus 168 pushing higher. So that's the majority are declining. So it looks like selling into strength, which is what I'm anticipating. That said, scalping some of these New York FANG index stocks, they're pushing higher. Now I'm looking for an ABCD pattern around this time of day, around 11 o'clock, 11:30. All right. Oh, let me go do something here. I'll be right back. Give me 5 minutes.
Chiefs defending, so maybe we'll get some viewership here for Comcast. Rick, the chart could definitely use it.
Yeah, definitely. Not the most exciting mover, these telecom type names here, but still a pronounced downward swing off of those highs near 47.11. White trend line in play here, down about 16% from those highs. The more recent price action has been kind of sideways for the most part here. We did have an upward sloping trend line beginning with the 52-week lows. Yeah, so at least we're improving a little bit. We're making marginally higher lows, and price kind of grinds upward here. Still, we didn't really make a lot of progress beyond our purple 252-day EMA the last several times we've tested it here. Now today, or rather yesterday, I should say, we slipped below our two other moving averages, yellow 21-day and orange 63-day, making an attempt to recapture them today. We have not managed to get our 21-day EMA back, but we are above the 63. So when we see these moving averages clustered together, it suggests that the trend is not really moving in a clear, strong direction here, which makes sense because we've seen kind of oscillating prices back and forth kind of around this larger volume node near about the 39 level or so. We can also see that RSI has a matching triangular shape here. We've got our red line going down, our green line going up. Below the 50 midline right now, but right on the verge here, right on the precipice. We're 0.05 away from crossing above here. So kind of a uncertain scenario right there.
we've got our longer-term trend line first, and then our purple 250 two-day EMA lines up with our next set of highs here, 40.54. The next high is 41.63. To the downside, we've got a bit of a floor that we've established here, 38.44, roughly around that area. We've tested several times and held the line. Then the next set of lows will be shortly after our triangular shape here, about 37 or so.
Okay. This one kind of looks in some ways like the DraftKings chart. We've got this slight short-term or shorter-term uptrend coming into conflict with the long-term downtrend. However, for this one, a lot longer of an uptrend along the lows than what we got for DraftKings. So it seems like a little bit maybe more kind of potential to push higher. Perhaps interestingly enough, given that Comcast we don't really associate as quite as strong of a business as DraftKings in terms of growth, but chart not bad. All right, last one. Full triangle, the food component, wings. Jenny, let's talk Wingstop.
Okay, and actually, Wingstop is like more tied to like the legacy TV business than you might think because of the amount in which they've really shelled out to advertise on like these major sports events like the Super Bowl, but also just in any regular season game. Anyone that watches the NFL can speak to this, or the NBA, frankly. It is constant. It's almost relentless advertising. But hey, I mean, like as far as like conditioning goes, it definitely does make you start to crave Wingstop because this and like the Burger King jingle are the ones that just are like constantly in my mind. So I guess that's genius. And so they have been no stranger to shelling out for TV advertising, but have seen a pretty nice benefit as a result. I mean, this company continues to actually post not only solid same-store sales growth, system-wide sales have continued to rise by double-digit percentages annually every year for the last several years. They also have said they've looked at a lot of this like media placement ways to do so more efficiently. They think like Jamie Foxx and a recent Wingstop commercial earlier this year. And so they're doing a great job marketing to the right people. So, I mean, I think that's a huge reason this name has been able to be so resilient in the like fast casual fast food space. I mean, relative to most of its peers now, it's been one of like the most solid trades outside of like the newcomers like Java, Sneakery. Wingstop is a really solid chart. So I think they're obviously targeting ways.
All right, declining stocks 150. Or excuse me, 350. 150 stocks are declining. So it's telling you to keep an eye and be cautious. Keep an eye out on your profits. We're starting to reverse now off the highs. ABCD patterns are what we're looking for.
No, but they did just open a Wingstop literally like last week right near my house. So maybe I'll try it out and report back. Give us a review on the channel check. Chart looks pretty good though. We know that.
Yeah, definitely. And when we look at this one, this probably looks like the strongest one of the three we're reviewing today. Longer term uptrend there, you can see our food line moving upward, culminating with these highs here, 431. Since then, we've given back a little bit of the gains, about 11.5% off of those highs, but also consider we're up 139% off the lows. So hard to fault this one here. Nevertheless, we
All right, watching for a little bit of a pullback at the moment.
once again, a triangular shape on the RSI, kind of a similar pattern that we see across all three of these games. Just coincidentally here, we are below the 50 midline there, so perhaps slightly more geared towards the bearish side, as well as when we consider that we are below our moving averages and they are sloping downward here so far.
Okay, S&P pulling back. S&P stocks pulling back. S&P reversing from the highs. Okay, so this is what I'm anticipating is going to be the case for the next few weeks. Caution. Have an opportunity to sell into strength. Sell call credit spreads overhead. Looking for prices to pull back. Okay, here's the S&P. Okay, so a gravestone doji at the moment. S&P. Stochastic is almost oversold. MACD.
More markets. We had a rally, and it looks like it might be fading a bit, but big tech is in good shape, so the Nasdaq should be all right for now.
Okay, we're right above the 50-day.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Okay, just watching the S&P consolidating at the 50-day. The longer it takes to get back above the 21-day and 90 EMA, the more probabilities we're going to drop through the 50-day, I would imagine. Stocks pulling back from the highs.
We had a little rally going, and then we kind of lost it. Bonds did, though, drop off, and yields rose following our good ISM services. Seemed like maybe it was something that could get the market going. But right now, we are flailing. Diane King Hall comes back to us alongside Mike McCurd, Director at Schwab Advisor Services. We have a little bigger. Diane, we kind of lost it, but tech's still in good shape this morning.
S&P, let's see, Tesla pulling back. All right, looking for BNC pivots on Tesla. In this case, we could see a move back to VWAP. All of the FANG stocks, Apple, etc., pulling back. New York FANG stocks. It's just profit taking into strength for now, so it appears.
Yeah, it seemed like the services data was pretty good there, Mike. Nice piece of information. We haven't had a solid little beat in a while, so that was okay. Bonds selling off seems to be acknowledging that. Dollar firmed up as well. But I don't know. I guess stocks just don't really want to make a big move.
CrowdStrike. I'd like to sell more condors on CrowdStrike. Let me take a look at that. CrowdStrike. I want to keep selling premium. Spent the last couple of days at the 50-day. If we drop through the 50-day, that would be bearish. 5,500 is support. CrowdStrike. All right, so moving back inside the Bollinger Bands. Bollinger Bands are tightening up. So I'd like to do more of these. Maybe at the end of the month. Let's see what those go. They're probably going to be. I'll just sit on this for a while. CrowdStrike. Another couple of days, and we should see over the weekend for sure. That should drop it down to about $10 per contract. CrowdStrike. So that's what I'll do there. CrowdStrike.
going to continue to see tail risk hedging increase, which we have seen dramatically over the last few weeks, especially since August. S&P 500 right now on the chart there, right on a very important support line, the confluence or where the 20 and 50-day moving averages come together right around 55.05 to 55.15. If that gives way, there is deeper support around the 53.75 to 54.
The other thing is Tesla currently pulling back towards VWAP. Apple's at VWAP. Tesla pulling back towards VWAP. I'm thinking about selling some more credit spreads down below. Bullish put spreads. Okay, let me see that. 230, 240. No. 185, 190 is what I have so far. Tesla. Let me just go look at that real quick. Tesla. It's above the 50-day. So we're talking about this earlier. Perhaps selling 195, 190. That's right below the 200-day. Let me see what that goes for. Tesla trade on this little pullback. I'll set up a limit because it is still fading. Could fade some more. Tesla. Okay, vertical puts. Okay, those expire.
It seems that recently there does seem to be more of a correlation between the two. So I think we're going to pay attention to what does the overall number look like? Is there a revision for July? And does that unemployment number tick up beyond 4.3%? Was July an anomaly?
All right. Well said. Good stuff. Thanks, guys. Good thoughts. Banking home. Michael McCurr. All right. Thank you for joining Morning Trade Live. Stocks taking a little bit of the turn south, but tech trying to hold in there. Nicole Petalini's up next with Trading 360. Have a great morning. I'll see you in the afternoon. This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, if you take it, that's always going through my head.
My job as a trader is to just make money. With a history and a geography degree, how did you find your way into trading?
Trading for trust. One of the best and brightest things because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses? Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, you don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales. Turns out I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me. Do you think that this is potentially a human?
Okay, got to leave here in about 10 minutes. Take the son to school. We're pivoting at the moment. All right, Tesla's still pulling back a bit. All the New York FANG index stocks are pulling back from the high of the day. So if you didn't chase it, That's good. If you did, well,
Good morning. We are 9 minutes into the trading day. Welcome to Trading 360. I'm Nicole Taylor, leading live on the floor of the New York Stock Exchange. So glad you are with us on this Thursday. We got yesterday on data and earnings.
Tesla still fading. Market's still fading. Or what's semiconductors doing? Semiconductors turning back down. Okay, all the New York FANG index stocks pulling back. So if you sold into strength, congratulations. You don't want to buy the high of the day, especially with a lot of these at 100% ATR.
Oil and gold are both higher. Gold is gaining about $12.5. 25.38.
Okay, S&P back down to the lows. Okay, so we had our data out this morning. We're fading that information. Okay, moving lower.
We have a lot of stories. Of course, NVIDIA has been a big one. So if you can follow that with Jenny Horn, Marcus goes on in here on Stock Network. We've had headlines throughout this week, and now walk us through that and some of the thoughts that people are commenting on. Yeah, Nicole, after NVIDIA shed about 200.
Tesla pull back. All of the New York FANG index stocks pulling back. Okay, let's see what the MKTX at the highs. Tesla pulling back. United Airlines at highs. American Airlines just off the highs. Insulet, PODD, Insulet is just off the highs. Merck was looking very strong. Look for rejection at the 50-day. All right. Hormel had a gap down on earnings. That is up. That is Hormel, right? No, that's probably something else. HRL. No, that is Hormel. Okay, big move on Hormel. Wow, what a bounce in Hormel.
Interesting the way this is all played out. And of course, this was in response to that initial report we got from Bloomberg that said the DOJ had sent subpoenas to NVIDIA and other companies to determine if those companies had been using those NVIDIA chips exclusively or if NVIDIA makes it difficult for customers to switch to other suppliers. So I'm sure this is not the last we will hear of this. NVIDIA making a 1% move to the upside today. Actually, not enough to lift the overall market, which was still lower. So obviously, a brutal week.
Okay. Hormel, big bounce in Hormel. That gap down bigly yesterday, down to 29.20. Up almost 3% today. Hormel looks like it's headed back up in the opposite direction.
creative planning. Thank you for being here. Some of your thoughts on the big picture.
Yeah, thanks, Nicole, for having us. Really kind of the big picture, it's just, some of the key critical things for investors to think about is just where we've come from, even since that most recent bout of volatility we saw a couple weeks ago, the Japanese yen carry trade unwinding. It just reinforced what's always happened time and time again, markets, in that, traders, those kind of focus on greed or fear-driven decision-making are punished. We had this worst day for markets in several years, immediately followed by 4 or 5 of the best days we've seen here today. So,
Okay, I'm gonna have to take the son to school here shortly. Let me just update this banner.
days are always right on the heels of these terrible days. So keeping calm and carrying on is a key tenet of sound long-term investing.
Okay, we've got a little bounce.
And in this,
Sounds like a little short covering now.
9.7%, Nicole, they weren't even down 10%. This will fade into memory. It won't even be remembered in the record books as a true market correction. And so just keeping that in mind, especially for those with long-term investments.
Okay, I'll keep an eye on the S&P 500. All right, SMH back. SPX. Okay, looks like flat VWAP. Okay, we got a little liquidity grab there at an area of support. Okay. Let me just go to S&P. Okay, I'll drop my son off here. Let me go see what he's doing. I'll be right back.
Take advantage of it. Those will actually be great buying opportunities, and the data over the long run always wins out. That cash in the bank, it's great. It's making 5% right now, but as volatility presents itself, get that money working in the markets, because 100% of the time, cash underperforms stocks over a 20-year period. And so even those investors on the brink of retirement, you've probably got 20 years ahead of you. So keep calm and carry on and take advantage of that volatility as it manifests itself, because that's where the opportunities always come from, Nicole.
As investors, we're all watching the elections, and without putting political bias, just sort of, for example, I just saw a note that said Vice President Harris is looking at capital gains tax of 28% rather than the proposed 40% by President Biden. We're going to get a lot of different policies and such. Is there anything you're super focused on for the election when it comes to investing in the market?
Well, we are a planning-led organization, so obviously some of the taxation, the estate taxation is big on the election. But the key, is stepping back and letting the data drive the decision-making instead of the emotions. And, it's a great part of our democracy is that we can get fired up for elections, but the data doesn't support the rhetoric, and it never has. Obviously, most people are out there saying, don't let the elections drive decision-making. But you're still going to find these comments out there, these articles saying, well, the Harris administration is going to be good for X sector. Renewed Trump administration will be good for Y sector. But the historical data just doesn't support that. Again, take the Obama administration, Trump administration, and the 4 years of Biden administration. You say, oh, the Democratic policies would be really good for, renewable energies. But renewable energy did tremendously better under the Trump administration than either Obama or Biden. Whereas the exact opposite, say traditional energy, traditional banks, defense did much better under Obama and Biden. So even the rhetoric about what sectors are going to do better under each individual, presidential potential outcome, the historical data does not support that being a sound thesis for investment decision making.
Yeah. What about investing here? So, for example, I know you were focused on the yen carry trade for a while, as we all were. I think in the near term, that risk went away, but it sort of still stands. Before I get to sort of picking what to do with the portfolio, your thoughts on the yen carry trade?
Yeah, again, anyone that thinks there's a free lunch, there's no such thing in markets or in life. And that complacency that set in can punish those that were just trying to focus on the trade. And for the long-term investors, that opportunity to tax loss harvest, to rebalance is a market gift. But those that are thinking good times will never end, those thinking that there's opportunity without risk are completely being misled, just like they've been misled since people were selling tulips at insane prices in Holland, 350 years ago, Nicole.
Tell me about some investing strategies, some of your thoughts there.
Yeah, as far as, in investing, obviously a prudent diversified portfolio, obviously not putting all your eggs in one basket, taking advantage, making sure you're optimizing tax alpha, those taxable dollars, and rebalancing tax efficiency. Volatility as it manifests itself, take advantage of it. The yen trade we just talked about. Obviously, September has historically been the most volatile month for markets in history. So if there's some volatility that manifests itself in September, or any volatility that manifests itself with the upcoming elections, take advantage of it. Keep calm and carry on, but be unemotional. Take advantage of those opportunities. Obviously, we are big proponents of broadly diversified equity investing, not being overly concentrated in any one position. What was the S&P 500 has done extraordinarily well over the last 25 years. Cisco, the darling of last tech bubble, is still dramatically lower than its all-time high. So as long as you're not caught up with the individual names, you're going to do great. Diversifying into private markets, but diversifying in an appropriate way based on a risk profile. We have very much high conviction in the benefits, the risk-adjusted benefits that can provide to a portfolio, but doing it the right way, making sure your money's not tied up for decades and decades, making sure you're not focused on proprietary product. That's really been the thesis behind our investment strategy for the last 30 plus years, and that continues to be the correct path forward in our opinion, Nicole.
Jamie Batmer, thank you. Creative planning. Appreciate it.
Thanks, Nicole.
Plenty more to come here on Trading 360. Up next, it's the big three stocks, three charts, three trades. Then Lichtenstein goes to the technical. Joel Hawthorne of Trader Magazine will take us through the trades for DraftKings, Disney, and FedEx. We'll also have the CEOs of Tilray and C3AI. Don't miss it.
All right, I'm going to drop my son off at school. I'll be back in probably right around 12 o'clock. I'm your host, Cousin Vinny, coming to you from closingprint.com. It's Thursday, the 5th of September, 11:12 on the East Coast, the best coast. Yeah, I'll see you around 12 o'clock. Look for a pivot here. If we continue to move lower, don't forget sell call credit spreads overhead. You can use hedges. And I'll be back to reassess the markets around noon.
He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing,
1 p.m. Eastern, only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides. It's time for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. He will take us through the trades. Joel Hawthorne, head of equity research over at Retail Trader Magazine. Good to see you both. Joel, start with you, and you're looking at DraftKings. This is the NFL season's ready for kickoff. Love to hear more about your thoughts here on this one, where I think you're a little bullish.
Yeah, thanks for having me, Nicole. You know, one thing for certain, just kind of looking at DraftKings for a while here, this is a stock that I think has been really an interesting name just because we see so much in the headlines. They've been on a marketing blitz, not just as of lately, but for some time now, just with, just all the sports that we've seen here overall. And this is a name that appears to be very attractive. Right now, we're looking, take a peek at the chart. We're looking at a high here of about 64.58. And right now, we've seen it spike today about 35 and change. Getting a bit of a pullback right now, up only about 35 cents on the day. But I am a bull in this name. I think that this name here is one of the most popular in their sector. And I think they're going to continue to have just a lot of eyes and a lot of information coming out of this name. So I'm very bullish here on the name in the short term.
Yeah, and look, fundamentally, I think there's definitely been lots of statistics showing the growth of gambling and gambling online and making bets and all that. Let's see what Ben says, please. Ben, good morning to you, and take a look at the charts, please.
Yeah, I like the bullish stance on this one. Starting to pull back a little bit today, but I think across multiple time frames, we're seeing a bit of a situation where the bulls remain in charge here. Migration of value to the upside on the 1 minute candle time frame is what stood out to me as I looked at the more granular price activity. As I mentioned, we've started to roll over a bit, but still holding about 34.30. That's the line in the sand, and trying to trade the 1 minute time frame is difficult already. So let's take a step back and just sort of add a bit of time on. We're now looking at 30-minute candle charts and similar pattern. High conviction, balance, which is forming. So again, a bullish scenario playing out, one where it appears as if the longs are in charge here. You're seeing consolidation around 34.50. And as I take a look at the longer term chart, a very similar pattern. Again, Nicole, trend up, bottom left, top right. We're talking about a balance area that's forming around the $37 level right now. And yeah, once we get through that area, we could open up a door for a retest. We're kind of in this random phase of price activity where it's not really exhibiting a lot of conviction, but again, giving the benefit of the doubt to the bulls just with this longer term trend still intact.
Yeah, understood. You look, I mean, when you see that high, not that long ago, when you see that, Joel, final thoughts here.
Sure. Want to be a bull, going to use some options to do so. Going to sell the 31 put, buy the actual 30 put, and both are going to expire October 18th. Collect the credit of about 22 cents, break even 30.79. So definitely looking for an opportunity here to use options to get long. Hopefully we continue to have this upward trajectory in this name, and I'm able to keep the option premium that I collect.
Yeah, and it's worth noting here that Needham, UBS, and Susquehanna all had buy ratings in the last 24 hours. Basically, UBS has a $58 target, up from 56. Susquehanna raised its price target to $48, and Needham has the buy and a $60 target on the higher end. Let's get to Disney here. Some of your thoughts on this name.
This is one I was hoping to get some input. Ben's opinion. Disney has been a name that I know has been in the news for quite a bit this year, and I think that some of it is just for the reasons of just the stock itself. The chart looks very brutal when we look at a daily chart for the 1 year. I think the 52-week high is about 123, currently trading 88, and gets under pressure. But I want to be a buyer. I want to see if this is a name that can kind of get its footing under itself, and hopefully maybe get a bounce here. So I want to be a bull, but I definitely was excited to talk about this one with Ben today.
Right. Okay. Look, it's well off its highs of 123, but just that pattern, the gaps down after earnings, a little brutal here. And while year to date it's only down 1.5%, it looks like nothing happened. I mean, you can note that in 3 months it's down 12.5%, 6 months down 20%. So that shows you the selling that we've seen. Ben?
Yeah, across multiple time frames, trending lower. So I'm not necessarily going to subscribe to the bullish narrative here. This is a chart that's been a tough one if you've been holding on to this stock. Shares of DIS have been coming off for a while now. I will give Joel this. We've found a bit of support at a key area, which we just tested, and we could see a little bit of price activity the upside and still stay within this kind of random range-bound contained price activity we're seeing, but we're we're still in a trend environment to the downside until we take out key levels to the upside. Let's establish what those are. First and foremost, on the 5-minute candle chart, until we get above 91.60, we're seeing a bearish pattern play out where value is forming at lower and lower levels, currently in this consolidation phase around 89.50. Now, again, you're going to see we're not really breaking out to the downside any further, right? We're still just kind of overlapping rotational and sideways. But as we step back, you're going to notice that moving from into a 4-hour candle chart, a similar pattern. High conviction, trend lower. We're talking now 4 areas of consolidation where the market's paused and kind of continued on this path lower, currently bouncing around 89. So on this 4-hour candle chart, the line in the sand is around 96. The bears are expecting to see continuation on the downside as long as we hold below that level. Let's take one more step back, because here you're going to see another bearish pattern. But this is what I was talking about. We just recently tested this, we'll call it $80, $90 level. You can see there's been some support there in the past where we struggled to get down below with follow through. At this point here, though, still in this balance. Now, random price activity lends itself to potentially a retest of the upper extreme of this range as well. But I'm giving the benefit of the doubt to the bears here, looking for sell-side short opportunities within this downtrend that we're seeing here, not necessarily long-sided opportunities. But again, in this situation, if you're trading with the trend, you're able to let the market do the work for you. If you're taking the bullish long side, as Joel is, you got to be quick, right? You got to be willing to take advantage of some price activity within this balance that's formed.
Yeah, understood. Any final thoughts here on this one, Joel?
Yeah, I agree with Ben. I definitely think some of the lower price actions are concerned. That's definitely kind of my thesis as well. Looking for a long-term hold in this name, more of a bit of something to add to the portfolio because it's been so weathered and beaten down. I would love to get a price entry anywhere near or below 85. We're currently trading at 88 and change, so maybe a little bit of a pullback. Maybe even in a perfect world, if we even revisit the most recent lows of like 83.91-ish level, would be something more attractive to me. But definitely looking to pick up some shares and really benefit from it paying a dividend and a long-term hold. So that's my theory on Disney, and just kind of put it in a portfolio, close my eyes, and let it go.
Right. All right. So last but not least here, we're watching FedEx, where you're feeling a little bearish. We often use this as an economic indicator. Are you feeling like we could be seeing a slowdown or worse, a recession?
You know, right now, I think we all right now are, well, for myself, I'm more of a short-term trader. And I think some of the recent market activity has been a bit, if you would, a bit unsettling. And I think so right now, going into the later months, we have so much other news and events coming up, like the election, et cetera. Obviously, we're anticipating the rate cut. I think one of the bigger narratives is just that, right? How some of the logistic companies like a FedEx is going to respond and how they're going to act. They have earnings coming up pretty soon. I think that's going to be a bigger narrative as well, something a lot of people aren't talking about. I am a bear here because I think that 313 of that high for the year is a bit far away for us to revisit. Currently trading 286 or 285, currently down over 2% on the day. I think there's more weakness to come. And if that is to be true, I think that's going to affect the overall market and may add a bit of a knee-jerk reaction. So I do want to be a bear here. I'm going to be using options to do so. But again, this is one that watching very closely. And short term, definitely bearish. But, that can change because the market has been very topsy-turvy, if you will.
Yeah. And boy, is this a choppy stock on earnings, though the last couple have gapped higher, which was good news as opposed to prior, earlier in the year. Let's see what Ben says about the technicals, please, Ben.
Yeah, Nicole, Joel and I definitely aren't necessarily seeing eye to eye on these stocks here today, but I will go with what he's talking about in terms of the short term. We could see some potential weakness because we're in a bit of a random phase right now, and a longer term trend of downside. But while in this random phase, there's actually kind of both sides at play here. So there is opportunity within that for counter trend trades. Just again, you got to be kind of fast, right? You got to have your head on a swivel. Let me show you what I'm talking about in terms of trend up across multiple time frames. I started off with a bigger picture, longer term look at price activity here. You can see the hourly candles, 2 areas of balance and form. We're talking about a really well-defined example of what we like to look for, that easily identifiable separation, the horizontal phase, the transition of the vertical where the market's seeking value higher, It's found it, simply put, around this 295 level. Joel mentioned 313. That is a ways off, and we are, again, in this random phase. We're talking about a wide range, 275 up to 313. What's that? $38 worth of range. I mean, there's opportunity within that, again, to play both sides. But if you're leaning with the trend or trading in the direction of it, then you're favoring long-sided positions here, because you can see the high conviction move up that we saw into the spring of last year. We're talking sideways consolidation in the fall. Beginning of this year, same thing. We broke out into April, May, June. We built up some momentum, and we've been sideways since July, hanging out around 295. As long as we're above 260, you can see a bullish pattern. And even as you look off to the left side of the screen, I just drew this as one big move up, but you can see this pattern repeats itself multiple times. High conviction, sideways consolidation, staircase type pattern, wash, rinse, repeat. Even in that high conviction move up, you see this again playing out, and that's why I lean on these theories, these concepts, these principles that we're in one of two phases of development, either in that horizontal phase or in a high conviction vertical phase where you break out and then you transition into the next. But you can see we're still holding above the pivot line on the weekly candle charts. We've added quite a bit of time on. 200's where that is at, but stalling out around 319. So yeah, look at even in this wide range here, Nicole, you can see we're talking about the pandemic lows around 100 all the way up to 300, $220 of range to play both sides. If you're looking at this weekly candle chart, we roll over, take out 200. Yeah, we could see some further price decay, but again, still be in this longer term trend up.
Okay. Any final thoughts here, Joel?
Absolutely. This is another options play for me. Gonna sell the 290s simultaneously behind the 290 250s. Both strikes, both expire September 13th, which would be next Friday. So this is definitely just a trade, a short-term trade for me, if you would. Credit up about $1.06. Break even is 291.06. So currently trading 285.37. This one is currently looking very pretty for me at the moment. Going to continue to let this one ride out, and we'll see what happens. But right now, I'm sitting well with this position right here. Again, short-term weakness, just a short-term trade, a short-term bearish, and looking for the opportunity to keep the premium that I'm collecting.
Yeah, great to see you both. Thank you so much for the big three today. Joel Hawthorne, Retail Trader Magazine, and Ben Lichtenstein. Coming up next, we have a special guest. We're going to spotlight Tilray Brands. The company recently announced acquisitions of breweries from Molson Coors, leading to rising beverage sales in the latest quarter. The president and CEO of Tilray Brands will join us to talk about that acquisition and discuss the outlook for the current quarter, as well as cannabis, of course. We'll be right back here on Trading 360.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. It's time to spotlight special guests and a special company, and that is Tilray Brands, cannabis, beverages, right? They recently announced an acquisition of craft brands and breweries from Molson Coors, leading to its place as the 5th largest U.S. craft brewer. So when we think of Tilray, it's not just cannabis anymore, it's also beer and more. So let's have a great conversation now with Irwin D. Simon, Chairman, CEO at Tilray Brands. Thanks for being with us. Very interesting to hear about the evolution of Tilray and what you're doing here. Did this come because you got tired of waiting for more and more legalization of cannabis in the States? I mean, what brought this on?
So, Nicole, good morning. How are you? Thank you for having me on. Listen, when I took this company over in 2019, Tilray was about a $50 million cannabis business. And, cannabis from a recreational standpoint is only legal. The only country is Canada. There's another 19 countries where medical cannabis is. In the U.S., it's not legal from a federal standpoint. So my focus originally was, how do you get Canada right? Canada, is a country of about 40 million people. And with that, how big could cannabis be in Canada? And, today Tilray is number one in recreational cannabis in Canada and is a big player in medical cannabis and a big player within the drinks and flower business. So how do we grow and become a global company? Well, we being a NASDAQ traded company, we can't do anything in cannabis in the U.S. So what are the adjacencies and how do you diversify yourself? And in 2020, we bought Sweetwater Brewery because it had the brand 420. That was our first entry into the beer business. So just think back in 2020, we bought Sweetwater. Along comes COVID, all on premise closed down, but still, we focused on the beer business, growing the beer business. And, then we went on to buy Breckenridge, we went on to buy Montauk and many others. So today, we sell close to 15 million cases of beer a year. For the 5th largest craft brewer within the U.S. And thank God, because this year when we announced our guidance, between $950 to $1 billion in size, with our being a diversification company for us, our spirits, our beer business, and our Manitoba Harvest business is a big part of our growth strategy. And, with the government not legalizing cannabis in the U.S., we would have been stuck. And thank God we did what we did.
Oh, yeah. I mean, you can't say that any better, and you don't have to toot your own horn. I agree with you. I mean, especially during 2020, there wouldn't have been any federal work being done on legalization of cannabis. I mean, everybody was sort of hold it. Nothing was happening, so it was a good thing you started in on the beers. What's interesting is you talk about 15 million cases and 30% growth in these accounts. It makes me wonder, and I love your vision about how you really want to be more and more global. Does this become ultimately a brewery company? You're not going to forget your cannabis roots, are you?
Listen, I come back and say this here. On the other hand, what we hear about today is cannabis cannibalizing the spirits in the beer industry. So with that, hopefully, whoever the next president and vice president of the United States is, and there's, talk coming out of the Trump camp, there's talk coming out of the Harris camp of what legalization could look like. Absolutely not. Cannabis, I think there's a tremendous market. You go back and look at the Canadian market today, which is about a $5 billion market retail. They say it's going to go to a $10 billion market at retail. So if you come back and look at the U.S. on legalization, that ever happened, there's a $100 billion opportunity there. So that is not an opportunity I'm running away from so quickly. On the other hand, I think the opportunity in the beer business is tremendous, okay? The craft beer business, there's change needed. And with that, how do you make beer fun, cool again? And there's a big beer market out there, and there's a big beverage market. So Tilray's going to play in the beverage market. We're going to play in the spirits market. And in Europe, we're going to play within the medical cannabis business.
a reclassification of cannabis from a category 1 to a 3, right? The 1 would be more for like heroin and 3 less dangerous level, but that still hasn't been, while it's been proposed and moving forward, hasn't been done yet, right?
And crazy, Nicole, because, you know, everybody is recommending it. It was supposed to happen. Now the football's been kicked down the field till December 2nd or 3rd for more hearings. And that's why, again, what our politicians are missing out here is all these tax dollars that are not being collected. There's so much confusion out there. Cannabis is legal in 27 states, recreational, 35 states in regards to medical. You know, it's on the ballot in Florida this year. You know, Americans want cannabis legalized. So ultimately, we got to do something about it.
We actually saw some of the ETFs around cannabis jump yesterday when there was talk about President Trump on a former president candidate Trump talking about cannabis, and that would go to the states themselves and the legalization, let's say, and those stocks jumped yesterday. Do you like that? Do you like that the states will be able to decide? Why did the stocks jump, in your opinion?
So I think the stocks jump because of hope, but you know, every time we talk about it and there's hope, stocks jump, and when something doesn't happen, stocks decline. You know, it's interesting. When originally I in the beer business, I thought, hey, I'm going to lose my cannabis multiple. But right now, you know, even though only a third of our sales come from cannabis, we still get a cannabis multiple. But I think that, again, it's just a disappointment. The other big thing out there, Nicole, is this here. There's a lot of hedge funds and institutions that will not invest, you know, in our companies because they're just not able to because of cannabis, because of legal and safe thing. So that has to change dramatically. If you come back and look at Tilray today, and I love our retail shareholders, and they're great shareholders to have. Probably about 80% of our shareholders today are retail shareholders.
It's evident that you have growth in your beer industry here, as you noted. Are you seeing growth in the cannabis industry? I mean, how do you quantify? Is it slower growth? Is it?
Listen, we are absolutely seeing growth in Canada. What happened in Canada is a couple of things. Number one, when it legalized in 2018, I think the Canadian government, you know, really didn't put the right procedures in place, processes in place. They handed over 2,000 licenses, and ultimately, you know, each one cannibalized the other one. The second is we had horrendous price compression there, which Tilray itself, we lost about $200 million in price, which ultimately just drops our bottom line. The worst is the Canadian government put in place that you pay $1 per gram, not based on a percentage, not based on a price. So today, Tilray pays about $150 million Canadian in excise tax. So listen, the Canadian government today is the richest cannabis company out there today because they probably get $700-800 million coming in taxes from cannabis. So with that, ultimately, it's the only country in the world that's legal, but there's a lot of change got to happen in Canada. But we are growing in Canada. That's the good news.
Yeah. Okay. And that's the takeaway. You know, what was interesting from the early 2000s to COVID and beyond, I think it was in 2022, that spirits really picked up, right? I'm talking about not beer, right? And that, you know, that tequila and whiskey and all of that has really picked up so much so I think there was even one stat that it was equal to or more than beer. But beer has been steady. It has been a winner over time. Do you feel that you need to have a footprint in spirits as well? Will you be looking to that? Because that has been an area of growth. I mean, sort of the fun concoctions are back. Young people are back to making fun drinks. It's sort of a thing.
So we do have, you know, a position there with our Breckenridge distillery. We have our bourbon business. We have a vodka and a gin business. And, you know, we bought that about 2.5 years ago. Nice business for us. And, you know, we look to grow that to about $100 million in sales. But what's happening with spirits today, I think, you know, as people are on a lot of these weight loss drugs, and spirits is an area where they give up. And what we're trying to do in regards to beer, you know, from a price point, spirits become very, very expensive. Beer is a much cheaper product to drink today. And I think, again, what millennials and Gen Z are looking to do is drink beers that their parents didn't drink. So we're looking at big time from an innovation standpoint. We've launched a lot in the non-alc area, a lot in the light area. You know, we launched a product called gummies and our 420 products that don't have any THC in it. And we're about to launch hemp-infused products. So innovation is key here. And what Tilray has is 500 beer distributors out there that can drive products to the shelf. Now, through social media, we got to drive consumption. So that's a big thing for us. The other thing is taking our bourbon business, which everybody loves bourbon today, taking our vodka and our gin business, and how do we grow that? Listen, we also have big opportunities internationally. Today we have a good-sized medical business that we sell in probably 18, 19 countries internationally. We have a distribution business that sells medicines based in Germany. So Tilray today is a global, company that sells in over 20 countries and, has over 25 brands that it sells around the world.
Sounds like it's only the beginning of a lot more to come.
We're different than any other company. Not many companies out there today sell beer, cannabis, and spirits and some food. So we're different, we're fun, you're unique, and we got some great brands. So watch out.
All right, we'll watch out and come back soon with any updates. Irwin Simon, Chairman and CEO, Tilray Brands. Thank you so much. Coming up next, we'll focus on C3 AI. Fresh off the earnings from last night, CEO standing by and will join us to talk about the report and the outlook for AI. We'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. AI has been all the rage, but what happened recently? Have we taken a pause? Where's the competitive landscape? C3 AI, technology company specializing in this enterprise of artificial intelligence, went public back in 2020, reported its earnings last night. So let's break down that report, get an outlook as well. Tom Siebel is with us, CEO, C3 AI. So glad you're here, Tom. Thanks for being here. So at this point now, obviously we've seen fluctuations in what's been going on. How would you describe the last quarter?
Last quarter I'd describe it as a great quarter, 21% year-over-year revenue growth. That would make us one of the fastest growing companies in the public software universe. I think our transaction volume was up, contract volume was up, I think 121%. Generative AI business up. Business was cash positive. We exceeded virtually, every metric that we could succeed at. So I think it was a great quarter.
Look, I know that you were quoted as saying the last quarter, maybe there was a misunderstanding. What part of what people expected and what part of what you delivered, which you described as a great quarter, would you actually say was the biggest misunderstanding of all?
I think there's some confusion around professional services revenue. I think that our professional services revenue was a little higher in the mix. So there's two line items in revenue. We have subscription and we have professional services. And the professional services, we guide professional services to be between 10 and 20% of our revenue. I think it was 16, but that was a little higher than people expected. Now, I think the confusion is around when people think of professional services, they think of consulting services like what Accenture does or what I think Palantir does. Okay, and they're really looking for companies like us to be in the license business. What they don't understand is that over 70% of that professional services revenue were in fact software licenses. It was software code, compiled code delivered to our customers as part of our production product that they use, products that they use over the lifetime of the agreement. So the great majority is, in the old days, that would be characterized as license revenue. Now under ASC 606, there's some technical reasons why you characterize that particular kind of work as professional services, but it is in fact software. So I think there's a little bit of confusion around that.
Well, I'm glad you had the moment here to explain that to folks, because sometimes people are taken aback when they see a double-digit loss, though that has become quite the norm here on Wall Street after earnings, right? We'll see the double-digit win, double-digit loss. There's a lot of volatility, no doubt. But you think that the company is really actually in the perfect position after nearly 2 decades of doing this, right? You're the founder, to get that AI spend, right? To capture when people want to spend, when these companies want to spend, they're going to do it with C3 AI, right? What do they want to grow with you and spend on?
To be clear, our loss was much less than the market expected, so there was no surprise there. The cash was more positive than the market expected. That being said, I mean, this C3 AI is the original enterprise AI company. We began in 2009. This would be before the GPU, before the Azure, before the Google Cloud, before any of this happened. We spent billions of dollars building this AI platform, and now 90 turnkey enterprise AI applications. And now, 15 years later, enterprise AI is at the tip of everyone's tongue and the top of everyone's agenda. And C3 AI is extraordinarily well positioned to deliver solutions into that market demand.
And when you think about the competitive landscape, Palantir comes to mind, but in the world of the U.S. Defense, Department of Defense and contracts and like with that, what do you foresee for C3 AI there?
Well, I think, as I recall, I think the defense and the intelligence community, that was about 30% of our bookings in the quarter. So that's a very healthy business. I would say the competitor to C3 AI is build it yourself out of piece parts that they will get from the hyperscalers like Google Cloud, Azure, and AWS. That being said, also, these are our largest partners. 71% of our contracts in the quarter we closed in partnership, joint marketing, joint selling with GCP, AWS, and Azure. So, in the long run, companies, once we get into new markets, whether it's ERP, CRM, relational database, everybody tries to build that stuff themselves. Nobody succeeds. Everybody tries to build enterprise AI applications. It all comes crashing down around them. And after it comes crashing down around them, we come in and bring them live.
And I think about the path to profitability. I'd like to hear more about that. And you have strategic partnerships with some of the real big guys, right? Like Microsoft and Adobe and such. Tell me about, is it almost good to be this sort of underdog and up and comer? Even I know you've been doing this for a long time, but this way everybody will know C3 AI going forward.
Well, I think there's a clear path to profitability. So we were cash positive last quarter. We're cash positive this quarter. We expect to be cash positive this year. Our gross margins are very healthy. Our revenue growth rates have been exceeding our expense growth rates now, and we expect them to continue to exceed revenue growth rates, to exceed our expense growth rates generally in the quarters going forward. So now it's just all a matter of time and scale that we cross over into non-GAAP profitable business. That being said, we have $750 million in the bank. We watch our cash very carefully, and so we have a very well-capitalized company. And I think we're extraordinarily well positioned to build a cash positive, profitable, rapidly growing, market-leading enterprise AI company.
And so at this point, I like hearing that for you, and seeing obviously those cash flows being positive and the gross margins exceeding some of the expenses. I mean, we've heard from Intel, I'm just making it a tech story, just the extensive cost cutting that they've had to do. You mentioned cutting costs. How difficult is that for you?
No, we've been managing costs, and we've been managing costs carefully, and that resulted in a cash positive business last quarter and a surprisingly cash positive business this quarter as it relates to the market expectations. So while we are managing our costs, make no mistake, we are not cutting costs. We are investing in growth. We're investing in market share, investing in sales, investing in support capacity, and investing in technology leadership. And we're doing this in Europe, North America, South America, the federal space, and in Asia. We are investing in growth.
A technology leader, no doubt. And thank you for that clarification, Tom. It's wonderful to see you. I'm glad you were on with us today. Thank you for coming back on, and we'll see you again soon. Tom Siebel, CEO, founder at C3AI. Thanks, Tom.
Thank you, Nicole.
Coming up next, our 360 round, all about the EVs, right? You heard about Tesla's full self-driving, that's going to be a real thing in China and Europe. And of course, the robo-taxi event and all those other names in the EV space. We got a lot to discuss. We'll be right back.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Download the Schwab Network app and join us to follow all the market trends. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Trading 360. It's time for our 360 round. We love to talk about these electric vehicles, right? There's always updates, always lots of news. And for that, we bring in our panel right now. Joining me, Steve Wesley, founder, managing partner of the Wesley Group. It's good to see you. Glad you're here. I mean, are you excited when you're hearing about Tesla and full self-driving in Europe and China in the first quarter of 2025? I mean, that feels like next week.
It is like next week. Look, it is a whole new world. Everybody's beginning to realize EVs are coming, and they're coming fast. If you look at the US, 18% of all cars sold this year will be EV or hybrid. Europe, it's a little over 20% already. But in China, it's over 50%. So this is a whole new world. The big question is, how soon can the US catch up with China on EVs? Their vehicles are heavily subsidized. The good news is battery costs are coming down. EVs are getting cheaper every month. You will see by the end of the year, the green premium, the extra cost you had to pay to get an EV is gone. EVs are going to cost less than ICE engine vehicles for the rest of our lives. Now the big question is, who rolls out full self-driving first? Tesla has had some fits and starts, but they're getting close. We're going to hear a lot more on October 8th.
You mean October? Is it October 10th? It was 8/8 and then 10/10. Is that right?
I think you're correct. 10/10.
So anyhow, in October, you're 100% correct, Steve. Hatem Diab, managing partner, Gerber Kawasaki Wealth Investment Management. It's undeniable. You always said, you were trimming on Tesla at the right time. Tesla got really beaten down, but then we've seen a comeback. We've seen it up about 30% in 3 months. And I know you still held some stock. You didn't sell it all. What say you now about Tesla?
Well, I think, listen, the idea that
I think what Steve has just said about EVs at 50% in China and only 10% in the US and Europe is really gives you how much potential Tesla can have by selling more EVs around the world. The problem is the valuations that we see in Tesla is the valuations of a software company. And I think what Elon has done this year is like refocus on the robotaxi, refocus on FSDs, because he wants us to think of Tesla as a software company. And if we don't see them really execute, if we don't see them kind of come up with FSD in a way that is maybe a 4 or 3 or 4 at least, for autonomy standpoint, I think Tesla will have some issues.
Yeah, Gordon Johnson, who has been a guest here and is a notorious bear on Tesla, he actually said there's a formula. When Tesla doesn't give great numbers, they come out with the full self-driving rhetoric, and they say if it's approved, and then it fails. It's sort of like this pump-up, overused tactic that is actually a meaningless announcement. Steve, what would you say to Gordon Johnson and the bears out there?
Look, Gordon's a little bearish out there, but the facts are the facts. Tesla's been consistently late in bringing full self-driving to market, and that is a problem. The flip side is they just have a different strategy from Waymo. Give Waymo some credit. They said, we're going to tackle one city at a time. We're going to do it well. We're going to start in geo-fenced areas. We're going to make sure we don't have too many mistakes. But most importantly, we're going to get government approvals. They now have government approvals to operate San Francisco, Los Angeles, Phoenix, Austin. They're growing, and they're growing pretty quickly. Elon never wanted to shy away from the risk and said, look, we have more experience than anybody. Everybody who drives a Tesla with self-driving features, including me and the sensors, they're capturing more data than anyone. And we're going to flip the switch nationally and perhaps globally all at once. I'm not sure that's the best strategy. They aren't close to getting government approvals anywhere. And right now, it looks a little scary because Waymo has government approvals. Tesla doesn't. The question is, how close are they to having not 99 or 99.9% safety, but the 99.999? It doesn't feel like it's going to be here this year or in the first half of next year. It feels like they're falling behind. That puts real pressure on them because Tesla is between two waves of vehicles. They need to get new cars in the market, and they're late on that, or they need to get closer to flipping the switch. We're going to find out a lot on October 10th. Tesla could be looking at 2 more pretty slow quarters in my book. We're going to see if Elon can pull a rabbit out of the hat in a few weeks.
Look, and I know you have BYD as a real grower and a potential dominant player in EV space. NIO also, by the way, had a beat on earnings per share deliveries. The loss narrowed, the revenue rose. That's been a winner. That's up about 10% today. And Hatem, I'll give you the open floor to talk about any one of these companies that you want to mention. I will say also, what if Trump wins and then Elon Musk is on his team sort of going after the federal agencies for too much regulation? Do you sell Tesla then? Because maybe Elon's distracted. You get the last few seconds, and please be quick. Hatem.
Yeah, I'd add to that pending government approval point is really a big one because Elon is not very liked in Europe. And with FSD, and I don't know how far along they are. But also more importantly, we had that election here in the US, and if the IRA is gone, which is really helping all EVs with the Trump victory, that may be very, very problematic for the whole supply chain for the EV sector. So those are things that are very important, and Elon has been supporting of Trump all along. So I think as investors and shareholders, everyone doesn't understand what is the strategy there.
What's your favorite EV maker these days, Hatem? You get 1 second.
I like Rivian. I know it's a speculative play because the company is not really making any money and they're only selling 50,000 cars, but I know I like the product.
Hatem, yeah. BYD. A great conversation. Oh, and your BYD. I said that one. I knew it. Good to see you both. Thank you for being with us here on Trading 360. A good conversation. Schwab Network, get that app in the Apple App Store. I'm Nicole Fedelides. I'll see you at 2 p.m. Join me then. Keep it right here. Fast Market is next.
This election season, stay out of the muck and the mudslinging. Schwab Network's by the numbers coverage of the presidential cycle.
how could this election impact your financial future?
Next week is going to be a crazy political week. Election trades are fraught with risk.
No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed, stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important.
I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector.
Now there's a market for every single one of these people. There's a market for you. Market Overtime on the Schwab Network. Thanks for tuning in.
All right, we continue to fade S&P. Below 5,500 support.
Good afternoon, traders, and welcome to Fast Market here on the Schwab
Okay, let's see what's going on here. Charl.
strategies. We'll take a look at Broadcom, which is up about 38% so far this year into their earnings after the close, and Boeing, which is down about 7% so far this week after a major downgrade on Tuesday. And like Foley will break down consumer sentiment data in DocuSign, the e-signature stock, down a modest 4% so far this year into their quarterly report after the close. Now let's take a look at the major indices, which are near session lows. We had another rollover here today. The S&P 500 down 0.6%. The Dow Jones Industrial Average off nearly 370 points. NASDAQ 100 down 0.4%. After being up over 0.5% earlier on in the session. And the Russell 2000, the small caps down nearly 0.9%.
Okay. So let's take a look at what's working in the evening session.
Choppy session here today, and it's getting to be that way. I know September's historically volatile. We've got a lot of data to go through today.
Okay, so S&P, the Dow Jones rather. Merck is still looking very strong. It's off the highs of the day. So if you like Merck, you get looking for an ABCD pattern. Okay, so you're looking for a little bit of a dip. It doesn't look like it wants to dip very much at this point. But we're off the highs of the session on Merck. Looks like that could follow through. Amazon is up $3.84, but off the highs of the session. Okay. Sellers into strength.
we got any clear message from today's economic data. That said, tomorrow is always a big day. It's always a big day for bonds. It doesn't always correlate to a big day for stocks, but bonds will always move, and therefore something will happen. But I think actually, Tom, how about this?
All right, what's Tesla doing? Tesla, I want to sell more put credit spreads on Tesla. Okay, there we go. Tesla getting a turn here. You might want to try a long on Tesla. Tesla, let's see, for tomorrow's verticals. Okay, what about at the money? 225, 227, 227.50. 227.50, perhaps 232. Sell the 232. What is that? $1.90 debit. Looking for a bounce in Tesla and a follow through. Looking for Tesla to follow through and push higher. Tesla, I'd like to sell more of these put credit spreads. Long here looks pretty good on Tesla.
Director of Derivatives at the Schwab Center for Financial Research. Hey, give me your take here because I'm seeing the SP 500.
Tesla looks good. Looking for a follow through.
Yeah, it's really been quite a shift as we moved into September just this week. There's a lot of.
Okay, maybe a put credit down here. Let's see. What do I have already? I have 2 weeks out, I think. Tesla puts 185, 190, October 4th. Okay. Tesla puts
It looks like this recent kind of pullback from the 50th
September, 1 week out.
The right shoulder on a Head and Shoulders top. The neckline is 42.90. So that's what you want to keep an eye on if
Delta is a 20, 212. What about a 15? 16 Delta?
Which would have given you, there's the stocks. If you look at what this pullback that we see at the right side of the chart, that looks to me like a Head and Shoulders top. The neckline there is at 42.90. And if you're asking, hey, can a Head and Shoulders top be double-headed? The answer is yes. And that double-headed
Okay, so a week out.
Was also met with a negative in the RSI. So back to NVIDIA and the semiconductors, which have been a leader for so long, why is NVIDIA not seeing the type of respect after such a big sell-off and the fact that, they came out and said that report was inaccurate? So lousy price action there. In terms of the semiconductors, ASML also got a downgrade today, citing deceleration of
200, 190.
Past 2025 by UBS.
Tesla.
Next, look at oil. What's going on with oil in terms of a key support level?
200 is below the 50, below the 200 day.
Look at Bitcoin. Price action in Bitcoin has been lousy as well. That's kind of a risk-on type of a proxy.
Okay, looking for the S&P to bounce as well. We got yellow histogram bars coming off the low of the day.
Yields are around 2-year lows. The lower the yield, that's kind of signaling potentially some growth concerns that the bonds are sending that message as well. And then lastly, I'll just throw as a bogey, don't take your eye off the yen. It's about to, it looks like, break out.
Okay, CrowdStrike again. Let's see. Let me just mark this up here. I'm looking at Tesla.
There's a lot of headwinds.
Tesla.
A lot of volatility. You mentioned the yields falling, and everybody keeps talking about, hey, we want the yields to go down, but I think you're seeing that push, Kevin, into bonds.
September 20th.
Nate mentioned all those risk assets that are starting to cave in. Lower yields.
Okay, watch Tesla. S&P is trying to turn. We'll get some shorts to cover. Tesla starting to bounce. Tesla. Looks like a B pivot. Here's A up here. Here's B. Looking for an ABCD pattern on Tesla at the moment. Let's see how far this goes. Okay.
On the 10-year.
Let's see if we get back to VWAP.
Unless the Fed funds rate is going to come crashing down. Now, I don't know. I mean, you and I were talking before on the air about Nick Timmermans put out a really cool thing that some inflation is starting to firm up here. The wages data tomorrow is supposed to tick higher, actually, month over month and year over year. So careful here that you're not going to get whipsawed and you know, we could have a big bond sell-off here if some of this inflation data firms up. And if the Fed speakers keep coming out saying, we think 25 basis points is the right play. And then what, right? On the 18th, what does Jerome Powell say about future? So there's a lot going on. The bond market looks like it's a little overcooked on the upside for notes and the downside for yields.
Yeah, and I think if you know, people are using it, I think as a safety play. Sure. The Fed's daily came out and she said, "Hey, we need to start cutting rates to protect the jobs market." Jobless claims are they're pretty solid.
Don't disagree with that. A maintenance cut, I understand. The problem is now that the discussion around 50 basis points versus 25. There's still a lot of data coming out. We still have a CPI and PPI data before the meeting, right. The Fed meeting. So there's a fair amount of data coming out. Tomorrow's data is pretty important, though. Like I said, the overall level of implied volatility, it may get less uncertain tomorrow. That's, by definition, I was a salmon in another life, I'm pretty sure. So I'm always looking at the other side. And the trend in the VIX right now is higher, because I think uncertainty is surrounding this market. I think tomorrow the market may be less uncertain, and therefore watch the VIX and what it does tomorrow.
Yeah, the number. And those odds of a 50 basis point cut have been rising. They're about nearly 40% right now.
Yeah.
But, Nate, I said this earlier in the week that, hey, a 50 basis point cut might create that shock to the markets that maybe they're expecting at this point where, hey, maybe things aren't as good as we think they are, and jobs. That data that comes out tomorrow, they're expecting anywhere from about 160 to 170,000 jobs created or added. That's going to be the number that people are going to focus on. So maybe the VIX is warranted to be at the 21 level here.
Yeah, it is. I mean, especially look at, we had an over 2% down day in the S&P 500. So, a 1%.
Let's see, scalar.
So, the VIX is just kind of telling you, hey, vol kind of woke up a little bit as we, turn the calendar month. And if we're going to get 50, it's going to be if we get like basically a sub 100K, a non-farm payrolls print tomorrow. And the market's likely not going to like that at all if that were to come in. Now, having said that, you guys mentioned the initial claims. If you look over the past 4 or 5 weeks, they look great. They've come in below estimates. We're well off that 11-month high of 249K that we got at the end of July. I think if you're bullish, what you want tomorrow, we could get a relief rally if we get non-farm payrolls. I think 161K is the estimate. Give us an inline. Give us a 1/10 downtick on the unemployment rate from 4.3 to 4.2. Give us inline wages, and I think we would get a relief rally. On the flip side, if ADP is being some kind of
Okay, we continue to show fade at the moment. S&P. Okay, let's look at the NASDAQ 100, see how it's doing. Okay, there's only about 20 stocks green on the day. About 80% are red, so that makes sense. Let's see. Let's look at the NASDAQ. All right, let's look at the Russell 2000. Russell 2000. Okay, we got mostly declining, 1,215 stocks declining, 470 advancing on the Russell 2000. So mostly sellers. NASDAQ 100. NASDAQ 100, we've got 79 declining, 22 advancing. Bearish fade. Let's look at the S&P 500. S&P 500, 420 declining, 80 advancing. So the edge is with the bears for now. not surprising. So what I'd be doing is selling overhead calls on things like, the indices like semiconductors. Let's see, semis, semiconductors. I'd be looking to sell more of these. Okay. I'm looking to sell more of these 245, 250s. Initially, that was $1 credit. That was on Tuesday. Last 2 days, just sitting down here at the lows, says selling. They keep selling the high of the day. We got mostly declining stocks. The majority of stocks are declining versus advancing. So probably see more of this selling into strength.
Now, maintenance cuts to it, I think, are warranted. I understand, but just be careful because inflation may rest at a much higher level than it was resting before.
Yeah, and we haven't seen the decreases that we've seen previously. It's basically kind of flatlined, even though it's
NVIDIA,
in the core.
watching NVIDIA, trying to hold on to VWAP, NVIDIA.
Catalyst here for the market. All right, guys, let's take a quick break. When we come back, we're going to take a look at Broadcom. The chipmaker stock is up nearly 40% so far this year. They report earnings after the close. This will be a big one. Stick around. Coming right back.
Okay, I just rolled the Zscaler puts to the next week, same strikes for $85 debit. Give myself a little bit more time for this to bounce, perhaps.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renner.
All right, same strikes for debit. Okay, so Tesla looking for a B and C pivot, looking for a C pivot. Hopefully we get back to VWAP before we see a rejection of C pivot. Maybe we just blast right through that. That'd be nice.
Like Schwab, I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
It's the only front man you need.
Oh, I gotta take this call. Schwab.
Okay, it's 12:17. Let's switch stations. I get tired of hearing this guy Oliver talk. Okay, so my strategy this time of year is we're looking for weakness in the market. So what I'm looking to do is to anything that I'm trading, I'm thinking of selling credit spreads instead of straight longs. The only exception is Tesla at the moment, looking for Tesla to continue higher. We saw Merck moving higher, so there's possibility we see more action in the healthcare group. XLP taking a little break today. Okay, so some of these consumer staple stocks are taking a break. Let's see what SPY dividend ETF looks like. All right, that pulled back a little bit more. We talked about that, taking some profits off there yesterday. SPY D, okay. SPY D, okay, here's the S&P 500. Now look at SPY the dividend version. Okay, so that's a bearish engulfing candle for the most part, engulfing the body of the past 3 trading days bodies.
That was the most important takeaway from the call. And if you're focused on the story as a long-term investor, that's your most important takeaway.
Steph, it's a big test tonight yet again for the semis, okay? Semis are down 21% from their record high in July. SMH has been down 4 of 5.
So semiconductors are talking about right now. I'd like to add to this one. I'd also like to add to Apple call credit spread. Okay, this is pulling back now. Could lose the 50-day. So people got excited and had things move back. So anyone selling call credit spreads up top is seeing a positive return. Same thing with Amazon. Amazon a little bit trickier. Amazon fading a good bit. We had a big day last week on Friday with Amazon. Came in on Tuesday, Wednesday with inside days. Now we're looking for a fade. Amazon. I have the 182.50, 187.60, 50. I don't know why I had 60 there. That's weird. That's incorrect. Okay, that's a nice credit there. So this time of year, I'm looking to sell overhead call credit spreads. Not really interested in taking puts on all these different names. I feel more comfortable with credit spreads. Yes, I'm not going to make as good return, but that's okay with me. 25-30% return is fine for a week across multiple positions using 10 or 15 deltas. So 85% probability of a win. Okay, Zscaler trying to turn back up. Zscaler. I did roll those puts out a week.
I mean, you definitely have a variety because they're not just AI chips, as Steph said. It's a diversified chip player. The reason
Okay, so that's that. What's Caterpillar doing? Kramer was talking Caterpillar this morning. So Caterpillar, we had a credit spread on this one, put credit spread, but we took it off on Tuesday. This started to lose it. So we managed to still recover $20 per contract. Originally sold for about $1.60. Unfortunately, it pulled back. It didn't continue to move higher. It hit resistance. So we salvaged $20 out of that trade. So it wasn't a loss. It just wasn't as big a winner as I was expecting it to be. Okay, IWM, that's an iron condor. We're staying right in the middle of price action. That's working. Okay, so all of these are working. So while the markets are doing what they're doing, I'm just selling premium. I could be calling directional plays. The only thing that I like right now today is Tesla. Tesla's staying pretty strong. Looking for it to move back up to the highs. B and C pivots.
I think it's less about what NVIDIA's report was, but if NVIDIA was trading at 105 going into its report, I think the reaction would have been different. And I think we would have had a different feel about the sector in general. But for Broadcom, we've had this little flush out the last few days. I think it sets up pretty well for them to have a solid report. We haven't seen the AI segment revenues. We haven't seen that guidance. I think it has to be $12 billion, has to be increased. The other part too is let's hear more about the TPU business. And Apple is testing their AI software on Google TPUs. So let's get some more information there. I think that could be interesting to take as well to talk about. Down modestly today ahead of that print. NVIDIA is getting a little bit of a bounce. AMD is down 2 cents for make currency. So this will be a big report in over time. Can't wait for that. Up next, the direct calls today. Those are big trades on Berkshire, on GE Aerospace, Target, and more names. And later, don't miss the option. Bill Baruch has his
All right, a nice little move there.
one big tech thing that's breaking out. That comes back in 2.
Are you following the Halftime Report podcast? What are you waiting for? Look for us in your favorite podcasting app. Follow the Halftime Podcast now.
Okay, there goes Zscaler. Zscaler on the move. Mondo. Okay, nice little bounce so far. Okay, Tesla looking for a move back above VWAP. Okay, so we got some nice call volume. 112,168 contracts trading at the 230 strike. Thank you. All right, Zscaler, big move there on Zscaler. Tesla back to VWAP. All right, looking really good. Looking for an initial rejection there. If it doesn't stop, look for it to take out the high of the day. SPY's red, NVIDIA green. All right, futures turning the corner. Zscaler pushing back up.
We're going to start out with Barron's talking about Berkshire Hathaway. Looks pricey after its record run above $1 trillion. It's trying for its 10th straight day of gains, by the way. Fresh all-time high on Wednesday. What do you think about this note from Barron's?
So I obviously am a long-term shareholder here and a long-term bull, but I actually agree with what Andrew Barry is saying in the article. It's short-term overbought. Like, this stock is acting like they're doing AI in Omaha. I don't think they are. Obviously, they're benefiting from the Big Apple position. They're also benefiting for the enthusiasm around AI and utilities. They're, I think, the second largest utility in North America. They're also benefiting from the economy and, of course, the railroad and all the home building stuff. So there are so many reasons why the stock has become overbought. But I think these money shots from the article are the ones to focus on. If you're about to make your first purchase ever into Berkshire, maybe now is not the best time. It's 1.7 times book as of at the end of the last quarter. That's the highest it's been valuation-wise over the last 10 years. The other thing to keep in mind.
Okay, nice move on Tesla. Let's see if we can get right through this area.
It's not a big part of the story.
Tesla.
They only bought back $345 million worth of stock last quarter. When you consider that the prior quarter they bought back $2.6 billion worth, even they don't see as much value in buying the stock here. So I own it. I'm long. I'm probably never going to sell it. But if I were about to buy it today, I might wait a minute, just because of how popular of a trade. This is the second highest RSI of the S&P 100. The only more overbought stock is Walmart right now. So, like, just I know you feel like you missed it. I get it. I've been there. Just relax. I feel like there'll be a better opportunity.
You know what I find so interesting is how you frame that in the greater context of they apparently don't see much value in anything right now.
All right, Zscaler got a nice move on it right here. Okay, Zscaler, watching Zscaler. Let's see. What am I trying to do here? Let me go.
Because that was one of the things that you could put in the pie that caused the whole upset in the market. It was the jobs report. It was
Okay, so this script will identify value areas. Okay, neutral right around this gray shaded zone, a discount buy at the lows, and a premium buy at the highs. You can see where we ran into the highs, both on the daily chart, the 1 hour chart. In this case, one hour chart on the right. You can see that wick up at the open. We sold against that. Many of you took profits off into strength, I'm sure. We got a B and C pivot on Tesla now. We're looking for it to move back up to 234, 235.
So they loosened up on that. They've done some buybacks over the past couple of years. These are not big numbers. When you talk about $1 trillion company, we're talking about $300 million worth of buyback activity a quarter. It's not terribly material. Maybe in the aggregate over time. But Scott, I think you're right. It's like you're going to earn 5.25% risk free. There's no urgency. No urgency.
Financials have ripped this year. They're selling Bank of America. It's like you just go down the checklist, and it makes for interesting fodder, if nothing else. GE Aerospace and DuPont, top industrial picks at UBS. Stephanie Link, you own both.
I do.
GE bigger than many other positions that you have. But what about this call?
Yeah, I mean, GE is a top 5 position for me. It's up 60% year to date, so I'm not sure I would chase it here. But you know, being a simpler company now, they've done the spin outs, so that's a positive. They're the #1 engine maker. They have pricing power in the mid-single digits. They've got margins. They've got free cash flow. So they're hitting on all cylinders, and it's led by a great leader and team. And so I like it. I just don't know if I would buy it. DuPont is just about the spin. The spin's going to come in about 18 months. So we've got time. But in the meantime, the electronics business is actually bottoming.
Okay, so look, all right, we're through VWAP. Looks like Tesla might want to go some more.
Because of the bottoming in electronics. So I like both of those positions very much.
And they go GE $215, and they say DuPont 104. And again, both rating a buy. Target, you want to talk about that? Because UBS as well says it's their top consumer pick right now. $200 is the price target.
So I think there are haves and have-nots in retailers. I wouldn't touch a department store or a dollar store, but I think Walmart, Costco, Target are the leaders, as well as Amazon, of course. Target, actually, they've done a lot of changes over the last couple of years, and it's starting to help them in terms of products and pricing, and their comps were 2% in the quarter.
Looking for Tesla to continue this higher low. We're looking for a higher low on Tesla. That would confirm. We'd like to see more volumes. See the momentum indicators in the lower panel are turning. Okay.
Hunter Biden just told the judge at the beginning of jury selection today that there's no need to go to trial because he intends to change his plea in the tax case against him. Prosecutors seem surprised in court, saying it's the first they've heard of it. Court is now in recess until 2 p.m. Eastern. The White House announcing today that it will allocate $7.3 billion from the Inflation Reduction Act to fund clean energy projects run by rural electric cooperatives. The first project allocating nearly
Dollar Tree. What's going on with wow, look at Dollar Tree.
Wisconsin, Iowa, Minnesota,
Yep.
and Illinois. And the UK competition watchdog has opened an investigation into the use of dynamic pricing for Oasis concert ticket sales.
Corey, you saw the roll, right? 165, 160 to next week. $85 debit.
Businesses need to be more transparent about how they set prices and not to mislead customers. Ticketmaster has yet to comment. Scott.
Excuse me. Look at Dollar Tree. Dollar Tree, DLTR. Dollar Tree, DLTR. Dollar Tree. Ooh, Dollar Tree looks good. Dollar Tree looks really good. Just watching for now. Dollar Tree. Okay, let's look at the daily on Dollar Tree. Okay, what's Costco? Some of you were looking at Costco this morning. Costco. What's Dollar Tree look like? Dollar Tree. Okay, so this is mean reversion trade might work. I do only a few of these. These are like, I don't know, 60-40, 60% of them work, 40% of them, for me personally. So they're a little bit more risky, or they're a lot more risky in my opinion, because this could continue to move lower like Zscaler did earlier. Zscaler, moved lower yesterday. And then, of course, it looked like it was going to bounce. It got faded at the high of the day. Then we backed down to where we were. The previous two occasions, when we got down to this discount level, we're looking for institutions. If they're interested, we'll see volume continue to build. But the previous two times we hit this level, we were up the next day. So I'm still looking for an up day on this one. All right. So, yeah, Zscaler, watching that one. Tesla, of course, looking good. Selling put credit spreads on Tesla. And taking call verticals makes good sense. You got the upper band turning upward. You see that? Standard deviation 2. Standard deviation 3 is the gold colored line on the outside. So we almost got there this morning and ran into some resistance. So Tesla, we got that supply overhead this morning. Premium area up here. So you want to be selling into that strength. Want to be selling into this strength up here. We're sitting on top of VWAP looking for a C pivot. Okay. Okay, see if we can't get a follow through. Okay, Tesla. Let's go look at the volume on Tesla. Tesla volume. Tesla. Okay. American Airlines, B and C pivots on American, UAL, Merck.
Speaking at this moment at the Economic Club of New York, our Eamon Javers has been monitoring that. What are we learning here, Eamon?
Scott, that's right. You can take a live look in. The former president is speaking now at the Economic Club of New York. What we're learning, Scott, is that the former president has been going through sort of the highlights of the economy under his first term in office. He's arguing that if you want that kind of economic success, you need
Domino's Pizza, DPZ, Domino's, DPZ, Comcast, CMC, SA, Comcast.
He said that under his administration,
A lot of ABCD patterns, I tell you. ALGN, high of the day.
Suggested that his tariffs save the U.S. auto industry at a crucial time. And all of this comes after a conference call with
MKTX.
former President Trump, which happened just before this speech that you're watching now. In that call, Ambassador Robert Lighthizer, who's a key advisor to Donald Trump, suggested that the record is that the Trump tariffs actually lower costs. There's been a lot of question about whether tariffs are bad for inflation. They're arguing that over time, tariffs have the impact of lowering costs. And we saw Kevin Hassett, who's the former chair of the Council of Economic Advisors under Trump, on that call, coming out hard against Goldman Sachs, Scott, which had this report out earlier this week suggesting that GDP under the Trump administration would be worse than under a future Harris administration. The Trump administration folks don't like Goldman Sachs. Let's just put it that way. They said that Goldman Sachs has a highly partisan team on the economy.
Okay, we got Newmont Mining bounce. Newmont Mining.
And that Goldman Sachs should hire a more balanced economic team. So some fiery words from Trump economic surrogates to Goldman Sachs.
Newmont Mining. Baxter. Baxter high of the day. BAX high of the day. Baxter.
Bill Baruch thinks the breakout could continue. He is buying more shares. He has his best option strategy.
Oh, that one looks really good. Look at Baxter. BAX. Baxter. All right, it's got a nice little follow through. Baxter got some resistance overhead. Baxter. Let's see. Let's take a look at the daily chart on Baxter. BAX. This looks really good. This is a very nice chart. Baxter. Baxter, BAX. Let's see. When are their earnings? BAX. November 5th. EPS. November 5th. They beat expectations. All four metrics green. Okay, that looks good.
My target is seeing this trade from $12 to $15. All right, so we're seeing it on the screen now. Just to rehash, so we're all on the same page. You bought the December 260s. You sold the December
Healthcare.
210s, and because of the robo-taxi event on October 10th, that's the catalyst to make this trade work. Yes, the great technical setup, and then this robo-taxi event. All right, good stuff. Thank you for that. Mike Santoli, he's standing by with his midday word. That's coming up next.
Okay, so we got a little bounce there. Baxter is just taken off to the upside. Baxter, nice volume. Okay, it's got an ATR of about 86 cents. It's up 50. ATR 86 cents. Currently up 50 cents. Okay, Baxter, Tesla looking for that C pivot and looking for that C pivot. Okay, Tesla. Okay. Okay, so Tesla looking for a follow through, and look at Baxter. Wow, this thing is going vertical. Tesla, nice turn. Nvidia pushing a bit higher. Apple, flat VWAP, Apple. Okay, looking for day 8 on Nvidia. Okay, Nvidia turning up, Apple turning up. Tesla, looking good, Tesla. Tesla.
Senior markets commentator Mike Santoli.
Tesla looking really nice.
Midday word, and it is all about tomorrow morning's jobs report.
Yeah, it is. I mean, and the market is obviously showing its unease with where we sit right now in terms of the recent flow of data, the defensive turn, the kind of breakdown in treasury yields, commodities, really revising down labor costs. It's almost like the market doesn't want to hear people sort of say, well, maybe things are okay in the absence of a number like the monthly payroll that actually says things are okay. In terms of levels, talking about it a couple of days ago, the S&P 500 was back around August 14th, 15th. That was after we had the burst higher off the August 5th low. And all of a sudden we got some confirmation. The economy seemed fine. Retail sales, Walmart, all that stuff. It's right here. You know, it's 54.63. There's this big gap on the chart. So we're in a very interesting balanced pivot moment. And
Tesla with a change of character, turning back up.
The other thing is, you know, depending on the numbers,
Okay.
we're going to have almost 2 weeks worth, a little less than that, debate over 25 or 50. Yeah. And what the market is prepared to do in each scenario. Yeah, we'll have a good week and a half. I hadn't really thought that it mattered terribly much if it was 25 or 50.
Maybe the market right
Semiconductors.
now would prefer a 50 just because it's a real bold
Okay.
statement that says things have obviously turned. We can ease quite a bit right here. And I still don't know if that's necessarily going to be the takeaway. We could just have to chop around a bit. If we
Chop
look at the
around.
other stuff, the yen rally,
Monitor.
this idea that we
Tesla.
were due for a VIX aftershock after the early month, panic. So I think there's a lot in here that we have to calm nerves. I think it would surprise most people if you told them the S&P 500 is only 3% off a record high. It seems like things are worse than that. So maybe that's a net positive.
Okay, Zscaler.
The earnings in overtime, just given the unsettling feeling we've seen in the price action in the chips has been terrible.
It has been. I think the stakes are relatively high in terms of making sure this group is not just kind of a sell any news type of situation. I think the market craves a little bit more diversification of AI plays. You want to have multiple ways to exploit this trend. So, a really big move is implied in terms of the options action. So, we'll see if that can be a little bit of a firewall against the semi stock.
See in the last hour. Look forward to that. Mike Santoli joining me, of course, on Closing Bell, as always. Coming up next, standout stocks. We're going to review the committee's names making the biggest moves today, both higher and lower. Dow's down 342. We're back into.
Okay, so semi is looking for those to move a bit lower, even though NVIDIA is managing a bounce. Tesla, watching Tesla. Tesla looking for a pop higher. Tesla. Okay, looking for some follow through on Tesla. Looking at the momentum indicator at the bottom. TTM is just going cyan color as we lift a bit more. Daily, weekly, monthly trends are bullish on Tesla. Okay, so that was a nice buy signal on Tesla. Looking good. Let's see, Tesla. Tesla, looking good. All right, looking for a follow through on Tesla.
Let's talk about some stocks on the move for the committee. Terry, to you first, Fortive, which you bought more in early
August announces plans to split into two independent public companies.
Yeah.
Tell Stephanie Link why she should buy Fortive.
No,
Like splits.
Yeah, no, I think we should. So it's a company, precision electronics business, and then healthcare and software business suffers from faster, the precision slower, but they can use the money that generates the cash flow. We think both pieces will go up in PE.
I was kidding, but you really were telling her why she should buy it, aren't you?
Eyeballs in industrial. No, you like these stocks. I do.
She said she'll consider. Visa, new product designed to protect consumers making bank transfers. You own that stock.
Yeah, I think anything Visa can do to run on its base and offer new diverse products is a good idea.
What about Abbott Lab? U.S. availability of its glucose monitoring system.
That's a great
Abbott Labs. I like that. I like that.
As we know, Abbott sells for among the lowest PEs of companies that are
Abbott Labs, not a bad idea.
technology.
Bill Baruch. Josh was talking about Berkshire. One of their holdings is Chubb. New 52-week high, new record high as well. What do you think?
Josh spoke about the RSI. This RSI in Chubb above 70. It melted higher this week with a little bit of tech fear rotation. Definitely found some safe haven in there. I wouldn't chase it at this point. I like the name a lot. In fact, I hope it pulls back a little bit more. I'd like to add more to it. So I think be patient with here at this level, and you'll find a spot.
Josh, PayPal is at either a new record or 52-week high.
Like, I don't know if people are watching the way that the stock acts, even on red days for the market, but they do not let this thing go down, at least not yet. It almost is like a textbook case of what you're looking for when you're talking about institutional accumulation. So the stock broke out. It didn't gap and go. It didn't continue higher, but that's okay. It's sort of levitating here, and it looks like it's consolidating before the next leg up. I could be wrong, and I have a stock, but that's the situation.
Tesla moving back below VWAP.
Yeah, they've done a nice job in the transition. Software and consulting is a big part of their business now, over 70%. Margin expansion, free cash flow growth, guidance, $12 billion plus. That's why the stock has done so well.
It's not all great.
I know.
SOB,
I
new
know.
52-week low.
It's horrible, isn't it? It's just terrible.
What do you do?
I'm going to hold on to it because they are the number one player in the industry. I do think they have margin expansion. They have done a great job in terms of beating earnings for the last 4 years in a row. Obviously, energy is down, though, and out of favor. So, but this is the number one player trading at 14 times earnings. I'm going to stick with it.
Tesla back below VWAP. Looking for a C pivot.
Of course, we still have finals to do. We'll see in a couple minutes.
Okay, looking for a higher low in Tesla. Okay. Tesla. Okay, S&P. Can we get a nice run up into the close? That would be nice. CrowdStrike. All right, looking for a bounce. Nothing yet. Looking for a bounce. Do we come back to 225.70 or do we bounce C pivot? Looking for a C pivot. Okay.
We'll highlight a couple of winners and a couple of losers for you. JetBlue on our list today raises their outlook. Take a look at the stock up near 9%. There's Roku up 4%. Got upgraded today at Wells Fargo. Price target to 72. Losers, though, we're going to focus on KB Home. Downgraded to sell. And that comes at RBC. No one owns the stock specifically, but housing has been a big call on this desk. Stephanie Link, it was your contrarian pick. You have DR Horton. Josh's invitation. It was a final trade earlier this week. Bill's looking at housing as rates come down. What about this?
That's a good point. You know what? I should go take something out of the freezer. Thanks for reminding me, Corey. Let me do that. Let me go take something out of the freezer to cook tonight. I'll be right back. I'm your host, Because of Any, coming to you from theclosingprint.com. Look for a C pivot. If we get a C pivot here on Tesla, we could jump back above 229, 230, and run back up 4 points to the high. So let me see. Do I have? Why is this not showing up? I'm missing some. Let's see. Trends, patterns, show pattern zones, volume, premium.
Sort of missed it is they have a lot on the balance sheet, a lot of inventory, and I do think rates coming down is going to help propel that off the balance sheet, as Stephanie alluded to. That there is a lot of buying pent up. I think when rates come down enough, and the Fed, when they start moving, it moves pretty quickly. When they do that, we're going to
missing
see,
something here.
A tornado of activity in the first 6 months. So I think it's been good for home builders. You saw how this performed outside of that July, that early
Trend
July.
lines, nope.
It's still there. There's something in there. All right, we'll do finals next.
Volume. Let's see. All right, so watching Tesla here very closely. Let's go to Schwab for a few minutes. Where is my?
Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself and find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways, as if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost...
Okay, looking for a break of structure back to the upside. That would be a move above 230.50 or so.
Welcome to Market Overtime on the Schwab Network.
Quality focus has worked pretty much across.
Okay, S&P should go with the VIX dropping off. Let's take a look at the VIX. VIX. Okay, what's Z-scaler? Z-scaler is up 1.5% right now, so this is looking good. Looking good on Z-scaler. VIX moving lower.
people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Zscaler looking really good. It's clear. Look at Mondo. Look at Zscaler. You're clearing some levels right here. See this level right here? Okay, on the left. That looks really good. Okay. We should get a bullish chalk here above this level, right along this area right here. I would think a bullish chalk, changing character, bullish chalk right there. We're waiting for it. Let's see if we get it. We should get it. All right, so I rolled up the, yeah, push it, Mondo. All right, here we go. Here we go. Nice move. Nice move.
Not substantially so, not obviously not relative to Tuesday, but just today feels like quietness throughout the market. There is. I mean, and there was some choppiness earlier where it looked like
Zscaler, nice move on Zscaler. Nvidia, Apple, Tesla, looking for that higher low, looking for that C pivot. Looking for that C pivot.
Industry watchers question what's coming with the NFP print, right? And it looks like investors don't want to get in front of what those numbers are, especially, Jenny, when you consider what they were for July, right? We had that unemployment report or that unemployment ticking up to 4.3% in July. We had that jobs number of 114,000 that was weaker than expected. The question I think that's at the forefront right now, Jenny, is that a one-off in terms of kind of the direction of the job market? Is this going to be a gradual slowing that will
Okay. Whoa, there goes Zscaler. Yike. Wow. Yep. Okay, Zscaler looking really good. Now we have yesterday's. Note all of this resting liquidity down below.
The upside or the downside. It'll be anyone's guess how we open tomorrow. But as always on the show, we'll step away from some of the macro. We'll be focusing in on a lot of these individual names, some of the biggest actually in our market coverage. And names like Nvidia, Alphabet, Amazon we'll be diving into with upvote and downvote. We will also be looking at Tesla today for FOMO, which
Look at the resting liquidity down here. Okay, they were buyers. Institutions. Oh, more volume. Even more volume coming in Tesla.
So much of the focus as far as some of the pessimism and economic concern, and it's like, well, wait a second, we're hearing now updates regarding a huge reason we sold off in Nvidia that it wasn't even true.
Yeah, right. Nvidia coming to the table saying no, they aren't the subject of a subpoena from the Department of Justice. So that kind of put a pin in some of that selling pressure that we saw this week. I mean, we saw major destruction of its share prices this week. I mean, the stock is obviously up massively still year to date. So again, Nvidia saying in the statement they've been
Zscaler going. Zscaler, nice bounce. Nice move on Zscaler. Let's see what these guys are talking about on CNBC. Okay, they shift. Oh, it's after 1 o'clock already. All right. So I'll go back to Schwab. All right, nice move on Zscaler. Okay, Zscaler, you see this resting liquidity down here below? The gray band in the middle, that's the neutral zone, and the upper bands at the high, that's the premium zone. You don't want to be buying at the premium. You want to be buying at the discount zone or neutral. All right, let's look at the daily. Daily. Okay, so we got a lot of resting liquidity down here. 20% of the volume for today is trading right where we are right now. 20% of the volume for Zscaler. You see it right there, the metric. I don't know if you can read that. That's a big move. Okay, looks good. Note the volume also. If I turn this off, note the volume. See that volume right there? Short time frames. Look at all this volume coming in. Boom, took off to the upside. That's buyers. Okay, we're gonna move into the gap probably. Look at the previous three. Look at the previous two occasions where we jumped down here. We hit this area of liquidity. Resting buyers, resting orders were down here. Boom, takes off to the upside. Twice in a row. This will be make it 3 times. There goes Mondo. You should be killing it now. Mondo, you should kill it. Okay, looks good.
Today, though, so Wells Fargo upgrading shares, but they think that this Roku channel will provide stronger growth, which is just frankly amazing to me in this highly saturated time with Roku not having really much of a presence in sports. And I'm thinking like NFL kickoff. I'm like, how will they compete with some of these other streamers? But hey, this Wells sees some upside, I guess.
I know, and it's interesting to see Wells Fargo change its tune because earlier in this year, they had downgraded Roku. They were concerned about Walmart and its acquisition of Vizio because that they saw Walmart accounting for a good portion of Roku's sales, right? They say Walmart accounted for a third of Roku sales, but now they're more upbeat. They're more bullish on Roku. They've upgraded it to equal weight from underweight. They have this new price target of $72 a share. That's a big jump from their previous price target. Their previous price target was $50 a share, Jenny. So they've certainly changed their tune on Roku. And, you know, the other thing I find interesting about Roku, Kathy Wood has been adding to her investment throughout this year. It's one of her biggest holdings for Roku. And most recent addition I saw was in June. So she sees something that clearly the broader market doesn't see.
Okay, there goes. All right, Tesla looks like he wants to go again. Okay, keep an eye on Tesla. Zscaler doing its thing. Awesome. Awesome. I could have rolled this for probably $40 debit per contract if I had waited, but you know, I don't know what's going to happen. Still, this trade is working pretty well. Not panicking. I could have panicked on Zscaler if I didn't know what I was doing, but one of the reasons I took that Iron Condor is because I knew I had 3 days to manage it. Okay. Yesterday we checked Zscaler at the low, and for I think it was about $40 at the time, $38 per contract. You could have rolled it to the next week, same contract. So it was a little bit less expensive than what I rolled it for a few minutes ago, but the concept is the same. I wanted to roll it to the same strike to give myself a little bit more time. Having theta kick in to both this week and next week on any move like this, and gamma also kicking in because we're so close to expiration on both this week and next week. So this is working out really well. So pretty much what we're looking for. No need to panic. Iron Condor is probably one of the best things. It's kind of, I look at it as free money in a sense, especially for earnings. If you get the expected move right, and you know you sell a few percent outside the expected move. In the case of Zscaler, it was 8.6%, 8.68%, and it opened yesterday. It opened on the day after earnings down 16%. So yesterday was a hell of a move from 200 down to 150. So 155. Anyway, no need to panic. Iron Condors work really well though, because in this case, it was like $218 per contract. I think it was. Wasn't it? Zscaler? I forget. Let me go check. Zscaler. 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 Still not out of the woods, but it's looking a hell of a lot better. Okay. So I rolled this to September 5th, the next week, which is September 13th. All right. So I rolled this from 9/6 to 9/13 for a debit. And this is going to start working. Looks like this will start working over the next day or two. Next couple of trading days. Working really well. So yeah, Iron Condors are great. Oh, this is $1.06 per contract. All right. So $1.06. I gave some back to roll that debit. And now we're looking for Tesla to put in a B pivot, C pivot next. Zscaler. Wow, Zscaler is on the move. Zscaler.
One of the things that may be helpful to Google, because this is obviously the Biden administration that's coming after it, it may attempt to obviously kick the can down the road and litigate this further.
Okay, what's CrowdStrike doing? CrowdStrike is another credit spread. Even though we got a little bounce off the lows, I am sticking to the plan. I'm sticking to the plan. Iron Condor on CrowdStrike, $214 per contract. I got 10 of those. That's so far doing really well. Okay, so I could close this right now. Let's see what I could close this for. CrowdStrike. Let's see. Let me see if I close this. Closing order, 40 cents. Okay, 40 cents. I'm getting very close to where I'm ready to take this off. I want $200 per contract at the end of this conversation and trade. Sold it for $214. If I sold it for $40, I'd only make $170. So I want to sell it for something under $15 per contract. All right. So I'll put a limit order in at that. Good till canceled. So if that gets tagged, limit, good till canceled. Okay. CrowdStrike. 15-cent debit, $15. Okay. Yeah, that looks good. Okay, still waiting for Tesla to give us a C pivot. Zscaler. Okay, so important to look at what happened the last time a stock hit a major support level like this. Look at what Zscaler did the last two times it hit this level. And we got a level over here too. So once we push through this level, last year back in October, November, once we pushed through this level, that became major support. Major support. Okay, you see that? Here's Zscaler. All right. So let me just zoom out a little bit there so you can see what's going on. Okay, so Zscaler, you can see over here in November last year, we broke through this level. That became major support. We've come down to this level 3 times. This is the 3rd time. This is probably going to do similar to what we saw over here on August the 5th? August the 5th. The next day it was up quite a bit. And it just continued to trend higher. So that's what we're looking for right now on Zscaler. Okay, this looks really good. And supply isn't significant until we get above 200. We do have a gap to fill, obviously. All right, Tesla, watching Tesla. Tesla not following through yet. So we hit an area of supply on Tesla. Yeah, we hit an area of supply, Tesla, and now we are just negotiating that level right now. So we need this to be a C pivot and take off to the upside.
The recent range it's found to the downside. I mean, just given we're substantially off of highs.
Indeed, and we're also
Okay, what's semiconductors doing? Semis just meandering. 2 days down here at the low. Semiconductors, I have a call credit spread on that one. Okay, Amazon, have a call credit spread on Amazon. And what's Intel doing? Intel, nothing. Intel trying to hold on to the 20 level. Got a lot of resting orders down there. Okay, let's see, Tesla, TSLL. Yeah, looking for that to move higher. Tesla. Zscaler running into some levels of supply from yesterday. Okay, Zscaler, we're going to run into supply here at yesterday's high. Okay, so there's yesterday's high right in this zone.
So now when we look at the recent uptrend, are we seeing any sort of divergence with RSI?
Okay, yesterday's zone right there, we got supply. So if we can get above that level, this should take off to the upside. Fingers crossed. Okay, looks good. Okay. Semis. Tesla. Nvidia. Nvidia looks like it's going to fade a little bit right now. S&P, no follow through yet. We need a higher low. Looks like we're printing a higher low. We want that to be a higher low, not a bear flag. Tesla pulling back a little more. Okay, American Airlines. We got A, B, and C. American Airlines in play. A, B, C. D next. Airlines, ABCD pattern on, let's take a look at American Airlines. ABCD pattern showing up. There's your A at the top of the pattern, A. We got a bullish chalk. We break into the upside, changing character, looking for a follow through. Got some supply at 11.06, a little bit higher. Okay, and United Airlines, very similar look. United Airlines, looking for a C pivot now in United. Delta Airlines. Delta Airlines, a little bit more of a dip, more of a doji, long-legged doji on the daily over there. You can barely see it. American looks good. AAL. Okay, let's go take a look at a different chart style. Let's look at stock charts. Let's look at American, AAL. Okay, it's clear the 50-day. I've been hit or miss with American Airlines. The airlines in general have been hit or miss. Probably win about 60% of the time, lose about 40% of the time. These are really tricky to trade. I found it might be, you get these days where we have these big pops like over on the left. If you're lucky. JetBlue, let's see JetBlue. Now, Southwest Airlines has been seeing activity lately, and you can see it's got the best looking chart. So Southwest over the last couple of weeks, we've been seeing on the most actives quite a bit. Save, Spirit Airlines, that flies into Myrtle Beach, major hub here in Myrtle Beach. Save. Okay, Allegiant Airlines, ALGT. Yeah, that's okay. Ryanair. Remember Ryanair, that big run-up it had? Remember Ryanair a few months back, how Ryanair just went, took to the those guys. Ryanair is turning the corner. Ryanair.
What we're going to do instead is we're going to focus on that supportive area that I had just mentioned, near like a 6350 or so. We had our moving average, we had our gap, we had our point of control here. So what we're going to do in this example trade is we're going to sell a put spread, a short put vertical here for $1.80 credit, -1 October 18th, 65.60 put vertical at $1.80 credit here, 43 days out, about a month and a half or so. And this is a more neutral.
Yeah, Ryanair had a big move last year into this year, and then it had this big drop. Okay, so now we're starting to turn it. This is probably going to go again. Ryanair, maybe some leaps on this one. When do they report again? Ryanair. RYAAY, Ryanair. Let's see what that looks like. Ryanair. We don't have any metrics on Ryan. Okay. Let's see. The closest to it is LUV. Okay, let's look at Southwest Airlines. Okay, 3 metrics green. Let's look at Delta. I'm looking for these metrics to be supportive of long swings. You want all 4 of these metrics to be green. Okay, so let's look at some consumer staples. I just want to show you an example. That's not one. You got 4 red. Okay. Let's look at Tyson Foods. Tyson. Okay, beat. Okay, here's a good example. Tyson Foods. You got a reversal on Tyson. Actually, you got a trending stock in Tyson Foods, consumer staples. Look at the earnings growth. Look at the earnings growth on Tyson Foods. Revenue growth is okay, but look at the earnings growth. Earnings surprise was 24.3%. They beat top expectations. Revenue surprise was 1.4%. Okay, so let's look at Tyson, because this one is in a sector that we flagged as bullish over the last few weeks. XLP has been bullish. Okay, we've taken a little break today. That's okay. You want to see a 9 and 21 day pull. You don't want to chase the highs. XLP. So look at Tyson Foods. Okay, we're at the highs. Do you want to buy the highs? No, but all 4 metrics are green. So if you're thinking about a swing trade, you're looking for a pullback. So write it down on your list of stocks that you might be interested in buying. Reason why I'd like to trade this one. Look at Gerald Appel's 3 MACD setup. Okay, now look at these 3. Okay, all 3 of these are bullish. Okay, this could be topping out a little bit. So we're looking for the short term to get moving again. The last time this turn was back in June. You see that short-term cross right there? Right in the middle of the screen? Look what price did. Boom. It went from 54 up to 66. So this is a really great setup. If you can mirror this in whatever platform you're using. If you use stock charts, I'm more than happy to send this to you. 3 MACD setup. 1939.12 is the long-term. 12.26.9 is the normal MACD that most people use. And short-term, you could use 5.14 or 5.15 or 5.20. Short-term, you're looking at 5 days and 20 days or 5 days and 15 days with a 5-day signal. This is really good. And it's good for both directions. So you can see when it turned down here, turned down in the center of the screen. That was back in March. And what did it do? Well, it just continued to move higher. So that was a strong stock. Doesn't always obey it, but it's something that you want to pay attention to. Excuse me. Okay, American Airlines is lifting some more. American. Ryanair. Let's take a look at Ryanair. I like that one better.
This was a repeated stopping point for price here about 190, a bit below that point. But if we were to move lower, green line here, once again, repeated stopping point for price. You can see how often
Ryanair. December.
So beyond that, the low point lines up with 252-day EMA.
Okay, big spread, a $5 spread in Ryanair at the money calls and puts. Okay, I don't want to trade that. American Airlines, cheap for a reason. American. Okay, these are pretty tight spreads on American. Let's go out to, let's say, December. At the money. Vertical calls. Let's see, where is it? American's at 11.
That would be well above those 52-week highs. So I wasn't really thinking too much about that area for this example trade here, but we are kind of improving a little bit. We're potentially pushing out some of this resistance here.
American Airlines.
And the trade that we
I like the December at the money calls. American.
195 strike call butterfly at a 250 debit. So an unbalanced butterfly, same expiration as our last trade, 43 days out. 250 debit means a 250 max loss. But also there's some kind of interesting things about this type of trade here. For starters, we have this large peak up here. Our max profit would actually be 750 if we expired right around our short strike near 190. Anything beyond that, we would still be profitable, but our profits would plateau near 250 or so. So that would be a good situation for us either way if we were above that break even, regardless of how far we were. If we were below the break even, we would have that cap max loss near 250 here. And the strike prices I chose were not just random. We kind of were lining up with some of those levels on our chart. And we factor in our break
Yeah, call seller. Okay.
That matches up with the next peak that we saw in price.
Z-scaler. Thank you, Grover. Z-scaler. Z-scaler. Looking for a follow through. Okay, a little pop into where did it stop? Where did Z-scaler stop? Right at resistance. That was a pretty nice move. That was a very nice move on Z-scaler. Z-scaler.
But we will leave it there. Great insight as always. Our Duke of Charts, Rick Ducat. Now back to Diane in New York. The chart master, Duke of Data, Rick Ducat. Thank you, Rick, and thanks, Jenny. We've got much more ahead on Next Gen Investing up next. Tesla shares are higher. The FOMO feeling creeping in as the EV maker announces more self-driving news. Jenny and I will get into that after this break. Stay with us.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles?
All right, Z-scaler looking for a higher low.
Want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Accelerate your market knowledge
and shift your perspective.
Tesla. Tesla.
I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market. Weekdays at noon on the Schwab.
Okay, we got a fade. We got a little fade.
At 12 p.m. Eastern.
Call walls rolling up on Tesla. Good job, Tesla. Keep going, Tesla. Okay, we're above the call wall, 225.
This week. So it's been a pretty good week for Tesla, which has not been always the narrative that we've discussed with Tesla all year long.
Just last week, they were so bearish on Tesla. It's so funny listening to these talking heads.
This is kind of where those puns come into play, just pothole after pothole for Tesla. But look, what they did today was they posted it actually on Twitter X, this roadmap they called full self-driving, right? What's coming next for it? The company says they plan to roll out FSD in Europe and China.
All right, I'm going to step away for maybe 2 minutes, 3 minutes. I'm going to make a sandwich real quick. I'll be right back.
So this news has voted well. It makes investors want to get in Tesla again this week. Again, the stock has been up this week. It's adding to the gains today. It gives kind of the direction of Tesla, what's coming next with regard to full self-driving. And it's not just in Europe and China. The company has announced that it will be added to the Cybertruck, the full self-driving. So that's coming up by October for the Cybertruck. And also with regard to China and Europe, so that will hinge on regulatory approval as well, but Tesla is expecting to get that.
And I will say that I do understand like the more maybe neutral stance right now, and that's that like a lot of this upside today is tied to the fact that Tesla believes its FSD is improving, sure, but this isn't really like a massive update. I know that Elon Musk was tweeting or posting on X, whatever we want to call it at this point, but basically saying that right now that they're continuing to see this launch of self-driving cabs, and I think this was like the enthusiasm tied to FSD, of course, because no one can, I think, disagree that FSD one day will have this maximum potential, because if you understand the technology, I mean, it's frankly amazing. I think it's the timing of this that has been a bit of a concern for those that are, looking to invest in Tesla shares, because as we know, it feels like the overall expectations have become so sour, but again, nothing has changed. Like, it works on both sides of the coin, I guess.
Yeah, I mean,
Watch Tesla for a C pivot here. We need to see a C pivot and a move back through VWAP.
Reaction has been such, and some of the challenges that we've seen this year is because the timeline for Tesla keeps getting kicked out for different things, including the robo-taxi, the cybercab, whatever you want to call that, right? And we know that event, we'll hear more about that in October. The FSD getting pushed out in China is important because China is a big market for Tesla. China makes up about a fifth of Tesla's sales. So it needs to have that there, especially if it wants to continue to compete against the Chinese automakers like NIO, BYD, et cetera, because we know that there's been this ongoing price war there. That's hurt profitability for the Chinese EV makers. We're looking at, kind of a list of those right now. But Tesla, again, has a major footprint there. So it needs to push this forward. Again, it's expecting that regulatory approval. But let's talk a little bit about how the analysts or community is seeing this today. Sell-side analyst Wolf Research initiating coverage of Tesla. They've got a peer perform rating on this. They say the fundamental setup for Tesla over the next few months is constructive. They see second half of the year deliveries tracking for it to be up double digits, up 12% compared to the first half. They highlight that demand from China. So we already know that it has a big footprint there. Morgan Stanley reiterating, Adam Jonas over there at Morgan Stanley, reiterating that Tesla is his top pick among the auto stocks. So Wolf Research standing by their man here.
I know. I was looking at like the right now the average analyst has a hold. If you look at like the almost 60 analysts that cover this name, which it actually does put it, I mean, in sort of the middle of the pack. Like Ford right now is also a hold. GM's a buy. I have a difficult time honestly comparing the legacy autos versus Tesla, because Tesla has, I mean, there's a major technology component, but yeah, I mean, as far as like the analysts are concerned, this is definitely a change of tone, because I feel like for so long, the buy side got so aggressive where it was like, okay, nothing has changed. And then now that sell side is getting aggressive, the other sides. And again, not much has changed, but I can at least respect, I mean, this Morgan Stanley note we saw, $310 price target. I mean, well above even its all-time high.
That's right. And again, I misspoke there. I should have said Morgan Stanley standing by their man. Wolf Research initiated coverage. But yeah, look,
Both standing by their man.
Yeah. To be fair, with Morgan Stanley calling it out as a top pick, they still point out the challenges on that. They say that, they point out that they have underperformed in the mega cap tech sector. We know that. That's been a challenge for Tesla all year, especially when you compare it to what things looked like a year ago with the Mag 7. And you had all these questions of should Tesla even be a part of that, although you have Elon Musk continually saying that it's an AI company, it's not just an EV company, right? To be fair, look, data is a big part of it, and especially with this push deeper into FSD and the plans for FSD to exist overseas in Europe and China coming up by 2025. That may be something to Elon Musk's point about it being an AI company, a data company. But Morgan Stanley saying, look, the bet is the bullishness on the long-term potential for Tesla and for autonomous vehicles to just, smooth out what the transport sector looks like. They did say that they want investors to keep their expectations, quote, well managed for the near term, but it's still a top pick, Jenny.
And this name, gosh, no name is more polarizing because there's those that believe like this could go to the moon, and then there's those that still, I believe, have like a $23, $24 price target. So there is such a wide variety of thinking. And the one thing I will say is Elon Musk, love him or hate him, but I always challenge people to listen to some of these earnings calls or investor meetings because I do think his sense of like autonomy in the future, I at least enjoy listening to someone that cares that much about like improving our lives as humans.
Yeah, and I mean, I think one of the things that is, with each incremental step, because even with FSD, they're saying the new version, there will be a new iteration, just like how we have our different iPhone operating systems. There will be a new update for those who already have FSD. But we're not at a point where you can't have a driver in the vehicle, right, with regard to that. And so that is clearly what they're trying to get to, by their ability to increase the range, they can, kind of pull back on that need to have someone kind of sitting in the front seat monitoring this. And obviously the next big date where we'll hear about what the future of this looks like, the robo-taxi, the cybercab, is October 10th, right? That's when we'll learn more about what its self-driving technology looks like and what the road ahead looks like for that and how close we are to, we're just sitting in the back seat. I don't know if I'm ready for that, Jenny, I have to say.
I'm not either. I think it's to my very limited understanding that the human element, which will still be alongside FSD, is what the challenge is. Because us humans will make mistakes, while FSD won't, which I think is hysterical because, yes, I can speak to everyone I've ever driven with. There's an element of human error, and myself included. So I'm no better. But we will leave it there for all of our Tesla talk. But coming up next, Diane and I will keep our honest discussion going here. We'll be looking more at the technicals in both Mobileye as well as GM. Two names performing quite differently as of late, and GM looking like it's emerging more and more as the auto winner of the year.
Watching Tesla here for C pivot.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Tesla's getting ready to go.
Welcome back to Next Gen Investing. I'm Diane King Hall, live from the Schwab Network set at the New York Stock Exchange. We've got the major benchmarks under pressure now ahead of that jobs report tomorrow. Let's stick with the auto sector, though. We just talked about Tesla. Time now to cover a few more auto names. For that, I want to send it back over to Next Gen co-host Jenny Horn in Chicago. Jenny?
Thank you so much, Diane. So yes, now we are diving into the charts and a lot of these auto names. We'll start off, Ben, with like the good news. We'll get to the bad news later, because the good news is, as far as GM has been concerned, this has been, a winner on the year. GM has been more and more consistent. We just looked at Tesla. The average rating right now among analysts on GM is buy. So the street still really likes this name, and there's, I think, a good reason for that.
Yeah, GM, a little bit of a chop trade if you're looking at the intraday time frame, but we have seen a bit of a trend playing out, a little bit more well-defined trend when you're looking at a longer-term chart. So what we need to do here is we need to maximize this screen here so we can dive into the GM chart. And I did want to just start off talking about how the 5-minute candle doesn't really provide a lot of conviction one way or the other. We're talking about, again, somewhat of a chop type trade where, Jenny, I like to look for those areas of value, that staircase type pattern to play out. Here we're looking at, again, just a grinder right now. This is what we're seeing here.
So right now, I also think when you look at GM here, we're down about 0.6% on the session. So, Ben, I do think that a lot of the selling pressure we saw today was a result of this wolf research.
Tesla C pivot confirmed. We break above 231, 230, 50, 231. That should trigger a break of structure.
So now walk us through what you're seeing here. We're down modestly, like not selling off by any means, but it still has looked like, you zoom out, it's been a consistent name.
Yeah, well, as I was mentioning, we're a chop on the intraday time frame. This is a look at the 5-minute candles, but as we do that zoom out, you're going to see a little bit more of a well-defined trend. It's a little bit more indicative of what we were looking at in terms of that blue line chart there, where we've seen on the daily candles a pretty well-defined bottom left to top right. Now we've gone from a 5-minute candle where we were kind of stuck in this randomness to an hourly candle chart where you can see pretty well-defined migration of value to the upside. This is exactly what I look for, a textbook example of that staircase type pattern. We've got hourly candles, so we stepped away from the most recent price activity. Again, this range bound contained price activity, looking at the move we've seen basically off those August lows. If you remember, beginning of August, stock was trading again down around that $42 level. Nice rally up into the $50 level, sideways consolidation. This is an acceptance of a big move up, simply put, over the last few weeks. Let's step back one more time. You're going to see. Now, here's the move we just looked at. Big green candle, sideways consolidation. But you can also see that we've kind of struggled to get above some key highs. But this also supportive of that longer-term trend of the upside areas of consolidation that continue to move higher. A daily candle chart. So we've gone from 5-minute candles and looking at, well, this kind of range-bound type price activity that's playing out right here to, again, the move up off those August lows, which is where you can see the bulls are in charge. But as you step away to the daily candle chart, you're going to see they've been in charge for some time now, Jenny.
Okay, so as far as like some levels now we watch going forward, again, we are in this major, like, it feels like dull period. And I say that as we're ahead of like maybe potentially a major day tomorrow, but for GM shares, like, we're not really near earnings, we're sort of catalyst light. So what are you watching now as far as like some more near-term price levels?
Well, let me show you. Let's step away from the daily candles or stick with the daily candles, but add on a little bit of moving averages here. I've got a pretty well-defined upper extreme, 50. I've got a lower extreme, again, 40. Those August lows are kind of hanging out in the middle, but you keep knocking on this upper extreme door with this bull trend to the upside, holding above the 50, holding above the 200, I think is supportive of eventually seeing a breakout. You can see RSI kind of topping out again in a very similar fashion around that 70 level, starting to roll over. So again, maybe not this attempt, but this is a bullish pattern playing out. So you're still looking for that breakout at some point, value to form at a higher level, but Again, it's going to be interesting to see how the stock responds with the broader market reaction on payrolls tomorrow.
It will be very interesting, especially because I do think on the auto component, outside of like basic, I mean, like there's a major component of jobs, and you look at, I mean, like a major economic indicator that is reliant on this industry. But now to shift gears here and look at our next name, which is Mobileye, a totally different chart. I mean, we're down 70% this year. We're down about 6% this week, 70% off of 52-week highs. Wolf Research did assume coverage with a downgrade to Pure Perform from Outperform, highlighting China as the company's largest market that accounts for 29% of its revenues, is expected to see its run rate shipments drop as much as 40%, and that the adoption of hands-free systems outside of China could be also much slower than they believe. So they also see this strong adoption inside of China, outside of China, that they see that very differently, which I think is a really interesting contrast to the conversation we were just having about FSD and a lot of the momentum with Tesla this week, which is up almost 5%. But Mobileye has been a totally different story. We're down almost 5% today to the downside. So, I mean, like, where is the optimism here for a name that just keeps getting beaten down? I think it's a good lesson, actually.
Yeah, it's actually a good lesson on multiple levels. For one, just from a technician standpoint, in terms of the two phases of price development that I look for, this is a stock that's been coming under pressure for some time. Talked about the 5-minute candles and how, again, on our last example, GM, we weren't seeing a lot of conviction. In this instance, the exact opposite, right? Easily identifiable, top left down to the bottom right. We've got 1 year's worth of price activity there. You can see on the screen, and it's not pretty. This is a stock that's been coming under pressure for some time. You can also see areas where the market's kind of paused, established that sideways consolidation, that value area, but we're breaking out right now. We're high conviction to the downside. Here you can see the breakout of the range that we formed around this $28 level. And again,
Zscaler, booyah. If we can get through 163.50, we should see a nice break to the upside, follow through into tomorrow. Okay, Tesla's firing a change of character now. Tesla. Okay, you're seeing it real time. There's a break of structure right there showing up on the screen. I don't know if you can see that. Break of structure showing up now as we push higher. There's a break of structure. You can see it on the screen. Cool.
Tough to see any really bright spots here, but you know, again, this is one that if you were to start to see things reverse a bit, we're talking about momentum above 30, 32. So you can see it at these levels, we're significantly below any real indication that the bulls have been able to turn things around. I guess the first.
Okay, Tesla looking good. Looking really nice, Tesla. Thank you. Zscaler also doing well. So we got two really good trades on, among others, looking good. Zscaler, nice follow through. All right, there goes Tesla.
No way, and a good reminder of the difficult strategy of like basically finding some of these bottoms, because it's nearly impossible, as we both know. But great breakdown on the technicals. Ben Lichtenstein, the host of Futures. Now I'd like to send it back to Diane, who's waiting by in New York.
All right, thanks, Jenny and Ben. Coming up next, we'll close out today's show with a look at our under 30 stock. That will be Celsius. It's under a little bit more pressure again today. George Schultz will join us with a whole lot more insight on that. Next in Investing, we'll be right back after this break.
All right, nice follow through. Good job, folks. Good job navigating the malaise in the markets. NVIDIA back to VWAP.
With Schwab Investing, invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Okay, nice follow through on Tesla. Let's go, Tesla. Go, Tesla. Go, Gadget, go. changing character. We got a nice breaker structure. Everything's looking good. Looking good. Tesla. Nice job, Tesla. All right, so nice follow through.
Welcome back to Next Gen Investing. It's now time for Under 30 Me. And joining me is my co-host today, Dan King Hall, senior markets correspondent for the network, of course, and George Tillis. So we're looking at Celsius, and I am personally just floored that it's at 52-week lows. I must have been falling asleep at the wheel.
Okay, Tesla made it up to the highs. Now we're going to reverse. Okay.
Yeah, I mean, obviously the stock is down. I think year to date it's down about.
Okay, looking for Tesla to break out. Let's see, Tesla TTM could be better. Let's go to the 15-minute. Let's go to the 15-minute. Okay.
So that gives you an idea that the trend was starting to break to the downside, but in context,
Somebody taking profits on Tesla.
Because if you look at the last 5 years, irrespective of the move since late May, the stock is still higher by 2,300%. So it's been a great investment for those who've had this stock over the last 5 or so years. But there are some challenges, and I think that's indicative of what the stock price is reflecting.
Come on, Tesla. Come on, Tesla. What's Zscaler doing? Zscaler trying to make a higher high. Zscaler. What a nice trade on Zscaler. Okay, for those of you playing Zscaler. Okay, so we got a nice reversal so far. Mondo is like the king of these gap down plays.
On the stock is a reflection of this declining production level that Pepsi, which is their mainstay distribution partner, is indicating. And in fact, if you look at Morgan Stanley, they've cut the stock down to $50 a share, and they do maintain a market perform. Bank of America also, from what I understand, has also got about a $50 price target, but some of the other analysts have somewhere between the $25 price target and $50 price target, where the stock is certainly trading at right now.
And George, I got to ask you though.
Yeah, it looks good. Zscaler is probably just going to keep going, Mondo. How many times have you done this? Dozens. Gap down. CrowdStrike was one. MongoDB was another. You're really good at this. You're really good at these gap down plays. Looking for the reversal, mean reversion. American Airlines. All right, looking for Tesla to run. Looking for Tesla to run now. Run, Tesla, run. Looking for it to run higher.
Which is keeping that earnings multiple essentially stable. It's basically trading around 25 times.
NVIDIA's back to VWAP. NVIDIA, Apple. What's Apple doing? Apple's back to VWAP, just above it at this point. Apple.
Stabilization point, but unfortunately for those who are looking to catch a bottom, the stock is in a serial downtrend. It's trading below its 10-day moving average, 20-day moving average, and until it starts to, at the very least, start to trade in a trading range, you have to consider that the stock is relatively weak right now. So I've seen this lots before. And what I mean by this is there's huge trends. Everyone talks about technology, but one of the most powerful trends I've seen in many stocks include retail stocks, restaurant stocks, and in this case, functional beverage stocks, because trends are extremely powerful. Social media is extremely powerful. That's essentially what Celsius capitalized on the last 5 years.
Tesla 230,
really comes down to
225, 220, 225.
Adoption and essentially pricing power. With
Institutions positioning for more upside.
Plus, these drinks are quite expensive.
there may be some demand reduction. What we're seeing here is a recalibration of the stock based upon adjusted earnings. So still a great company, still a great product, still profitable. It just happens to be that it's
Okay, we're trying to make higher highs and higher lows on the futures. I'm not giving it much credit at the moment. I mean, it's could turn out to be stronger close than expecting, but I'm still expecting that we're going to see weakness selling into strength. So I'm keen to take profits off into strength, reduce risk.
So is there an element of like the product is just becoming more normal, more not stale, but like basically we account for Celsius when we walk into a various convenience store versus before I would always buy it because it was like my only time ever seeing it.
Well, that's the thing. You know, if you're seeing it and you actually see people, you know, consuming it, there's a trend there. And whether it's, you know, Deckers, which had the Hoku shoes, you saw them all over the place.
Go Tesla. Come on, Tesla. Let's go. Let's go, Tesla.
That's the same case for Celsius. As those trends or fads start to fade,
We got some supply overhead on the 1 minute.
you know, people end up choosing different
At the premium zone. Let's look at the 15-minute. Tesla 15.
The stock, if you just look at the last 6 months,
We can push off of this and head a bit higher.
business, what we're seeing is just a retracement of profit growth. And so with that said, prices coming down, profit growth expectations are recalibrating, but eventually there may be an equilibrium reset.
What's Rocket doing? I know Derek is interested in Rocket Mortgage, RKT. RKT. All right, taking a break today, but looking for the follow through. Let's look at sectors. XLB Materials. Still selling. XLC Communications. That'd be Meta, Netflix, Google, Charter, Fox, etc. XLE Energy should be lower, right? Yeah, energy's not doing that great with crude oil moving lower. What's crude oil doing? Crude oil, USO, yeah, lower. Crude oil. XLF Financials. Looks like they are taking profits off. Financials are turning, so I would be reducing my risk in financials. JP Morgan, Goldman Sachs, Wells Fargo, Morgan Stanley. I'd be taking some off. Yeah, nice gains. So that's XLF, XLI Industrials. That's also fading. So these are telling me to be cautious. XLK. Okay, got a little bounce, but I'm expecting the momentum to carry lower. I'm looking at the MACD in the lower panel. All three of these. Short term is trying to turn. Okay, we could bounce. XLK. XLP. At the highs, taking a break. XLP. So the weakness here is telling me to sell overhead calls. Okay, all the MACDs turning down. Okay, XLV, healthcare. Some outliers like Merck are doing well. Merck was doing well this morning. Okay, Merck is still doing well. Coming up to the 200-day moving average. Look at the moving average. Look at the three MACDs on Merck. Beautiful, beautiful. Looks really great. Farmer Jim's been in this from a 110, I think. 110, 112. Farmer Jim.
As if you don't have an emotional reaction.
I'm not very good at sales, turns out. I'm very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for for the market.
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector. Now there's a market for every single one.
Man, Mr. Wonderful really went off on California. No businesses in California. He's not opening any businesses in California, New York, New Jersey. Man, he went off. He was on The View. I only watched it on YouTube. There's no way I could watch The View, but okay. So here's Merck. Okay, so August 6th. It looks like Farmer Jim was buying. Farmer Jim was buying Merck on August the 7th, right in here. So right near that hammer candle. Congratulations. You got about $8 on that one so far. Beautiful.
Jeffrey Kleintop will join us for the global markets perspective, including September surprises and why he has one important date circled on the calendar. We'll circle it too. And our panel talks C3AI. The stock fell to new 52-week lows after earnings. Earlier today, I spoke to the CEO.
Okay. That's Merck. Looking really good, Merck. Congratulations there, Farmer Jim, on Merck.
For a bit, some concerns about slowing and such. Right now, 55.16. The Nasdaq is gaining for the first time in 3 days. It's up 1/3 of 1% at 18,978. The Dow down 1/3 of 1%, and the Russell down 1/3 of 1%. Oil and gold are mixed. Gold is gaining over $19, while oil's at $68.88.
Okay, Tesla pushing a bit higher. Tesla want to push a little bit higher. Tesla.
In the meantime, we continue to watch more stories and the markets that are moving. Tesla, big news here, preparing to roll out full self-driving in Europe and in China in the first quarter of 2025. This is what was posted on X. CEO Elon Musk saying this rollout is dependent upon regulatory approval. First half of 2024, about half of Tesla's revenue came from outside the United States, with China making up about.
All right, so a little bit of profit taking.
Tesla also announced several updates to technology software for North American drivers, where it costs Tesla drivers $99 a month to operate. HP Enterprises, those shares are falling despite quarterly.
Okay, Tesla looking for a pop to the upside. Okay, momentum is bullish.
Well short of the estimates, in part due to the higher mix of AI servers. HP shares are down more than 20% since hitting 52 times in June. Raised guidance from JetBlue is lifting the airline.
Come on, can we push a bit higher? We got a flat VWAP, so wouldn't be surprising to see prices stay right around this area.
JetBlue also pointed to disruptions at other carriers as one of the causes of
Volume looks good the past 2 trading days on Tesla.
to erase some of the losses that followed a downgrade to its credit rating from Moody's and the scrap merger that it was supposed to have, you remember, with Spirit Airlines. It's up about 8.5% today at 545. Now it's time for a look at the bigger picture. Joining me right now, Russell Hackman's with us. President Hackman, welcome.
Okay, Zscaler. Zscaler, man, nice move on Zscaler, right? Yeah, Zscaler doing well.
In the last few weeks, shot up over 60 at one point. Right now, it's at 20. How do you feel about the market?
I'm a bit cautious, to be honest, coming off a pretty solid summer, right? So through the end of August, we had the S&P 500 up 19% or so. Pretty good bounce off some of the kind of early August.
Okay, this is roadblocks. Roadblocks. I'm looking for this to break out of this pattern or break down, one or the other. Similar ideas with Starbucks. Starbucks has been consolidating. Looking for a bounce in Starbucks tomorrow, hopefully. Zscaler, nice reversal. Big reversal. About to take out yesterday's high. Can we do it? Can we do it, Zscaler? Can we do it? Okay, it's trying very hard to get through this area. About 90% of today's volume trading right in this area.
Uncertainty around the election, weaker employment data that I know you all have been talking about.
That was earlier. We got up to that level
Some pause.
around 1 o'clock. We ran up on volume.
Hey, let's protect some of those gains that we had.
Yeah, understood. So trying to protect that principal, you want to take some money off the table too, where you had some gains. Understand. And you have
Okay, so you're looking at PayPal. PayPal. All right, let's look at PayPal. PayPal.
You know, my sense is, I mean, against that, you have it almost.
The only issue I have with PayPal is MACDs are all pointing lower. Okay, histogram is fading.
If the Fed is going to be cutting rates in the year ahead, that's probably a positive for the market. Again, against that, you have, and some of the the economists that I read are saying, hey, this labor market here and some of the things occurring below the waves with respect to small business might be saying that, hey, the Fed kept rates too high for too long. It's almost the opposite of the transitory issue we had a couple of years ago. And now it's like, is the economy potentially weaker than we thought? And, that's given rise to me for some cause of concern. I think, the election news cycle is going to be with us, obviously, through November and beyond. So, again, having it be a pretty darn good year, up 18% or so. I'm not reaching for the stars and looking for the market to be up 20% by the end of the year.
Right, understood. You noted the corrections that we've seen in the past years, and you're waiting, or maybe just where is the one that could have happened this year? And if there were to be, let's say, a 10% correction, which actually defines a correction, would you be buying then?
Yeah, I think that would give me some confidence that you can move a little more money into the market. It is nice to see that sort of the hot air, if you want to call it that, has come out of the AI trade. That's good. That was a little 2000.
Yeah, that's the MACD on PayPal.
21-ish kind of feeling in terms of just kind of frenzy of buying stocks. So it's nice to see that that's come out of things. So yeah, if you did see a 10% plus
Tesla trying to go. Tesla's trying to go.
Again, the uncertainty around tax policy and where that's going to be headed over the coming years.
Tesla, come on, Tesla, you can do this.
That's a big one. Tax rates have been, at least for me,
PayPal. Okay, Zscaler. Zscaler is trying to push above yesterday's high.
Political figures out there are talking more about raising taxes. That's not a positive for the market. So until we get a little bit of, let's say, lower prices, I'm not super optimistic.
So at this point now, you're telling folks obviously to take some of the profits, right? And I understand that, but you don't want to sit in all cash, right? So where do you see a good approach? What's the investment strategy, near term and long term?
Well, look, now that interest rates have peaked, some of the dividend paying stocks that are really consistent, strong payers long term have been performing decently. That may be a sort of a place to
PayPal. Okay, I'm watching it. PayPal.
I know you guys talk about different kinds of ETFs out there. There's different kinds of ETFs out there that have some embedded market protection in them while allowing for some appreciation over the coming year or two. So we like those kinds of strategies that are a little bit defensive. I personally am not a big fan of piling into either treasuries or corporate bonds. To me, there still is, I'm talking a little bit about out of both sides of my mouth here, but there is not a zero risk that inflation comes back, particularly with, deficit spending of about $2 trillion a year, which is almost by definition inflationary. So I'm not a super big fan of putting money into long-term bonds. And look, if you could still get 4% plus on CDs and cash here, CDs, T-bills, whatever, for a while, that's not a bad thing.
And then what about the jobs report tomorrow? How important is that, obviously, to us as investors working in the market and the Fed? right? Because their meeting is the 17th, 18th. That's one of their mandates.
Yeah.
For employment. What are your thoughts there?
I mean, I think most people look at the jobs number, think that it has a little bit of outsized importance relative to what it should. So in other words, if you're talking about an economy with well over 100 million jobs out there, and we are people employed, and you're talking about swings in the number of like 50,000 that are going to get people excited. And then, we've seen that nevertheless, they can have these huge annual revisions, which I'm sure you guys talked about. It almost seems like the trading community pays too much attention to them. I think the longer term, the question is what's going on with the labor market? Is the economy itself starting to weaken a little bit? Anecdotally, when you see some of the consumer confidence data out there, it's a bit weaker. And anecdotally, people are a little worried. So, we're kind of shifting from this, hey, we're concerned about inflation to, yeah, there's some risk. I mean, we deal in probabilities, right? There's some risk that the economy is on a path.
Come on, Tesla and Zscaler are boring me right now. I want to see this pop and just keep going. All right, the markets look like they want to go. Markets.
They are being a little more cautious, and we've heard that. We've heard that from many of the retailers that issued some cautious guidance. For example,
Okay, it's 2:10. We got plenty of time. We got an hour and 50 minutes to go.
what's the final thought and the takeaway? Is it more of a wait and see here? Because
For me, talking to our client,
I didn't even mention the election.
yeah, exactly. To me, I'm a sort of long-term oriented advisor, as opposed to some of the people trying to catch more of the day-to-day. To me, it's about having your core allocations right. If you've had some profits in terms of the market's pretty strong or very strong last year and this year, time to bring those allocations back in line. Look at the return on cash still isn't bad. I do find that if you want to call it investor sentiment, talking to people are very relaxed about risk, and that concerns me a little bit. So it's time to be a little bit defensive, I think, given what's probably going to be an event-filled fall.
Okay, I'm out of time, but if someone says to you, Russell, I really like the Mag 7, I think everybody's been talking about it at the cocktail parties. What do you say to them? Do you let them sort of dabble in that?
All right, looking for a push higher, hopefully. Tesla.
Pretty well exposed to those. I think it's here to stay. So.
Okay, Tesla looks like it's going to go right now. Tesla looks like it wants to go.
World, Meta, those companies are still doing well. So, I wouldn't be jumping to invest in them now, but, I don't think you can go wrong with the ones that have real sources of revenue, which really is all.
Russell Hackman Wealth Partners. Great to see you. Thank you so much.
Thank you very much. Great to see you. Take care. Bye-bye.
Coming up, Options Corner, Tom White is standing by. He will highlight unusual options activity from the day. I'll find real trades, how investors are booking to trade on some recent news. Ford, Starbucks, Mobileye. We'll be right back with that right here on the Watch List on Schwab Network.
Come on, Tesla. Let's do this. Let's go. Let's go, Tesla. Let's go, Tesla. Zscaler looking beautiful. Probably follows through, I would think, tomorrow. You're so quick-witted, Mondo. Sharp tongue. All right, so looking good.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Welcome in Tom White, host of Fast Market here on Schwab Network, to take a look at a few names and some of the options trades that you found. First up is Ford. It is down today. It saw 13.5% growth in those sales. Actually, the EV, the hybrids, helped to move that along. So that was some good news there. But if someone were to take a look at this stock, they would see it how it fell off a cliff, right? It went from $14 to below $10. Tell me about the trade that you found today, Tom. We're interested.
Yeah, so the stock remains under pressure. You're seeing some big gains in Tesla this week, up over 7%. But Ford releasing those quarterly numbers here, or their total vehicle sales for August, up 13.4% to 161,000 units. But you mentioned the EV space. Well, yeah, EVs grew 28.9% from the year earlier period, but they still only delivered 8,900 models in EV. This kind of goes into that theme that they recently announced where they're going to pull back on EV production. They're going to focus more on the smaller cars. They're getting rid
Okay,
of
Tesla. Let's go, Tesla. Tesla looks like it wants to do something. Zscaler just sitting here flagging. Looking flaggy. Tesla.
We're up 49.8% from year-ago levels. So that kind of tells you what's going on in the auto industry is that, hey, people are pushing back against EVs at this point after a big ramp up in 2021 and 2022, where, hey, they're fine getting the hybrids as opposed to maybe the EVs and internal combustion. That grew nearly 10% from year-ago levels, 157,000 units there in the month of August. So everybody's still buying ICE cars at this point, but we did see some bullish activity in here, maybe trying to take advantage of the pullback that we're seeing in the shares today and the 11% slide we've seen so far this year. Out in the October monthly cycle, the 11 strike calls, trader bought over 7,000 of those. Average debit of only 39 cents. There's not a lot of option premium in this name. That break even of 11.39 over the next 43 days. That's about 6% above the current share price in there, with call volume about double normal daily average volume that we've seen over the last 5 trading sessions. So yeah, despite those good numbers on paper, Nicole, this stock remains under pressure.
Yeah, I mean, I agree with you. I think that, there was this big burst and everybody had to have an EV, and anybody who really wanted one got one.
Yeah.
And, I mentioned the EV hybrid story because I think it's still a story, but to your point, they've been cutting back on production and at least you made the point about the smaller vehicles being maybe what they want. And that committee actually told General Motors too, early on, go for the hybrids.
Yeah.
But eventually maybe we'll see more EVs. I don't know. In the meantime, how about we turn our attention over to new CEO at Starbucks? You found a bullish trade. There are some believers in this name. Let's see the trade that you found, please.
Yeah, I think investors want some clarity now after that big pop after Chipotle CEO Brian Niccol coming over to Starbucks for a pretty big payday, Nicole. But if you look at his track record, whether it was when he was with Taco Bell, a resurgence in that fast food chain, and then moving over to Chipotle, where investors, since he came in 2018, over 700% in returns. So, the bar set high for him, but he's got a lot of headwinds activist investors are involved. Elliott Management, Starboard Capital, they're involved in here. And then you've got heated union talks. You know, you've got employee pay continuing to ramp up. That's kind of squeezing margins. But then you throw all that into their results from the last couple of quarters. They've seen
Okay, you're looking at Broadcom. What's going on with Broadcom, Frano? AVGO, Broadcom.
Led by North America, declined 2%. But if you look at China, that was going to be their big growth area, right, Nicole? That fell about 14% last quarter. So that competition heating up there with Luckin Coffee and some other brands. And then domestically, they've got competition from Dunkin' Donuts and Tim Hortons also. So it's going to take a while. Probably investors, after that big pop, want some clarity on what Brian Nichols is going to do moving forward because he's got a big task ahead of him. But we did see some optimism here in the option
Netflix continue. Netflix continue. Sorry. Netflix. Let's see what Netflix looks like. Netflix trying to turn. Notice the short-term histogram is getting shorter. Looking for futures to pop. Looking for futures to pop. Netflix looking good though. Netflix. Look at Netflix. Netflix. Okay, SMH. SMH. Still fading. Okay. Tesla. Tesla just sitting here. Somebody's taking profits. Looks like somebody's taking profits. See how it's going sideways in a really tight range?
Yeah, the stock did just hit an all-time low, and this is probably on the back of an initiation out of Wolf Research. They downgraded the stock to peer perform from outperform. And if you look at the results from last quarter, it was a pretty decent quarter as far as EPS and revenue until they gave guidance, Nicole, and that's where the stock got hit, and that's why it continues to move lower. If you look at some of their results, China, which is a big base of their business, 29% of its revenue, they saw a big steep fall.
Okay, Tesla. Let's see, Tesla.
Machine vision and other advanced driver assist systems for vehicles.
Tesla momentum, looking for a follow through.
On a year-over-year basis,
Tesla looking for a follow through.
$8.3 billion to $1.96 billion. They lowered that range.
Tesla still top of the list, NASDAQ 100. Tesla top of the list on the NASDAQ 100. Also the top of the list of the S&P 500, number 3 on the S&P 500, number 2 on the NASDAQ 100.
Off about 70% this year. And I think somebody expecting even worse news for this stock because we did see a put buyer out here in the January of 2025 cycle. They bought 34,000 of the 12 strike puts for an average debit of about $1.55. So that break even of $10.45 to the downside where they start profiting, that's about 19% below the current share price. It'd have to be a new fresh all-time low. But if you look at the volumes on the put side today, on this pullback in the shares of over 4%, put volume is about 24 times normal daily average volume that we've seen over the last week of trading. So yeah, big position taken here in Mobileye with expectations.
Tesla just sitting here.
That this stock's going to continue to get hit.
Yeah, and I remember the IPO when it was spun off from Intel. I think it was public prior, and then Intel took it, but I can only remember right now, which is I know for a fact how it was spun off from Intel in 2022, and the stock surged nearly 40%. It was at $48 at one point, but it was at a discount.
Okay, histogram is starting to turn up.
But now it's really at a discount.
Yeah.
Thank you.
Yeah.
We'll see. I can't even say it's a discount, but it seems like it's certainly at all-time lows. Thank you, Tom White, with the Options Corner every single day here on the watch list. In the meantime, we'll take a look at some of the biggest movers in the market today, get you that global perspective, because Jeffrey Kleintop with Charles Schwab is standing by. He will explain what he's expecting and the developments in Japan and France and why that matters to us here at home.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities.
All right, S&P, if we can get some sort of follow through, that would be awesome. But we've just been sitting here moving sideways on a 1 minute chart. I'm going to take a couple minute break. I'm not going anywhere. I'll be right here. I'm just off the mic, taking this headset off.
Anywhere on any device for free and available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So, what's for?
Listen to me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full view. Real-time example trades and full hours of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. We have a few market movers for you. We're watching shares of Roku. Those shares are higher, got an upgrade from Wells Fargo to an equal weight from an underweight. Move included a price target raise to $72 from $50. That's about a 15% upside from Wednesday's closing price. The analyst told investors that Roku channel should contribute to growth and monetization. Even with today's gains, Roku shares are still down about 25% or so on the year. Shares of Toro plunged. Company cut the fiscal year outlook. The lawn equipment maker said it is dealing with increasing caution from homeowners and lawn care dealers. The cut outlook overshadowed results that, while sure of estimates, showed a return to profitability from 1 year ago. Shares of Toro right now are only about 6% off their 52-week lows. Well, each day on Schwab Network, we take a look at one of the most highly watched products in the markets, Bitcoin. Now, I recently had the chance to speak with Anthony Scaramucci, co-founder of Skybridge Capital, about his latest crypto investments. The Mooch, as some of us call him, had some bold predictions for Bitcoin. Take a listen. All right, let's get to crypto. All crypto all the time. You talk about Bitcoin, the store value there. Once there's over 1 billion wallets, 100,000 on Bitcoin, you actually transition Skybridge over to a more crypto type of portfolio. How's that going? Is that how it's going to go now for you and your investors?
So you may or may not remember this, but you interviewed me on the 10th anniversary of Skybridge on the floor of the New York Stock Exchange. And so we're about to celebrate the 20th anniversary. We had a little bit of a typewriter business back then, and we've morphed that into a more technologically innovative business. And so we have an AI component to our business now. We have a crypto component to our business. We have a growth component. And, about a third of our assets are now in various cryptocurrencies, but most of it is in Bitcoin. And so I just see this technology as something that we're going to be using. The payment and rail system of the blockchain is something that we're going to be using. And a few years back, we took public an ETF called CRPT, which is the First Trust Skybridge Digital Innovation Portfolio. And in that are publicly traded stocks that are related to the pipes and plumbing of the blockchain and the fintech of the future. So I see this as very promising technology. And yes, a third of our assets are allocated to it.
So CRPT, the layers of that, and you believe in that. And look, I mean, there's no doubt we've seen the ETFs approved for Bitcoin and Ethereum. And so why haven't some predictions? How quickly do we get to 100,000? And where are we in 2030?
So I missized. Nicole, I missized the regulatory obstacles. I think ultimately the closeness that people like Elizabeth Warren and Gary Gensler had to Sam Bankman-Fried, their reaction formation to that was to be overly aggressive on the good actors in the crypto industry. And so they've been regulating by enforcement, and they've slowed down the process of growth. They probably delayed the Bitcoin ETF, the spot market ETF, for about a year. And so all of this stuff has been delayed. But I do believe as we get to 1 billion wallets, Bitcoin goes to $150,000 to $200,000 a coin. And remember, if you believe what I believe, or people like Michael Saylor, that this is a digital store of value, and so therefore it should trade to a market capitalization close to gold. And if gold is at $16 to $17 trillion and Bitcoin is at about $1.2 trillion, there's a lot of upside ahead for Bitcoin.
Yeah, you had the Wyoming Blockchain Symposium. It was right near Jay Powell and the Economic Symposium there in Jackson Hole. I'm curious how that went for you. Do you feel like it gave you more eyes on what you're trying to do? And it was at a good time because I felt like the BRICS, assets came out. Those digital assets that are going to be competing, really, right, from the BRIC nations. I felt like it was a good time. Was there talk about that? What was the takeaway from all of that?
Yeah, well, listen, I mean, my team came up with that idea. We planned
Looking for a higher low, Tesla.
Precursor to the Fed event. We did invite some Fed people to our event. Unfortunately, they respectfully declined, but maybe someday there'll be central bankers at a decentralized banking event like the one that we're hosting. But your point about supplement currencies or baskets of currencies that can replace the US dollar, there was some discussion about that. I think that's very unlikely. I think the dollar, and I'll say this to your viewers and listeners, if we get great stablecoin legislation here in the United States, and we're able to use things like Circle, the USDC, you will see a proliferation of digital dollars around the world. I'll just point out to people that Tether has more treasuries in its portfolio than Germany and Japan at this point. And I remind people, if we get good stablecoin legislation, the dollar will be stronger in the next century than it was in the prior century, and it won't have to worry about substitution from BRIC nations or things like that.
Yeah, and I know you said Chuck Schumer was working to try and push some ideas forward as well, right? Quickly.
Yeah, so I was on the Crypto for Harris call with Senator Gillibrand, Senator Schumer, our senators.
Zscaler is still hanging out at the high.
They get it. They're battling, by the way, the Elizabeth Warren acolytes and the Gary Genslers of the world. But they get it, and I think people like Ro Khanna get it. And I predict that we'll get some type of bipartisan positive legislation for crypto. And my message to people is I just want this to be bipartisan. I want the wrangling to stop. And I want us to directionally maintain the mantle of financial services leadership that the United States has had for 125 years. And so we need this industry in the United States.
Let's look at Broadcom.
Glad to have him on, folks. And you can head right to the Schwab Network YouTube channel, listen to his crypto thoughts, check out the full library of market overtime guests, including Susie Orman, Kathy Wood, Kevin O'Leary, and more. For that, is at 150.
All right, let's go take a look at the semiconductors.
Market overtime. Still ahead, Jeffrey Kleintop standing by. He'll give us a look at international market trends that we should be watching, including Weinstein's
Semiconductors. Taiwan semi higher on the day.
We'll be right back.
Taiwan Semiconductor.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennie.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Okay, it's 2:35 on the East Coast, 2:35. Hour and 25 minutes to go. Some stocks look like they want to keep going. Zscaler.
S&P is down about 2.5% this week. S&P right now at 55.11. The Nasdaq though is up for the first time in 3 days. That is up 32 points. The Dow and the Russell also pulling back to the tune of about 1/3%.
Align Technologies making new highs of the day. ALGN. Okay, this is Align Technologies up on the day. ALGN. Align Technology. Higher low, looking for a push higher. Tight Bollinger Bands. S&P looks like it wants to go.
Somewhat limited in terms of real significant price decay. I think at this point you're going to see what I mean as we take a step back and look at the bigger picture, longer term. I've got daily candles here now. So going from the price activity we've seen this week to the price activity we've seen since last fall. Again, trend up. A market right now that's in balance here, waiting for more information. There's a lot of uncertainty about what's going to come from the Fed this month in terms of 25, 50 basis point rate cut, but also a lot of uncertainty in terms of what we should expect tomorrow from the non-farm payrolls and market reaction too. But balancing here right now. So in many ways, a win for the bull.
Right, and so people are on edge. I think that's definitely what we're seeing in this sort of wait and see mode with stocks. You've also been watching
Align Technologies. Let's see. WBD.
And there's news there about OPEC Plus delaying that increase. Tell us more about that.
Yeah, I've got oil on my radar as well. Let me cue up the chart here.
ABCD pattern on Amazon. Comcast, ABCD pattern on Comcast. Let's see what that looks like. Comcast.
Losing some of that momentum, but take a look at crude oil. It's been coming off. Recently back down below $69. We're just above that.
Comcast.
But you can see again, really
It doesn't look that great.
As of yet. Retesting lows that we saw back
PODD.
around 67 amidst some of those demand
Insulet.
concerns. We've seen
Higher.
the dollar inch its way up ever so slightly as of recent, again off some
EPAM.
lows, but definitely crude product to watch, right? Because
Looks like it wants to break out of this squeeze.
Leading indicator in terms of the economy, and right now suggesting that we could see
Fortive, FTV.
Right. Good to see you, Ben Lichtenstein. Thank you for that.
Fortive.
It's time for a global markets perspective. For that, we
Tech, TECH, Tech.
Global investment strategist at Charles Schwab.
No.
You're here.
Domino's Pizza.
Volatility. I mean, we've talked about the yen carry trade.
Nope.
There's a lot that you can
Ulta.
Can you give me the big picture here? Because
A couple of weeks after earnings, right? Ulta's still sitting here. Baxter International.
It is a tough month traditionally for the markets in the U.S. The S&P 500 September.
Baxter continuation.
Not true though for the EFI International Index or the Emerging Market Index. Those actually, while they are down on average in September, barely a loss, and it's actually one of the more mild months for those markets. So we'll see if that plays out. So far, it is here in September. In fact, the whole third quarter is shaping up to be a really interesting one. We've seen the opposite of the second quarter in terms of relative performance of international and U.S. stocks, in terms of performance of different sectors, and even the average stock. Forecast we made at the start of this quarter was for more broad-based market leadership and for international stocks to outperform, driven by a rotation in sector performance. And that's exactly what we got, Nicole, the Q2 phenomenon where the cap-weighted indexes posted positive returns while the equal weighted indexes posted losses, meaning the average stock was down, but the index was up. It's very rare. It's only happened 5 times in the last 30 years, fueled by those mega cap AI stocks like NVIDIA and Microsoft. That's on the left side of the screen. But now we're looking at Q3 and this rotation out of those high flying stocks and the solid gains by the rest of the world stock market has really helped the performance of the average stock in Q3 measured by the equal weighted version of the index. So the average stock is besting the index in this quarter, Nicole, and I think that's a healthy thing for the market.
Yeah, look, everybody was talking about the equal weighted index, and at this point now, no one knows what to do, right? Maybe they can look abroad and get some cues.
All right, Tesla's trying to go. Tesla's trying to get going here.
Yeah, so we've got a few potential surprises.
Sitting on top of VWAP. Can it run end of day? Okay, I'm going to keep an order open to go. If Tesla runs, I'm going to open a at the money call vertical on Tesla. I'll just have the order sitting here waiting. If this breaks out, could see a couple of bucks pretty quick.
A renewed commitment by Governor Ueda to continue to hike rates. I know after we had that big upset in the market about a month ago when you saw this yen carry trade rapidly unwind, and the Bank of Japan governor said, well, we're not going to continue to hike rates if the market's very unstable. But stability has returned, and I think we're going to hear him come right back to the table and remind the market that they still are on a path for raising interest rates. So that risks another shock that we saw in August. Though I would note that hedge funds back then were short nearly 16 billion in yen. They're now long the yen. So there's not as much of a vulnerability to a short-term shock to markets. You can see it in this table here. This is looking at the Chicago Mercantile Exchange, and the number of speculators short in red or net long contracts. So now net long. So less of a risk to an abrupt shock to the markets with this meeting on the 20th. Still an important one to keep a close eye on, just given how sensitive markets are, particularly tech stocks, to the relationship between the dollar and the yen.
Yeah, well said, well said. My mother has that day circled too. That's my birthday, 20th. I will say also, what's your thoughts on international stocks versus U.S. stocks? Often you give us a picture of, for investors, where to put money to work sometimes. What's working and what's not?
Yeah, so this quarter has definitely favored international stocks, in part because of that rotation I talked about out of U.S. tech into other parts of the market. We've had a very volatile quarter, as you pointed out, the yen carry trade unwinding, geopolitical developments, the French elections. What we've seen, though, is the MSCI EAFE index of international developed stocks outperforming U.S. stocks measured by the S&P 500 since the beginning of the second quarter. And that's due to this broadening. We've seen this handful of AI-driven U.S. stocks take a little bit of a pullback, and they're not as represented in the international index. There's a little less exposure to semiconductors and AI stocks. And so you can see quarter to date, international stocks up 4%.
Okay, Tesla, looking at...
So I think this is a trend we pointed out that we thought would unfold in the second half of this year, and so far that seems to be the case.
Yeah, and what's the wild card? Do you feel like there's a wild card? We're waiting on the jobs picture tomorrow. I think if that'll certainly be key after claims that were slightly lower. ADP came in certainly under what people thought would be created for private sector jobs.
Broadcom. Yeah, Broadcom. These stocks have been really whacked on earnings, right?
As you noted, as soon as Friday. So those factors are going to come into play. We've also got, you noted the French budget issue. That's also on the 20th. Look, they've got to come to terms with essentially their own debt ceiling. We've got a debt ceiling going to be reimposed here in early next year that we're going to have to deal with. But they're dealing with it in France now. Their budget deficit is about 5.5% of GDP. It needs to be 3% by 2027. But they've got a new government, and no one there agrees on the path to get there. They have to submit a plan to the European Union on the 20th. So we'll see whether they're on a track to do that, or if some of these new parties that have come into power in the parliament in France want to blow that budget out. That could really raise some questions about fiscal stability in the Eurozone. That could blow things up a little bit there in terms of bond yields blowing out, and then maybe stocks having an effect as well. So that's another thing to keep a close eye on.
So if they have to reduce their deficit.
So I just realized why you asked me, Frano. Broadcom.
Start to think back to the financial crisis and the draconian measures that were put into place for so many of these European countries. I mean, they're all economically sensitive. You know, are we seeing the economy steady, or are we worried about things like that, like a pullback?
Yeah, that's a really smart question, right? If we're going to see fiscal cutbacks here, well, at the same time, we're seeing rate cuts. So we are seeing monetary policy helping the more fiscal austerity picture. But remember, things like defense spending and green initiative spending are all taken out of this budget to some degree. So there is going to be more spending than what's actually reflected in those numbers that they're going to present. So this isn't really the type of austerity we saw from, say, 2010 to 2020. A very different picture, one that's still on an actual basis seeing spending grow. So yes, there's more fiscal constraint that we've seen the last couple of years, but nothing the likes of which we saw in the 2010s. Very good question to ask and important to point out.
Thanks, Jeffrey. You say that to me all the time. You know, another thing I want to ask you about is your cardboard indicator. That's one of your favorites and one of mine too. We just saw FedEx miss, a modest miss on the fiscal first quarter amid some parcel weakness. And I wonder, I often use that as an economic indicator. You look at the cardboard boxes to really get a sense. The latest manufacturing print here at home, when we looked at ISM, that showed a little bit of a slowdown. Some of your thoughts there?
Yeah, there has been a little bit of a slowdown in demand for cardboard boxes and corrugated fiberboard. It's no longer in recession territory, but it's not rebounding like it was. So we seem to be stalling a little bit here in manufacturing momentum, and that's a concern, given that that's a part of the economy we really wanted to see continue to bounce back throughout this year. So definitely something to keep a close eye on, and we'll have to see whether cyclicals can outdo defensives in the fourth quarter here, given some of these weights on the manufacturing portion of the economy.
Great to see you always. Jeffrey Kleintop, looking at the global perspective for us. Thank you so much, Charles Schwab. Still ahead, we'll bring in our panel to discuss C3AI. The shares at 52-week lows. We'll get the CEO's take. I did speak with the CEO earlier today, hear what he had to say. And the panelist's perspective, the stock has been down double digits today. We'll be back.
All right, so the markets are pricing in a 7% move in Broadcom. Maybe take a trade on Broadcom. Maybe go out 15%. Let's see.
Neil, how's my favorite client?
Quick question, Carl. Can you offer me the same choices as Schwab?
Choices?
Yeah. At Schwab, I can get full-service wealth management, advice, and invest and trade on my own.
Come on, you know Carl's the only choice you need, right? Neil, tell me you know this.
Gotta run, Carl.
Have a choice in how you invest with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Remick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to the watch list. Shares of C3AI have fallen to new 52-week lows. Latest earnings raised concerns over its subscription revenue. That's despite the company meeting expectations on the top and bottom line. On Trading 360, I spoke with C3AI's CEO, Tom Siegel, about those results and why he thinks the company's earnings were great.
our loss was much less than the market expected, so there was no surprise there. The cash was more positive than the market expected. That being said, I mean, this C3 AI is the original enterprise AI company. We began in 2009. This would be before the GPU, before the Azure, before the Google Cloud, before any of this happened. We spent billions of dollars building this AI platform, and now 90 turnkey enterprise AI applications, and now 15 years later, enterprise AI is at the tip of everyone's tongue and the top of everyone's agenda. And C3 AI is extraordinarily well positioned to deliver solutions to that market demand.
And I want to take a closer look at the earnings with our panel and have this discussion. Jeff Kagan is with us, wireless and telecom industry analyst, columnist with RCR Wireless. What were some of your thoughts to his response? Because there was a knee-jerk reaction. Stock is up off the lows of the day. He said it was a great quarter, and he was very proud of the cash positive quarters they've been having and continue to have gross margin exceeded the expenses. That he said a lot of things that he was very happy with. Is that your interpretation?
Yeah, I think we have to understand that AI is a completely new.
Okay, watch Tesla here. Watch Tesla.
Yeah, it's all about aligning expectations.
Tesla.
Performance. And I don't see any big red flashing lights to worry about. I do see a realignment of expectations is in order, because over the past year or year and a half, AI stocks and AI companies have exploded onto the marketplace, and they have all done it very well. Problem is, there's a lot of different kinds of AI. There's a lot of different companies of AI, and there's a lot of slices to the pie. And C3 AI is in one of those slices of the pie. So we have to understand AI is not going away. This is not
Tesla looks like it wants to go. Tesla.
be around. It's here to stay. It's just that we have to align our expectations with the reality. I think the past year and a half, we've gone overboard. Now we're starting to
Tesla going. Tesla's starting to go.
C3 AI. You're going to see this happening with a lot of companies in the space. We just have to get the space has to mature, and it's starting to do that now. So I wouldn't take this as a big warning sign. At this point, it's good CEO, good company, good ideas. It's just in a volatile space.
It is a volatile space, without a doubt. I mean, 10% moves are not unusual after earnings season, but you never want to see your stock down 10% when you were long, right? So, David, what was your interpretation here? And the quarter, I mean, we had Tom talking about the rising revenue. They had partnerships with Microsoft and the like. I mean, he seemed so excited. Department of Defense did so many great things. And I will add, David, just hold the thought for a second. Oppenheimer outperformed $40 target. JMP, $40 target. B of A Securities, well, they have a lower target of 20. So what are your thoughts?
I think you really have to answer the question, what is the object of the game? And what are the metrics that we're using to evaluate C3 AI in particular? As a business, healthy. As a growth stock, as a growth business, just fine. As an indicator that AI isn't growing as quickly as we might want it to, no. Everything is just fine. Their challenge is, though, as a software company, they have to be able to demonstrate scalability beyond growth. So it's that bending upward rapidly of the curve that generates overnight increases in market cap, as opposed to over the years increases in market cap. So that's really what the kind of controversy is, if there is any at all. They're a healthy business. It's great. Anyone would love to own a business like this. Owning the stock, if you're really betting on a roulette wheel and trying to see who's going to rise high quickly, that's a different story.
Yeah, and it's interesting that you said that, because they say they're on the path to profitability.
Well, Tesla has to break above.
But I did ask about them being
Tesla has to break above.
And my point was, when does C3 AI become a household name? I mean, we're all talking about Palantir and some of the others, and it's so funny that you said that now, David, because I pretty much asked that same exact question. The scale of, where does C3 AI fit in? Some of your thoughts, Jeff, on the bigger picture, maybe on some of the competitors.
You look at the competitors and there's a wide variety. Not everybody is going to be taking the same path. Not every company is going to be an NVIDIA. There are companies that are going to be high profile and very fast growing companies. Other companies are going to be growing for a while and then start to taper off as the marketplace and the industry continues to morph and to change as it goes forward. Other companies are really not going to do so well at all, but you really can't find them yet because everybody is all mixed in on the AI growth wave. Everybody wants to participate. They don't want this to slip through their fingers. So this is still the very early days of AI. AI has been with us for decades in different stages, but really in the past year and a half, it has exploded onto the scene with a variety of different kinds of technologies, and a variety of different kinds of companies that are in the space. So we have to understand we cannot come up with rules that are going to last. The rules that we come up with today are only based on what we've seen so far. What we're going to see over the course of the next 6 months, the next year, the next 5 years, the next 10 years, every one of those is going to be completely different. It really depends upon the kind of company. Like I said, not every company is going to be an NVIDIA, but there are going to be plenty of companies who have a lot of growth room, who may not become the big brand names, who may not become those names that you mentioned, but they could still be very powerful, very strong names that every investor would buy.
Yeah, and look, AI is still front and center, and the growth, as you were saying, David, probably is all still there, maybe exponential. We'll have to wait and see how it evolves. And there's the layers, right? It's the development and the different types of companies related to AI. So it's only the beginning for monetization of AI. David Nicholson, Jeff Kagan, great to see you both. Thank you.
Yeah, Tesla has a lot of calls building at 240.
Thanks for being with me every day at 11 a.m. and 2 p.m. here on Schwab Network. You get that app in the app
For next week, 240.
Schwab Network app.
They're
Here, Market on Close is next.
240.
This election season, stay out of the mud
Yeah,
and
30,000
Schwab Network's
at 240.
presidential cycle.
How could this election impact your financial future?
Next week is going to be a crazy political week.
Election trades are fraught with risk. No agenda, no hysteria, just good old-fashioned analysis of what policy means for your portfolio.
Stay informed. Stay ahead. Tune in to our election coverage on Schwab Network.
The market is a multi-trillion-dollar beast. When there's profit there, you take it. That's always going through my head.
My job as a trader is to just make money.
With a history and a geography degree, how did you find your way into trading?
Trading attracts a lot of the best and brightest students because it is this enormous data set. It is incredibly competitive. And so if you really want to put yourself out there and test yourself, find out how good you are, it is very attractive.
So how are you exploiting human weaknesses?
Being lucky in trading is great, but it's not the formula for success.
You need to be able to find opportunities in the marketplace and sift through enormous, staggering amounts of data. You certainly see patterns. Context is so important. I think the best traders I've seen have insatiable intellectual curiosity. Otherwise, certain parts of your skills will become outmoded by competition or by technology.
When we look at your whole brain, we don't see any activation in these emotional or reward pathways as if you don't have an emotional reaction.
I'm not very good at sales. Turns out I am very good at trading.
I have a trading system that I've used for over 10 years now, and it's almost second nature to me.
Do you think that this is potentially a human superpower?
Welcome to Market Overtime on the Schwab Network.
Quality Focus has worked pretty much across all 11 sectors.
We deployed a fantastic array of new technology.
The companies that are doing well are almost too big to fail.
Have you set yourself up correctly?
It's controversial. The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
There's nowhere else I would want my money.
No more than 5% in any one stock, no more than 20% in any one sector. Now there's a market for every single one of these people. There's a market for you.
Market Overtime on the Schwab Network. Thanks for tuning in.
All right, we're starting to see more profit taking.
Down. Fantasy team I've got this year, and we noticed that Kelly is in a Raiders jersey. Charles Woodson. This is the only one we have in the household. Woodson, come on, let's talk.
Ravens flag.
Yeah. The husband's from Los Angeles, so are the Raiders. That's how we get to the fandom. All right, Boris Schlossberg, thank you very much for the 3-sock lunch there. Great kickoff to NFL season coming up. Go 49ers. That's all I'm saying. Thank you for being here. Closing bell starts right now.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Walker, live from Post 9 here at the New York Stock Exchange. This make or break hour begins with high anxiety over tomorrow's jobs report and what it could mean to this unsettled market. We'll ask our experts over this final stretch. Take a look at the scorecard now with 60 minutes to go. In regulation, pretty tough day throughout. I mean, mostly red, though. There's some buying in the NASDAQ as we come on with you right now. That's following a weaker than expected ADP employment report. Not always a preview of the official jobs print, but nonetheless, adding to concerns over the strength of the economy. Most sectors today have been lower throughout, though you've got a few that are positive now. Financials, industrials, healthcare under some pressure. Tech's tried to get something going. As I've said, it's been a little difficult. We'll see what this final stretch holds, though. It does take us to our talk of the tape. How much that jobs report.
Tesla, no breakout, no break above 231.
Schwab's chief investment strategist. Welcome back. It's nice to see you.
Nice to see you too, Scott. Thanks for having me.
Still a bull market, but it doesn't feel like one these last few days, does it?
Well, it's a bull market at the index level, although you did have a correction in the NASDAQ. But using the NASDAQ as an example, even at the all-time high, you had more than 40% of the stocks within the NASDAQ, or the average member maximum drawdown was 40%. Right now, it's even 18% for the S&P 500. So there's been a lot of weakness and churn and rotation under the surface. It's just masked by the cap-weighted index returns. So we've had bear market level declines, and that in turn, I think, was the setup for some of the broadening out that we've seen, and the fact that there was money that wanted to take advantage of some of that weakness under the surface. So there's a lot more to the story than just what you see at the index level.
When people ask you what's going on here, or what your view of the market is in the here and now, how are you answering that question?
Well, it depends on what you mean by the market. I think this broadening out has legs. Notwithstanding a day like today where the growth trio of sectors, consumer discretionary, communication services, and tech are doing well again, you do see a little bit of that exhaustion in that mega cap tech trade and the broadening out with equal weight trading at an all-time high. More action down the cap spectrum. What we are saying, though, to investors is you want to make sure you don't have similar concentration to what exists in the index, and you don't need to perform well. I think that's one of the biggest misperceptions out there, is that for the individual investor, the only way for them to perform well is to be in those mega cap names in size. That's more of an institutional problem that may be running a fund benchmark to these cap-weighted indexes. It's not the case for individual investors. Of the top 10 best performing stocks in the S&P, only one of them is in the Magnificent Seven. Not a single one of the 10 best performers in the NASDAQ.
Okay, watch Zscaler. Looks like it wants to go. Zscaler.
What we are saying, though, looking for those opportunities outside of that small handful.
Watch Zscaler.
You want to stay up in quality. That may seem like the ultimate statement, but there are times where you want to go down the quality spectrum, leveraging an upturn in the economy. We clearly don't think that's where we are in the cycle. So staying up in quality with profitability, return on equity, and cash flow, that's how we've been telling investors to navigate this unique market.
But let's be clear here. When you say this broadening has legs, then clearly you must think that this is a growth scare, not a growth problem.
Right now, it is a growth scare. I don't think a traditional NBER declared recession seems to be in the cards. That said, you and I have talked about on this program many times, we've had these rolling recessions going back to the early part of the pandemic where you had recessions, maybe haven't even clawed yourself out in areas like certain segments of manufacturing and housing related and some consumer oriented products. You just had the later offsetting strength on the services side. We saw some hope that manufacturing was going to pull itself out of its, using the ISM index, sub 50 readings. That was false-lived. That ticked back down again, but we still have the offsetting strength on services. So it looks like we may still have this roll-through scenario where you've got that offset on services that keeps the NBER from, kind of waving the flag and saying traditional recession. But the economy is slowing here, and the labor market really holds the key is to further slowing, especially through the confidence channels into the consumption side of the economy. I think that the holdup in consumption is not about savings or the savings rate. Excess saving is largely worn down. The savings rate is under 3% right now. It's that confidence in the labor market. If we see more than just the cracks we've started to see, I think that could feed itself into weakness on the consumption side of the economy, which has been hanging in there.
But if your sector rankings have financials, energy, and materials at the very top, that would suggest to me that you think this too shall pass and that we'll get through whatever, lumpy period we have in the labor market and we'll come out on the other side positively, in part because the Fed is bringing rates down.
Yeah, that's exactly it. It does not assume a recession in the near term, and it is also based on easier Fed policy to come, that more cyclical interest rate sensitive bias. And that's been, to a large degree, where leadership has been since the Fed started telegraphing the shift to easier monetary.
Okay, Z-scaler, no breakout.
Basis point camp, not the 50 basis point camp. And quite frankly, be careful what you wish for if you're hoping for a more aggressive Fed, because it probably means they're combating much more serious weakness in the economy, which would suggest more defensive leadership, not the kind of cyclical interest rate sensitive leadership that's embedded in our current sector recommendations. But I would also say we are still have more of an emphasis on factor leadership than we do on sector leadership. I think that's where there has been and will continue to be more consistency in terms of leadership.
Yeah, forgive me for jumping in there. You suggest that equity investors should hope the Fed is eyeing the escalator, not the elevator. 25 better than 50. 50 would signal something maybe is up, something's wrong.
If you look at the history of shifts from pause mode to cutting mode, there's a lot of different scenarios in terms of how the market behaved, but one clear distinction is fast cutting cycles versus slow cutting cycles. So, fast cutting elevator down, they're dramatically or rapidly cutting interest rates, ostensibly because they're combating a recession or a financial crisis or some combination thereof, versus slower cycles where it's more escalator down. The big differential between those two different cycles is the average maximum drawdown within the first year after the initial cuts. It's about twice as much of a maximum drawdown in those fast cutting cycles as it is relative to those slow cutting cycles. Hence the reason why we think if you want to cheer for a Fed that does the opposite of what they did when they were hiking, they clearly took the elevator up, not the escalator up. And I think that at this point, they're eyeing the escalator on the way down, and I think that's better backdrop for the equity market.
But you don't think the Fed's too late? Do you worry about that they're too late already? That they should have started in July and now,
It's the ultimate counterfactual. It's the ultimate counterfactual. You could argue that real rates are high, and therefore the Fed maybe waited a little bit too long. But if they're true to their data dependency and their word around inflation getting to their target, starting to cut in July would have gone against both sides of their mandate and the emphasis on inflation getting to their target in a backdrop where you didn't see more than just some cracks in the labor market. You still had inflation running above the target, and cutting in July would have been a bit of surprise relative to what they had been telegraphing and relative to market expectations. It's not the Fed's MO, at least in this cycle, to go against embedded market expectations. So, but, could we armchair quarterback this and look back and say they, should have, could have, would have? Who knows? I don't tend to.
All right, so Zscaler backing off from the high. Tesla backing off from the afternoon high.
Well, football starts tonight, so we can armchair quarterback everything from here forward. I think we're going to do that anyway. Lizanne, let's bring in Joe Terranova now of Vertus Investment Partners and Max Kettner of HSBC Global Research. Good to have you guys with me as well. What's going on in the market, Joe?
So I think we're in a situation, and I agree with Liz, you can't quarterback what the Federal Reserve has or hasn't done. But I think we're experiencing elevated volatility because, in fact, the eye, meaning the market, is actually quicker than the hand, being the Fed. It's a very similar circumstance to April of 2022. If you remember at that point, you had Treasury yields that rallied 70 basis points during the month of April, and the S&P fell from 4,600 to 3,900. Why? Because the hand was not moving as quick as the eye. The market at that point wanted the Federal Reserve to go faster. And we had an inflation reading during that month where CPI jumped from 7.9 to 8.5. And I think the direction of the eco data today is the reasoning why the market is moving in the direction for Treasury yields that it is. It's concerned not about the data itself, but it's concerned about the direction. And the uncomfortable place I think we're going to be in is the Tony Pasquarello place, where in fact you get 25 basis points, and then you have to wait out the month of September and October till you get another 25 basis points if in fact the eco data is not good. So I don't think it makes a difference 25 or 50, but for
All right, markets are just sitting here, not making much of a move. 0-day is squeezing, but fading from the evening high.
Yeah, Max, you've been really bullish, and you haven't been shy about your views the last few times that we've been on. You wavering on that?
No, not at all. I think what we have at the moment is this kind of temporary growth scare. I wouldn't call it really sort of throwing in the towel. Look at, for example, today's ADP data. You kind of have the feeling that they're down 100K, not up 100K, right? So, yeah, we are getting these sort of headlines. Yeah, it's wavering and the labor market is showing those kind of cracks. But at the end of the day, it's still looking like slightly decelerating growth rates on the labor market side. Whereas, on the overall growth side, when we look at the higher frequency data in particular in the US, it's still looking broadly okay. So look at the Dallas Fed's weekly activity index. It's still looking broadly okay. If in fact it's been picking up in the last a couple of weeks. So still nothing really where I'd be super concerned. I would say, we were talking so much about the Fed potentially being behind the curve. I think that's part of it, that really particularly the institutional investor community is so obsessed with, I don't want to be the one who's behind the curve in calling the recession. I don't really care about the Fed. I don't care about what's happening on the macro side, but I'm just so scared about this recession. I don't want to be the one who's going to be, the last one dancing. I want to be the one who's like, you know what, I'm going to cut maybe 5% too early, but at least I'm out on time. I think that's where this obsession with the recession is coming from, that there's still this much higher sensitivity with the weaker than expected data. Whereas, let's face it, for example, the last 3 months, retail sales data in the US, pretty rock solid. And, the market's not really reacted to that. The cyclical names haven't really reacted to that. Think about the leadership that Liz was talking about year to date. We're talking most of the time about tech, about the semis, about AI. But in reality, semis are up less than 14% year to date. When you look at the S&P, what's up? What are the sectors that have gained the most? It's stuff like utilities. So clearly there's been so much pessimism now creeping into the market and into sentiment, where I would say, what we are due a bit of a cyclical bounce in terms of the leadership going from it.
Lizanne, how do you view what's been taking place in tech? Chips have been really weak. They've traded very, very poorly. Mega caps haven't done well lately either, even though you suggest that you're a believer in the broadening. Is there enough broadening to pick up the slack if you have a prolonged upset in the biggest part of the market?
I I think there is, because there's opportunities even within the growthier sectors like tech or communication services or even consumer discretionary, which is not directly tech related, that is outside those mega cap AI driven leadership. I think the fundamental shift that happened occurred somewhat subtly during second quarter earnings season when there was a lot of focus on the timing differential between the investments that have been made and will continue to need to be made in AI, the CapEx spend, and the revenue generation associated with it. And I think now we're at that time of the year as well where we're looking ahead to 2025 earnings numbers. And if you look at just the S&P overall, you're actually seeing a
Okay, market's fading. Looking for a higher low. We're touching the lower Bollinger Band now.
in 2025. If you look at, say, a group like the Magnificent Seven, you're going very much in the opposite direction, where you're in the 50% plus growth range in 2024, and you're down into the teens in 2025. So I think when we're in that season of digesting what is being said during, in this case, second quarter season, but looking ahead into calendar year 2025 to provide that plug for forward earnings, I think there has been an important shift in terms of the underlying fundamentals associated with the denominator in the forward PE.
Joe, these earnings need to hold up. There's questions from Adam Parker and others that earnings expectations and estimates are too high going forward. And as they come down, the market multiple is going to come down. That 21 times is just too expensive based on earnings expectations that may in fact be unrealistic. How do you respond to that?
I think that's correct. In fact, if you continue to see a 10-year treasury on the retreat, and it looks like it's going to push closer to 350 than it is 4% at this point, then earning estimates are too high. And I think that if there's one thing to the points that Liz is making, if there's one thing that we know, it's that investors will chase performance. And I think we came into the third quarter with so many people having an overwhelming concentration in the direction of Mag 7. I would have conversations with people where I'd say, what does your portfolio look like? And they just recite the Mag 7 and wouldn't have anything else. And they'd say, oh, those stocks are boring. I don't need the other 493. I think we're at an inflection point here. We're sounding the alarm bell. We're saying, yes, you need to have the Mag 7 in your portfolio. Carry them at market weight. I'm fine with that. But let's take a look around at the other 493, because so far in this quarter, financials are up 9%. You've got technology down 7%. Microsoft is struggling so far this quarter. Microsoft's down 9%. Alphabet's struggling, down about 14%. Amazon's down about 9%. So there are other places in the 493 that I think it's right for investors to look, and they have to lose that recency bias of just chasing the performance of the Mag 7.
But I think there are some other numbers that are relevant, not 7 or 493, but Liz Ann 60-40. How are you at Schwab thinking about 60-40, the portfolio that most people said was dead, and now that may have been greatly exaggerated, or maybe it was sleeping for a while, but it certainly seems to be awake.
Yeah, I think it is awake. I would also say that it's somewhat unrealistic to think about a classic portfolio.
Okay, they're looking for a 5% move, 6% move in Broadcom. So maybe price in a 10% move. I just, I know what happened with Zscaler. Zscaler.
We think we're still in a somewhat long-term secular backdrop.
$15. $15 up or down?
Correlated, which means bond prices and stock prices are positively correlated. That's what we've seen a shift short term, and I think that probably has legs, which is all the more reason why, number one, you might want to consider active management in addition to passive on both the equity side and fixed income side of things, but the inclusion of other uncorrelated assets to provide that diversification that you might have a more difficult time finding in just a simple 60-40 backdrop. Not to mention, cash has been in a pretty good asset class in terms of finally having come off the zero bound, and there is income and fixed income again. So I wouldn't throw out cash as an important diversifier from an asset class perspective.
Max, do we feel like at least the near-term direction of this market hinges on what happens tomorrow morning? That bad news is going to be viewed as bad news, that if you get a bad report and we start talking about 50 basis points, that's going to be viewed in a negative way?
Yeah, I agree with that. I think we're no longer in that regime where bad news is being looked at as good news. I would say 50 basis points. If we do get the Fed cutting 50 basis points sometime in the next 12 months, sometime in the next couple of meetings, that could be pretty constructive, right? That could actually be meaning, hey, look, inflation is going the right way. We're going to cut more aggressively, but we're taking disinflation as the reason. Whereas I would believe if we start with 50, I would side more with Liz on that. If we start with 50 basis points now, it is most likely really down to growth. It's most likely really because, hey, you know what? We're seeing something that you guys are not seeing, or it's really we are more concerned about the growth side of things. That's where I think the market sentiment would take that as pretty negative. So I would really, really prefer they go 25 the first one or two meetings. And then after that, maybe they go 51 meeting because they say, hey, look, inflation is down so much. We can afford to go a bit more aggressively. We can afford to really put a bit of a deeper floor on the rates. That, I think, would then be more positive, but you don't want to have it started. And I think tomorrow, absolutely, if we get a sort of roughly in-line number, slightly higher than expected, I think we're off to the races. I think it's really the cyclicals, it's the banks, it's also energy that's been beaten up. It's the materials that can really, really benefit from a bit of like a, let's say at least those imminent recession concerns being taken off the table for now.
We'll leave it there. Max, thank you. Joe, thanks to you. Of course, Liz Ann, we'll see you soon. Thanks so much for being with us today. That's Liz Ann Saunders of Schwab. Let's send it to Pippa Stevens now for a look at the biggest names moving into the close. Pippa.
Hey, Scott. Well, shares of G3 Apparel Group are on track for their best day in a year. The owner of DKNY and Karl Lagerfeld posted second quarter results that beat estimates. Though net sales were down compared to the same quarter last year, the company's CEO said despite the uncertain macroeconomic environment, he's still optimistic about the remainder of the year. G3 also announced a new
All right, I'm gonna do a Broadcom. I'm gonna do.
slipping after the company reported its gross margins declined from a year ago, but fiscal third quarter results did beat estimates. The company cited accelerating demand for AI products, and the stock is on track for its third straight day of losses.
All right, Pippa, thank you. That's Pippa Stevens. We're just getting started. Up next, CNBC unveiling its inaugural NFL valuations list. We're going to run through the big winners and losers. I mean, put losers in quotes. I mean, still the franchise still worth billions of dollars. Plus, we'll hear from LA Rams president Kevin Demoff, team ranked number 2. We're back at the New York Stock Exchange after this break.
Okay, I'm gonna do this Broadcom AVGL. I did a little bit of calculating, and I'll show you what I'm gonna do here. Broadcom. Credit. $125 credit for that.
CNBC unveiling its inaugural NFL valuations list today. Dallas Cowboys coming in at number 1, valued at $11 billion. In second place, the LA Rams. We're going to hear, by the way, from Rams president Kevin Demoff in just a moment. That team valued at $8 billion. Third place, the New England Patriots, almost 8, 7.9. It's bringing the man behind the valuations list, CNBC senior sports reporter Mike Rosani. Welcome. It's good to have you here.
Great to be here, Scott.
You are known as the guru of all of this. Well, what factored into your rankings?
Sports teams, NFL teams included, Scott, are sold on multiples of revenue. So when you're trying to determine the value of an NFL team, look at the Commanders. They sold for 11 times revenue. Prior to that, the Denver Broncos sold for about 9 times revenue. So you're always looking at revenue comps.
Any surprises?
What I'm really surprised about, number one, is how far ahead of every other team the Dallas Cowboys are in sponsorship revenue and in local revenue generated at the stadium. For example, the Cowboys this year are pushing $250 million in stadium sponsorship revenue. No other team has hit $200 million yet.
All right, so stadiums count for a lot. In fact, you say that non-NFL events like the Taylor Swift concert, for example, factors in to all of this. But how do we think of that? And a lot of those are one-off events. So how do you think about that over the longer term when you're coming up with your valuations?
That's a great question, because when you look at this, what sports bankers will say is local revenue, stadium revenue, as opposed to the national TV money, which will be $350 million this year. The local money is really determined by how entrepreneurial your owner is. So you apply a lower multiple of revenue to that than you would be the national money that's split evenly every year, goes up 6, 7, 8%. Doesn't matter whether you win, lose, you're in Cincinnati, you're Dallas, everybody gets the same amount.
All right, speaking of Dallas, so how the Cowboys go from losing $1 million a month to this?
Jerry Jones is a marketing genius. He created the economic blueprint for NFL teams. What he specifically did was he became the first team, Scott, to secure big naming rights deals for a stadium. Brought in Pepsi, brought in American Express, very cleverly by Jerry. Their rivals, those rivals of those brands, were big sponsors for the NFL already, so they really wanted in.
Jerry's world, as we call it down there, has been looking pretty good for him. All right. The Chicago Bears, number 10, $6.4 billion. How much do great players like a Caleb Williams, expected to be a great player, do you have to have great players to have a great valuation?
It helps a lot, but again, a lot's determined by the ownership. So in the case of the Jets, they bring in Aaron Rodgers. He only played 4 plays last year. Hopefully he stays healthy this year. But the Jets were able to really market him, get a big boost to ticket revenue, and a big boost to sponsorships. The Bears haven't been that great at marketing the great brand of the Bears, which has a big tradition.
Let me ask you one more question before we bring in our guest. Rams, Chargers. Why are the Rams worth so much more than the Chargers in the same market?
Kroenke owns the Rams and the arena stadium, SoFi Stadium. So the Rams get about 85% of the revenue. The Chargers only get about 15%.
The Chargers are paying Kroenke some lease payments.
That's right.
That helps a lot. Mike, it's great having you here.
Great being here, Scott.
It's great to see the list, too. Mike Rosanian, again, joining us here. Now let's bring in...
Okay, Tesla looking for a bounce.
The valuations, you can go to CNBC Sport, CNBC.com/sport. Forgive me for that, but please check that out. You'll see the whole list. All right, now let's bring in Los Angeles Rams president Kevin Demoff. Rams, as we said, number 2 on our list. It's nice to see you again. Welcome.
See you again, Scott. We saw you last year in LA talking with Stan Kroenke about SoFi Stadium in Hollywood Park, and here we are a year later.
Yeah, absolutely. You guys have been doing it right. Number 2 on our list. What's your reaction?
It's great to be number 2 up on the podium. You get a silver medal, but we're closer to 32 than we are to 1. So I would say that's the work ahead of us.
Yeah. So how have you guys maximized the business around the franchise to get to this level?
All right, we've got 30 minutes to go. 30 minutes to go. I'm your host, Kazavitin, coming to you from theclosingprint.com. It's Thursday, the 5th of September, with 30 minutes left to go till a closing bell. We got Broadcom earnings. If you're interested, I took a trade on Broadcom, placed it in the spreads channel.
In the heart of Los Angeles, it was about bringing the world's best sports events to SoFi Stadium in Los Angeles. Not just NFL football, but Super Bowl, World Cup, We're fortunate to host the opening ceremonies and swimming in the 2028 Olympics. And six nights of Taylor Swift doesn't hurt.
Well, help us understand that a little bit better. I think most people, when they talk about NFL football valuations, they only think about the action that actually takes place on the football field. But it's the ability to book many lucrative non-football events that actually puts you towards the top of this list.
Well, I'll give you a great example, and someone who's a frequent guest on CBC, Anthony Noto is the SoFi CEO, right? Taylor Swift shot her movie about the tour at SoFi Stadium over 3 nights.
Zscaler hanging on to the highs of the day, which is really nice.
SoFi pays us a significant amount for naming rights. When you look at our partners, they're not just paying for 10 Rams games and 10 Chargers games. They're looking for those extra 25, 30 events a year. Our suite holders, we have 270 suites at SoFi Stadium. It's the second largest amount in the NFL. Those people are looking for revenue in events outside of NFL football to entertain their clients. They know they're getting the NFL. They know they're going to get great games for the two teams. What they're looking for is that little bit extra to put them over the top. And that's where we can really turn that into a revenue generating machine, hopefully to go catch the Cowboys.
Well, I think what's interesting too is that you and Mr. Kroenke are both thinking globally as well. The marketing rights deals that you have in many international markets, including Australia, New Zealand, China, Japan, South Korea, and Mexico. Can you talk to me about the presence you have there and why that matters so much?
Well, I think it matters, first and foremost for us to grow our brand, grow our game. You sit in Los Angeles, one of the largest cities in the world, one of the most multicultural cities in the world. Having the Pacific Rim in Mexico as part of your marketing rights is just about marketing locally to the many diverse fans we have here in Los Angeles. But as you think about Kroenke Sports Entertainment globally, our 5 teams.
Okay, Broadcom. Let me just check something I forgot to look at. Broadcom. Broadcom. Let's see. Broadcom. Let's see. Broadcom. Pretty decent volume on both calls and puts on Broadcom. Mostly on the call side, though. Most bets are on the call side.
Size and scope, but is it just that? Is it the initial stages of what you think is going to be a much bigger part of the investing landscape in NFL teams in the future?
Well, I think one of the things that Mike highlights with the NFL.
Okay, let's look at the Delta.
And you need capital to continue to grow that business in every sense of form. And whether you were just talking about the Bears and their stadium push they're looking at,
Delta.
Washington with Mike and the stadium push they're looking at. You have 15 to 20 stadiums that are probably on the horizon to be built or have major renovations. When you look at the investments in flag football, when you look at the investments of international, you have a game on Peacock tomorrow night.
175 and 140. 175 and 140. 175.
Kevin, I appreciate your time.
It's a 5 Delta.
You guys have a good season and send our
175.
I will make sure to do so. Thank you very much, Scott.
All right, we'll talk to you soon. That's Kevin Demoff.
175 is a 10 Delta on the 13 expiration. A 10 Delta, 175 and 140 is a 16 Delta. Okay.
He's back, breaking down how he's navigating the tech sector's recent weakness and where he sees valuations heading.
Yeah, VJ, we adjusted that. Look at the alerts channel. Okay. 85 cent. You probably get a better You probably get a better trade than I did. 1220. Okay. Broadcom. Okay, let me just mark this up. Broadcom. Okay, Broadcom. Zscaler, looking for the breakout. Zscaler. Zscaler, looking for a breakout. $170, $175 on the upside. And 140, 135. 140.
It's modestly higher today. Some of the mega cap tech stocks are attempting a rebound. Tesla, Nvidia, Apple leading those gains.
135.
Of the losses suffered earlier this week. Joining me now, Low Tony, Flexo Capital, CNBC contributors. Nice to see you again. Welcome back.
Hey, thanks for having me.
How are you thinking about this space? It's a little dicey to say the least.
Yeah, you know, I think we're going to see a little more choppiness. There's so much concentration, particularly in the tech sector. Some around the general excitement and exuberance.
Okay, we're fading a bit. Market's fading a bit.
The Magnificent Seven. And so the more that we see those stocks have their gyrations, that's going to dramatically impact the overall market, given the concentration there.
It's tough. Like we generally don't care so much about crazy growth, and we're willing to pay some big time multiple for that crazy growth. It seems we're having a hard time deciding what we're willing to pay for still amazing growth, but not quite as crazy as it was.
Yeah, that's right, especially for the near-term investor, those that have a shorter look, may call it 12 months or so. I think, you know, longer term, again, I always say we'll often look back on these periods and see that these were tremendous buying opportunities. We've got so much momentum, I think, to look ahead and look forward to, especially given that we're now starting to see the tangible results of those early investments into AI, both on the Magnificent Seven side and shifting their models to serve their massive customer bases, as well as the actual enterprises that are incorporating AI, moving from experimentation to actual deployment on the customer-facing side and the operations.
Do you look at these and say valuations still seem reasonable?
So, you know, I think, look, as a private market investor, when we look to the public markets for a little bit of guidance, we do see that exuberance, I think, still holding steady with the Magnificent Seven, given that those are the most obvious plays for the public investors in the AI space. And
Okay, fading a bit.
However, when we start to look a little deeper, what we see in the private markets is that we've had this massive valuation adjustment.
Okay, so this is what I'm doing on Zscaler.
With the exception of AI, especially for the pure play AI models. So, look, I think we're still going to continue to see some exuberance on the public side, but I do think it's important for investors to look beyond the Magnificent Seven and recognize that trends like AI are present in other business models as well.
Well,
Broadcom.
What is the current state of the private markets then in tech?
Yeah, so in the private markets, we continue to see an emphasis shifting towards profitability, primarily.
Okay, so let's say this does something like Zscaler did. Okay, so if Zscaler dropped off, let's show you Zscaler. Okay, here's Zscaler. Okay, Zscaler did manage a bounce today. I took a roll on this one out to next week. Same strikes, 160, 165. I did it right before the stock took off to the upside, so I probably paid more debit. I know I paid more debit than I needed to, but I have another week now for this to rally back to the highs and above these strikes, in which case I'll net more than what I paid for the debit to close the previous trade. So we're looking for this to bounce. So if it overtakes the lower strikes, that's what we'll do. If it overtakes the upper strikes, might think about exercising this and take a long. We'll see. You could take some insurance too. If you think this is going to drop more than the 140, you could buy some puts as well. I did notice that people are leaning to the long side. Most of the action is on the long side. Call wise.
Number one, the market is moving exceptionally fast. I think faster than we even thought it would move 12 months ago. A recent report by
The puts are a 15 delta. The calls are a 10 delta. 16 delta, 10 delta. At this point now, the puts are a 17 and a 10.
It speaks to defensibility. And I think in particular, when we look at a sector like healthcare for vertical AI, the benefit it has over a horizontal solution is the proprietary data. So because of the concerns around regulatory,
A lot of people are betting for big downside and big upside on the Broadcom.
to truly produce a defensible solution or a solution that has a large moat around it. So those are the types of opportunities that if I were a public market investor, I would be looking out for, what are companies like Oracle doing there? What are some of these other SaaS players doing that have existing massive customer bases that could make an acquisition of a vertical solution and immediately deploy it and have accretive cash flow?
Lo, I appreciate it as always. We'll see you soon. That's Lo Tony of Plexo Capital joining us once again. Thank you, Closing Bell. And speaking of tech, speaking of investment banks, I'm going to have an exclusive interview next Wednesday during halftime with Goldman Sachs' chairman and CEO David Solomon. It's from their Communicopia and Tech Conference. I'm very excited about that. I hope you join me then. Up next, we're tracking the biggest movers as we head into the Closing Bell. It's coming right back.
Okay, we got about 16 minutes to go. 16 minutes to go.
Here, and so we could actually see sort of narrative of Chinese
Zscaler pulling back now. Zscaler pulling back from the high.
negative narratives, negative demand.
Okay, your x-axis here, by the way, the Morgan Stanley chart with your annotations on it. If we pull it back up just to make sure we follow along with you because I think it's a really interesting point. Because it seems like a lot of the headlines have been kind of supply focused. If it's demand, then that's really important for us to think about as investors. Brent oil price on the x-axis there, and we're looking at what frequency of moves or what?
Yeah, this was over a 15-year period, and again, I sort of bastardized it by putting my commentary on it.
No,
So
that's
this isn't officially endorsed by Morgan Stanley or Bloomberg, but it's a pretty interesting. So right now, we actually happen to be right around where that y-axis is. I guess we're a little to the left of it. So that's a frequency measure in terms of the number of weeks where you were at that price or any of these different prices on the x-axis. So yeah,
so it's a comfy price basically.
Yeah, so we're at a pretty low price, and this is inflation adjusted to I think 2023 inflation. So it's actually even today after another few percent inflation versus when this was constructed.
I see. So the idea is that the higher the bar is, the more you could potentially stay at that level just based on history, kind of the amount of, I guess, equilibrium in the market that exists at that level. So then is that suggesting supply is not a major contributing factor to the volatility? Is that, am I reading that right? Is that what you're saying?
It's more that there's less likely to be incremental supply from here. So there's sort of the holdover from higher prices a couple years ago where a bunch of projects were sanctioned, a bunch more wells were drilled, but the drilling rig count in the U.S. is down substantially, I think close to 30% from its high in 2022. And similarly, internationally, some of the drilling rig stocks and services companies are trading off because there's fewer projects than I think people expected that are starting. So you can have a little bit of a supply issue here in the short term, but this tells you that we're sort of setting up for much higher prices. They say it's literally, this chart is like, the cure for low prices is low prices, and the cure for high prices is high prices.
Exactly.
That's
okay. Because when we're sitting right in the middle of that kind of like binomial there, I feel like that is then like some degree of like it's existing in peace. But I guess then we have to kind of shift more towards the somewhat of an average between the two regimes because you've got the demand destructive regime, the supply destructive regime. So we're kind of skewed too far one way.
So it's not that. Actually, the average is really, really, really unlikely and infrequent. It's more that the longer you spend in one regime, the more likely you are to end up in the other. And it's the opposite of what you think and the opposite of what you see in headlines, where the more bearish the headlines are, the more bullish the future prospects are, and vice versa. So now we've been sitting in this supply destruction territory for a little while. The headlines are getting more negative.
I see.
If you look at the futures data, it's more negative. And because of the nature of the commodity, the worse it looks, the better it gets for the future.
Gotcha. All right. So the longer you're in here, the more likely that it does kind of drift back the other way. Okay, that's fun. Hey, real quick, give us a thought on the stocks. We only got like 60 seconds here, Josh. But how this translates into the equity side, anything that makes sense with WTI at low prices?
Yeah, honestly, a similar idea. The more people hate it, the better it probably does over time, as long as it doesn't go bankrupt. So the smaller caps, the less liquid, the more off the run. You got to do your own diligence and be very careful because there's a lot of landmines there. But the valuation gap there between the small caps and the large caps is pretty extreme. And the large caps, it seems like, haven't actually priced in much of this move down in oil, whereas the small caps have sort of had an accentuated drawdown already relative to oil. So I like the small caps here, even though a little higher break evens, a little scarier to hold as oil prices fall, but also a lot more upside from valuation and a lot more upside from potential cash flow at higher oil prices.
All right. Cool. Thanks. All right, Josh. Appreciate it. Good luck here. Interesting perspective. Helps explain the supply demand dynamic. Josh Young, CEO of Bison Interest. All right. And looking also too into the small cap world for energy. Let's talk big caps. Jimmy Horn joins us for a pretty big deal. Verizon's Frontier purchase of $20 billion. Headlines started percolating yesterday. Jenny, give us the latest.
Yeah, what I think is interesting is it's a $20 billion deal, but it's about $9.6 billion in terms of its cash for Frontier Communication, which just goes to show how much debt this company was carrying with this deal. But either way, it does imply about a 44% premium to the stock's value prior to some of these headlines and rumors on September 3rd. So Verizon's acquisition would reverse their actually previous 2016 decision to sell significant assets back to Frontier. That year, they did complete the sale of their local landlines in California, Florida, and Texas for around $10.5 billion to Frontier, which included at the time around 9,400 employees.
Okay, I bought some puts just in case.
Frontier, on the other hand, did say the acquisition would help it take advantage of its dramatically expanded scale. So, per the press release, Verizon did say this
For extra insurance on Broadcom,
its network to reach about 25 million.
there's 75 cents debit.
In Washington, D.C. But a lot of these telecommunications companies recently have been bulking up their fiber optic assets to add more capacity for then data use. So this is the flow of data we're seeing as a result of hugely in part AI, but right now data speed and these fiber optics are definitely, I think, more interesting than they've been in quite some time. And Verizon has got to figure out some of its underperformance because frankly, when you look at it compared to like T-Mobile on a performance basis, it's been a difficult name to watch. So you'd think that this would be providing more upside today, but shares still down about 0.7% on the session.
Yeah, all right. Verizon basically hasn't moved since like January, so
that's this whole year. More
of the same. If you can do a $20 billion deal and your stock doesn't budge, that's kind of an implicit positive thing. So, all right. Interesting. That's going to help put Verizon maybe on like more of a growth trajectory, possibly. But it's still going to be, I think, kind of a quiet sector. It hasn't really, there's not like that much going on.
Okay, but what's amazing is that it's
T-Mobile was.
T-Mobile's like the growth story, yeah, but Verizon's still the biggest. It's still the largest U.S. carrier. So there is that.
All right. Thanks. Appreciate the developing story, Jay Horn. Coming back, big picture discussion. Going into the bell. We'll give you an update on policy side of the analysis for the economy. Be right back.
Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So all this one.
Listen to me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
All right, we've hit a lot here this afternoon. We've been talking commodities, we talked stocks, of course, the economy, and we've got another pretty big event coming up this month, which is the first debate between the new set of candidates. Kathy Jones joins me alongside Mike Townsend. Kathy's the chief fixed income strategist, and Mike's the managing director of legislative and regulatory affairs. All right, we got a debate next week. Mike, is this type of thing that could show up in markets?
I think it's huge for the race itself, whether it's going to influence the markets. I think you'll see some policy discussion around taxes and tariffs and things that the markets are interested in. But I think mostly it's an opportunity for particularly Vice President Harris to kind of introduce herself to a lot of voters who maybe don't know much about her and her positions, and to see her go head-to-head with Donald Trump for the first time. I think it'll be really interesting. I don't know that the markets are going to take a ton away, but taxes and tariffs are definitely sort of at the front of the debate right now, and I expect that to continue next week.
Yeah, we've got a little more detail, right? Because you and I a couple months ago were sort of lamenting the lack of economic discussion around this whole thing, but in the last couple weeks, we've got a few, right? A couple tidbits here on taxes.
Yeah, I mean, it's been a pretty big discussion over the last couple of weeks, whether you're talking about ending the taxation of tips or yesterday, I think pretty notable that Harris broke with the Biden plan when it comes to capital gains. she would set a lower top capital gains rate. It would still go up from where it is now, but lower than what Biden has proposed. But Oliver, when you're talking taxes and all of these kinds of issues, you got to remember that it's Congress that's going to have to figure this out. I mean, you can't do an executive order on taxes. So these are all just proposals for the campaign, for the starting point of the discussion that's going to happen next year. And next year is going to be a huge year for a tax debate because of all those expiring tax cuts from 2017. So lots of discussion to come, but it's going to take a while. It's not something that can be done overnight.
Hey, quick, Mike, what's the latest on whatever your favorite poll or calculus is?
Yeah, I'd like to look at kind of averages of polls so you don't kind of put too much weight into any one poll. And this race is tied, Oliver. You look at the 7 battleground states, all 7 of them are in toss-up categories. It's incredible. You look at some of the averages, they're like 0.3% apart, 0.1%. It's incredibly close. And I think it's going to be that way right up until November.
It's going to be a disaster. Okay. Also, speaking of coin flips, Kathy Jones, I mean, we're almost getting there for 50 basis points. I mean, above 40% bonds. Treasury bulls powered through it. Is there any end in sight to their appetite, Kathy?
Bitcoin back down to the low. Nothing to do there.
ISM services repurpose okay, but under the surface, it wasn't all that strong, particularly the employment index. So it barely bumped. It is certainly down from the peak levels we saw about a year ago. But when you look at where inflation is going, where commodity prices are telling us inflation is headed, and the slowdown we're seeing in several parts of the economy, and then the worries over the job market, it's really tough to say what the catalyst could be for higher rates. So I do think we go lower from here, but I think it's mostly short end and the belly of the curve that follows the Fed and rate cuts rather than the long end feeling it very much unless we go into recession. As for 25 or 50, I'm sticking with 25. There's no formula here. There's no algebra equation you can apply to this. It's a judgment call, right, amongst the voters of the FOMC. And from what we're hearing, there are probably several that are on board with 50, but there's also several that wouldn't be on board with 50. So I'm going to land on the side of 25, but either way, it doesn't make a whole lot of difference.
Looking at the implications of jobs tomorrow, Kathy, if we get a number in the low 100s, where do you think those odds of 50 go by the weekend?
Well, I think if it's a number that's short of expectations, because the consensus is around 160 as a rebound from last month. So if it's in the low 100s, I think the odds in the market will go up considerably. Will it change the minds of the people at the Fed? I think you'll have to look at underlying things like hours worked. So people may have held on to their jobs, but the employer is giving them fewer hours. So income goes down, that means less spending in the economy. That's usually a precursor to layoffs. So I think the underlying data may tell us more than just the payroll number. But a low number would certainly push probably a few more people into the 50 camp. But again, you're trying to read minds here. Guess what they're going to do.
Hey, speaking of reading minds, I got one for you, Mike. If you are running for president from the party that's in power right now, do you want 50 basis points? Or is that going to give your opponent an opportunity to say, look, the economy's falling apart here?
Yeah, I think it's a little of both, right? It would, probably juice things for the Democrats, and it would set up the Republicans to say the Fed is meddling in the race. So, like everything in election season, it probably cuts both ways, and it's, all in the eye of the beholder.
So many things seems like it just won't change people's minds. But try to figure it out anyway. Not that it shouldn't, right? Okay, thanks, Mike. Thanks, Kathy. Appreciate the analysis, guys. Good stuff there on bonds and policy. Two huge issues, of course. And we got 1 minute till the bell rings. We're going to come back, talk a little bit about NVIDIA's move today, as well as the rate of Broadcom. Stick around.
powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education.
All right. So let's see. Zscaler trying to push a bit higher. Zscaler, Broadcom. Watching Broadcom. Broadcom has earnings tonight. Okay, so I'll be watching that.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay. Bells will be ringing.
All right, fun little close there is the S&P is right at that 5,500. Was the pen
Okay.
magnet basically.
All right, folks. I'll be here. I'll be here.
Options block there, and so we closed to the couple points above it, 503. We'll fade in a little bit. Off the lows of the day. Nasdaq, same story. Started off pretty strong. Nasdaq traded in about 300-point range today, so it wasn't completely dead, but it was overall a muted session. Yesterday, too, generally we're dealing with ranges. We had a little bit of action in the middle of the day yesterday, but kind of like today, ended up going nowhere after Tuesday's big sell-off. But here's the thing. We did ultimately cut to a fresh low for the week today for the Russell, for the S&Ps. NASDAQ, no, that low is from yesterday, given some of the tech strength in this afternoon session. Tesla holding on. Good day for Amazon as well. So the NASDAQ lows are on Wednesday, but S&Ps.
All right, waiting for Broadcom earnings.
Generally bearish pressure continues ahead of tomorrow's all-important look at the economy. This afternoon, kind of an all-important report from Broadcom. We'll be hitting that. We'll check out DocuSign for giggles. Diane King Hall and George Tillis join me. Diane is senior markets correspondent. Same with Mr. GT. Afternoon, guys. I feel like I'm getting a laugh there for DocuSign being for giggles.
Okay, folks, that's it for me. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's the closing bell, Thursday the 5th of September. All right, so we got one more trading day left in the week. We'll see you first thing in the morning. I'll be here. I'm just going to sign off. I'll be in the trading room. Have a great evening, everyone. Take care. We'll see you tomorrow. Looking for Zscaler and for Tesla to continue higher tomorrow. Ciao.